wonderful speakers that we have for the day two. The day one was fantastic as well. We had amazing speeches from guys from Consensus, from Nasdaq, from other great places. We had speeches from practical CEOs of issuance platforms who introduced the specific problem that they encountered and get so many insights. And the marketing panel and the were fantastic as well. We do really had some connection issues many times. This is a common problem of virtual conferences, and I hope that today everything comes much more smoothly, at least for us to feel more calmly. I am grateful to everyone who joined us on Saturday and decided to spend time on learning and growing more and not simply on resting. So it's a pleasure that you're here. And welcome also everybody who is looking this translation in recording. We're going to record. Be sure that you won't miss anything if you leave us on 5 or 10 minutes. Everything is going to be fine. So guys, it's a pleasure to see you today in the second day of the Digital Asset Investment Conference. We are going to have an array of amazing speeches today as well. We're having two panels. One is dedicated to legal aspects of digital assets offering and starts less than in 10 minutes. We'll be speaking about how you should choose the right jurisdiction, about the regulation and the future of decentralized finance, about the cost of offering digital securities, and many, many other things that you should know before doing anything in the space of digital assets and digital securities. And we have practicing lawyers from different jurisdictions from all over the world. We have people from the US, from Europe, the most common jurisdiction for issuing digital securities, that will provide you with kind of a holistic view of digital assets. Because what we see in our practice is that people know only specifics that relate to their own jurisdiction and make mistakes or make the wrong choice of where they should issue an STO from. And having a discussion with lawyers from different countries will provide you with understanding of general principles of legislation and understanding of what jurisdiction eventually works best for you, or maybe you want to issue and tell them to investors from all of them. This is also possible, and this is what you will learn from this panel. Today we are also having a bit later a panel on secondary markets for digital securities. This is one of the pressing issues, and we've seen people long in the industry craving for digital, for secondary markets to emerge at last. And they have started, and we have seen Archax get regulated, Open Finance get regulated, INX doing a successful SEC-approved STO. So more and more actors are getting licenses, and the liquidity for digital securities is starting to emerge. But we're seeing many challenges, and before going into STO, you need to be able to do the right due diligence and understand whether the liquidity matters for you and are you going to expect it anywhere in the future. So this panel will provide with greater understanding of how the markets will develop, and do you want to play the STO game today or at any other days. And we have many fantastic individual speeches from guys like Felix Mago, for example, co-founder of one of the biggest cryptocurrencies, Dash. We are having the speech from Samson Willis, and crowdfunding and space economy rockstar, from another US attorney on intersection between decentralized finance and US law, which will definitely help you make a right due diligence on projects that you're going to invest in, whether they correspond to the legislation. Among other great things we are having today, we are also having an award for media, and you can still vote on who you believe is the best digital assets media and who should receive the award. Just a kind reminder that the award for today is an NFT, which contains an image generated by artificial intelligence. And as it is generated from pure randomness, it is completely unique, and there will be no one like this. And non-fungible tokens are technologies that suits best for having the something unique, a collectible value transacted on the blockchain. And I don't, I'm not sure that I've seen such kind of interplay between two cutting edge technologies before. So I assume the media that wins may get a good profit if they sell this award in a year or even closer, just from the fact of its uniqueness. And we're also replicating our workshop. Yesterday, we already did a workshop with the demo of Stobox digital securities dashboard, but we had connection problems, so there were some issues and it wasn't smooth. For this reason, we are doing the demo today, fixing the issues we had yesterday, so you to be able to fully enjoy the experience of seeing the dashboard and appreciating all the nuances. So I hope you visit the demo as well and enjoyed it. There are so many time and effort put into nuances and details, and even from this you can learn more about the aspects and nuances of offering digital securities and maybe use it for your own purposes as well. So make sure to visit the demo as well. Okay. We are waiting just a few minutes, 2 to 3 minutes, before the rest of the participants of the panel join in. Before it happens, let me please introduce the participants of the panel. They will introduce themselves, obviously, but I will just say a few words because I am also fascinated by the fantastic speakers we have today. The panel will be moderated by Yanina Petrovskaya from Liechtenstein. She is amazing from the mere fact that she actually executed STOs, several STOs in the Switzerland and Liechtenstein. So she has practical experience and knows all ins and outs and all the challenges that you can face. We also have Natalia Ulyanova from Ukraine. Natalia is ranked among world best lawyers. She is CEO of one of the top world legal companies, Una Partners, and she's speaking on the Digital Assets Investment Conference today. So I am really hyped about having such a cool person on our panel. It's like having Mark Zuckerberg or anyone like that. We are also having Steve Tandon, author of Malta National Blockchain Strategy and the Malta Blockchain and the co-author of Malta Blockchain Law. So Steve will be able to tell us from the practical and from the strategic perspective how to approach constructing the legislation, how to make sure that are counted, and how the legislation will actually develop in the future, and probably will and perhaps will shed some light on what went wrong with Malta and where was the problem of the great strategy and great laws into practice so that Malta really becomes a blockchain island. And the first speaker is Zachary Zhilyak, a practical lawyer from the United States. The US is probably one of the most complex jurisdictions to operate in, especially with digital assets. You have the Securities and Exchange Commission, you have the CTFC, you have Financial Markets Regulatory Authority and Financial Crime Enforcement Network, and all of these guys competing who is going to regulate the digital securities or digital assets even more. And Zach is a professional in the field who will help you to navigate all of these nuances if you're issuer and if you're investor. He will help you to understand whether the project you are working with actually navigates these nuances equally well. So I am really excited to have Zach on our panel. Okay, our panel should start right now, just in a minute or two. Please, I am asking all the participants of the panel to join in and write in the backstage chat if you're here, because we need you to join. Administrators, please let the participants in. Hi, hi, hi. It's a pleasure to see you.
Hello, thank you, Boris.
Yeah, hi.
How are you doing?
Thank you for organizing this, and thank you for that great introduction, too.
Thank you, Doug. You also have, I assume, an opportunity to say a few words about your background.
Well, I just wanted to say hi to Natalia. I'm sorry finally to meet you now. I've heard great things, so this is a pleasure.
Yeah, my pleasure too.
Okay, we are waiting for another two participants of the panel to join in. I'm hoping we are going to have a wonderful discussion. Please share a few words about your expectations and how do you think we're going to proceed?
So I hope that today all our participants will receive lots of information. I'm gonna talk about my projects connected with blockchain when I was partner of Deloitte. And I hope that we're gonna talk about many jurisdictions as well as Ukraine, and as one of the very, very perspective one connected with security assets.
Likewise, I'm
That's
sorry.
amazing.
I was just going to follow on from that and say the same kind of thing that I'm looking forward to. I hope all the other speakers as well. And I'm just excited about the topics today, listening to some of the ones after our first talks here. And I know that I'm in the US, and a lot of people like to avoid the US in terms of crypto because of all the complexities that Boris mentioned. But it shouldn't be that scary a jurisdiction. A lot of things are happening here in the crypto space. And I'm happy to answer questions and just talk through what we're living in over here.
I hope you can persuade people that it's not as scary as it seems.
Maybe a little still.
Yeah, administrators write me that Steve is actually also here. Probably he's having either connection issues or not turn on his camera and mic. Steve, if you hear us, there are icons below on your screen of turning on the camera and the microphone. You should also allow your browser to get access to camera and microphone to join in. And I am waiting for you to appear.
Hi guys,
please.
To join you. Hi.
Hi Nina, nice to see you.
Sorry for being a little late. Dear Boris, sorry for any interruptions if you've been talking right now. Boris, thanks a lot for the great introduction. Great to see all of you guys. I sent yesterday, let's say, some sort of preliminary agenda to discuss. Shall we move to this one?
Sounds fine.
Sounds fine to you. Okay, great. So,
okay, we are waiting only for Steve Tandon to join us.
Is Steve joining us? I hope so.
Yes, he is here, but he is probably having either connection issues or other technical issues because administrators have already let him in. And he should be here, but
okay, I see. I think that we could start with the part that is the most controversial, let's say, between regulators from Europe and the United States. We could start with discussing when a utility token is actually not really a utility, but rather a security. Hi, Steve.
Hello.
Great to have you.
Meet you again. Glad that you could join us.
Pleasure to meet all of you.
Yeah, Boris has actually made the introduction for all of us. So I suggest that we skip the introductory part and we moved already to the first question of the agenda that I sent you yesterday. And I started with the question about, let's say, in the legal terms, qualification of a security, because tokenized security is still a security or a financial instrument in most of the jurisdictions. And we started discussing the difference, how regulators see security in the US and let's say in the rest of the world, because we have seen, especially in the Russian-speaking audience, the most famous case was the Telegram story, when the so-called utility token turned out to be not really a utility. Zach, could you elaborate on that a little bit more?
Sure, thank you. So I think you said it very well when you just said that a tokenized security is still a security. There was a time a few years ago when folks in the US thought that if they just recorded ownership of these contracts on a distributed ledger, they would magically evade 80 years worth of securities laws, and not so much. The SEC, so the federal regulator, as well as state regulators in the US, determine whether something is a security based on the economic impact of the product, of the instrument, not based on just how ownership of it is recorded. So basically, the same tests, long-standing tests from decades ago that are used in the US to determine whether a traditional product, traditional instrument or contract or whatever is a security, the same thing applies to instruments recorded on the blockchain. And so you're right when you talk about the Telegram case and such. Lots of people have tried to paint their securities as utility tokens, which is to say non-security tokens. And to be clear, under US jurisdiction, utility tokens do exist. Not all tokens are security tokens. Some people are running scared and saying every token in town is a security, and it's not as bad as that. But it is also not enough just to say, I'm issuing this token and it can be used either now or theoretically for something. And so because of that one bit of utility, it is automatically not a security. Rather, we go back to, are people investing in this because they expect to make a profit because of someone else's activities, either the issuer or some third party? If so, then it's a security. So even if you are issuing something that you say, you can use this to use our system once we build it, and the system's not built yet, so we're going to use the money to build it, and it's going to become more valuable once system's live. Well, guess what? People are buying and building these not because they're going to use your system a million times, but because they're going to sell these tokens when they appreciate. That means they're securities. So there are a lot of opinions from the SEC over in the US expressing what is and is not a security. So there is much less uncertainty now than there had been. Occasionally there are proposals to change laws, but it's a pretty clear line now. Of course, there's always a gray area, but it's not as bad, not as mysterious as it was a few years ago.
Okay, great comments. I just have to point out once again that it is different from how regulators see it, let's say in Europe, because still tokens where you can purchase with a token, let's say a tree, a plant of marijuana, a bottle of wine, they're still considered to be utility tokens here. But once you start selling them to the US investors, you should be really extremely careful, I guess. Natalia, Steve, what do you think? What would be your practical advices to those who, let's say, want to wrap whatever they're offering to investors or consumers as utility tokens?
Well, maybe I go first. First of all, sorry that I missed the beginning here with the technology not being kind to me this morning. I just want to add one thing before starting, because in the banners that were promoting the event, I was described as the author of the Maltese laws. That is not accurate. I'm the author of the National Blockchain Strategy. And then, yes, I participated as an advisor in the legislative process, but I am not the author of the laws. And I should say I'm not a lawyer either. So I'm honored to be on this panel with so many lawyers. And I know I have to be careful because anything I say can be used against me.
Not this time, don't worry.
Okay, so I relax. So thank you. So I can give you like the Maltese perspective. Malta was the first country to actually enact laws in this sector, and they are extremely clear. And we have a so-called financial instruments test, whereby by exclusion, if it's not one thing or the other, excuse me, eventually it is a virtual financial asset, which would be what we know as a token. If it is anything else, either it is just a virtual token, which is what Zachary referred to before. It's like a ticket for using something, like a coupon, but it's not subject to any kind of trade or speculation. Anything else would qualify as a financial instrument, and thereby be completely subject to MiFID II and the existing European laws in the matter. So the way we have done this in Malta, I think, is an example of clarity, because we did not in any way subvert the existing laws in the matter, and just recognize that there are some fundamental structural differences by which virtual financial asset can be distinguished, and thereby be subject to these other laws that we have in Malta. One of which I want to highlight is the institution of a new kind of regulator. It's called the Malta Digital Innovation Authority, which takes care of looking into the let's say the technology aspect of these instruments. The big difference of virtual financial assets with conventional securities basically is that they are built on top of these crypto technologies, and in particular, many of them, especially those that are tokens or borderline between tokens and securities, they have the action of smart contracts implementing the promises that the seller does to the market. Those smart contracts are obviously a huge element of risk. They can fail. They are software. They have all the problems of software, and therefore the idea was that we needed to give some guarantees to the consumers that these software artifacts were actually delivering what was being promised. And the remit of this Malta Digital Innovation Authority is to provide those aspects. So I would say, if you are launching a token offering, a virtual financial assets in Malta, you would be providing quite some degree of peace of mind to the consumer, even for the crypto aspects of the instrument that is being proposed.
Okay, I see. I think that we are already moving more or less to this summary of for security, let's say, conducting security token offerings in some of the countries. But before we move to that, I just wanted to give the floor to Natalia, what to think about wrapping up whatever projects offer as utility tokens.
Yeah, hi everyone. Is my connection good? Yeah, so you know that just a few words about myself. I was, before the previous year, I was a partner of Big Four of Deloitte, and also was dealing with some blockchain services and solutions. And I want to say that it was one of the most complicated scenes, because you know, here in Ukraine, we do not still at that moment on the territory of Ukraine, there is no delimitation of tokens at the legislation level. So we have only the basic law connected with digital assets, and the difference between security and utility is highly ununderstandable. So for most clients, I would like to determine their position from the clients. We are dealing with some investment projects, and it is very difficult to clarify the difference between security and utility token. It's the most important for the investment project. Such a token takes the high rank, and the implementation of the investment project becomes more relevant. So you know that so what we have done. So we before tried to use the Howey test developed in the United States, and the possibility to determine whether the transaction is related to an upcoming of already completed investments, or if it is an acceptable zone. And nowadays I hope that we're gonna take their example of some Malta or some Switzerland legislation in order to implement it in Ukraine. So I would like to ask you, so how you solve this problem in your country?
Okay, good. Maybe I could wrap it up because well, Switzerland is not part of the EU. It has bilateral agreements with EU, but it is still part of the continental system. Legal system, let's say, countries took it more or less all from the Roman Empire and Germany, which implemented what was invented in the Roman Empire. So what Switzerland does, definitely they do see most of the utility tokens similar as in Malta, some sort of coupons which you use to purchase something, and it still works in a lot of projects. And I think there is some sort of consensus about how you qualify utility tokens in Europe, but it is still really not really fixed. It might be regulated in the future, and it will be, I guess, also by MiCA, the proposed EU legislation for the whole European Union. But till now, we could have utility tokens, which are not qualified as security, but as we have seen in Telegram case and also in other cases, some of the utility tokens which were issued in Switzerland or European countries, if they're offered to the US investors, they really can be qualified as security, and that's where projects should be really careful. Because some of them still think utility token is unregulated, we can offer it everywhere, without running a risk to be banned by the regulator. This is not true. They should be really careful about the market, the target audience where they offer it. That is, let's say, to wrap it up, my practical advice. Well, not really an advice. Sorry, we're in a panel. We're not really allowed to give any sort of legal advice, but that is just a practical solution, I would say. Well, let's move to the regulation. I will start maybe with Switzerland and Liechtenstein. On this panel, we really try to focus mainly only on security token offerings, because to try to cover in one panel all the crypto regulation with FUD, the security token offerings and the stable coins will be really too much in my opinion. So let's focus on security token offerings. In Europe, just as Steve mentioned, since Liechtenstein is a part of the European Economic Area, most of the security tokens fall under MiFID. There is nothing extremely new about it. Tokenized security is still a security. And to conduct a public offering, you can either have private placement, then you fall under exemptions of the prospectus directive. Or if you do a public offering, then you also have some sort of exemptions, like accredited investors, if you offer it in the amount starting from 100k euro, etc. There is a list of exemptions from the prospectus directive. Then, if you issue a prospectus, of course, you have the advantage of so-called passporting, which is the opportunity within the European Union. When you get your prospectus registered with one of the European countries, you are allowed to notify regulators in other countries, and then you can offer your security tokens within the entire European Union. That is the advantage of the single market for financial services. That is to wrap it up for European Union, let's say. But then, for now, there is a fragmented regulation on a national level, because some of the countries don't have any regulations. Some of the countries have clarifications by regulators or by governments, and some of the countries have already national laws. And that is the example of Liechtenstein, and then we could move to Malta and maybe mention some other countries. So Liechtenstein has been working for 3 years on the so-called Blockchain Act, Trustworthy Technology Act, where they've introduced the definition of token as token container model. Let's say it is just a digital wrap for whatever you put inside. If you put inside a security, then it is a security. There are a lot of civil law regulations within this act, and actually doesn't really touch everything related to MiFID. So that is the national regulation. What is the most important thing that they talk about? So-called dematerialized securities, uncertificated securities, and they say that security token most likely it is an uncertificated security, and the transfer of those securities can be done on a blockchain. This is the innovation both in Liechtenstein and in Switzerland, because Switzerland has been also really, really progressive on that. And I think that security tokens really fit into the already existing financial markets, both in Switzerland. It is well developed and well known in the world. So what they did, there have been, I don't know how many articles and discussions of what security token is. And the conclusion, the latest was, it is an uncertificated security most likely. And the transfer of it previously, or it still is in a Swiss law, that the transfer of uncertificated security should be done in normal way using handwritten signature. And you wouldn't do it on with tokenized security, right? So what they did and what is introduced in they call it also the Swiss Blockchain Act, but it is actually amendments of several laws, including bankruptcy law. The major innovation is that security token is uncertificated security, and the transfer can be done on the blockchain. So. Yes, I think this will bring a lot already to the existing markets, and I would be happy to hear about the current, let's say, regulations or interpretations. In Malta, Steve have already mentioned that, but maybe you could add something to this. Zach, Natalia, what would you say about regulations in your countries for security tokens?
Well, as I mentioned, in Malta, the situation I think is very simple, because if you are in the security space, you are under MiFID II. It's only the embodiment that changes. It's not a piece of paper, so to say, but it's a cryptographic signature on a blockchain that holds the rights. So from that perspective, I see that the evolution of this field in Europe will quite quickly converge to a uniform interpretation of how to regulate this. However, I'd like to reflect on, because I'm always like the visionary, reflect on the fact that in all these efforts, in all countries, even if we are like focusing on security token offering, the legislator and the regulator is not quite understanding what this technology is bringing about. What do I mean? The regulation of the primary markets is still exercised when going over to the crypto security space, is still exercised according to conventional and traditional regulatory constructs. But we are going to face, no matter how we are evolving these laws now, a matter of virus, the strength of the law, which in the crypto space, because of its nature, cannot be actually exercised and applied. So even the securities market should start, the securities regulation should start thinking about how to exploit this technology. We've had lawyers since the early 2000s with Lawrence Lessig and his ideas of code is law, which with the smart contracts, all of a sudden in 2016 with Ethereum became very, very tangible. I think that concept needs to be taken further and actually turned around. Not code is law, but law is code, meaning that the regulations and the laws should be encoded on chain, and thereby all these issues of interpretation and is it this or is it that are resolved at the source. So of course that needs a lot of legislative development, new concepts, and it also needs the development of, let's say, GovTech or RegTech to the extent that the underlying infrastructure representing the obligations to law is encoded on chain. And I have some more things to add to this, but I will reserve that to later.
Great, thank you. Natalia, Zach?
So for me, the main question just was that I was asked by many clients and many partners that was, are there any possibility somewhere worldwide, like in Liechtenstein and somewhere else, well, to deal with securities? Like many people know that some jurisdictions, their securities transactions, they involve complex procedures, but like some signing securities, transferring them to public business registers. Are there any possibility? So I wonder if there are any possibility, like in Liechtenstein or somewhere else, well, to simplify this process, like that we do have some small requirements. We could transfer securities with no regulations and just to inform business register somewhere, well, at the end of the year. So if someone could answer me this question, I would really appreciate it.
Yeah, we will talk about custody of security tokens a little bit later on. I will just give the word to Zach about, let's say, overall regulation for security token offerings, and then we move to practical issues of STOs.
Well, thank you. So when it comes to issuance, it's very much in line with what you were describing, Anna, about you can do a full-on public issuance of these security tokens. In the US, that falls under the Securities Act. And so you enter a registration statement with the SEC, have disclosures galore. So it's a costly thing, but the trade-off is then sky's the limit. Raise as much money as you want, raise money from anyone you'd like. People can sell security shortly after they buy them. Life is easy. Or you can save yourself a lot of money by falling within one of the exemptions in the SEC from the Securities Act. But you do that by accepting some kind of restriction on your raise. Either I'm not going to raise more than this many dollars, or I will only take money from rich people, accredited investors, or I will only take money from people outside the United States, or I won't advertise, or I won't do this or that. Various things, you accept restrictions and thereby buy yourself an exemption from the Securities Act. So a lot of what we do is help issuers decide which exemption they want to use. And then the security token offering can work. They just have to decide what restrictions they're going to accept. You mentioned, Daniela, about needing a signature for transfer and such. Fortunately, we've not had that kind of issue. Some kind of traditional must be signed in paper question. There are restrictions on transfers, but it's not the means through which they're transferred, but rather who is allowed to transfer them and when and with what disclosures. So that is, if you want to sell a security, as an issuer, you have to either follow the Securities Act or follow an exemption. If you're not an issuer and you're not a broker or a dealer, then you can sell things, but there's a question of whether you're acting as a broker or a dealer. Sorry, a broker or, yes, a dealer on this, and a distributor on this. And that is often determined by just how long you held the security. So there are restrictions in the US on, okay, yes, you can issue these security tokens, but then you have to force people to hold on to them for a year. Plus, we have restrictions on where these can be traded. I mean, like most other countries, we have rules for launching exchanges, and there are limited exchanges in the US that permit listing of security tokens. So that in practice makes it hard to trade these things immediately. The issuance is not really that bad if you're willing to accept one restriction or another, but then you have to convince people that they're going to like what they get given those restrictions. And you have to have some way from the technical standpoint to enforce those restrictions so you actually can fall within the exemptions.
Absolutely, absolutely. I think that exemptions that you talked about, I just wanted also to discuss a couple of examples maybe that you have seen. Are there many Reg A plus security token offerings that you have seen till now for retail investors? Because I have seen just one.
So it's a very good question. And so when we look in the US, short of full-on public issuances, we primarily talk about Reg A, Reg D, Reg S, and crowdfunding.
Mm-hmm.
So Reg D is basically limiting yourself to accredited investors. There is Rule 504 under that when it's under 5 million, but we haven't seen a lot of people use that because of the residual exposure to state regulations that makes it a pain to make those issuances. So usually if you use 506, people limit themselves to accredited investors, which now, given the anonymity of purchase and such, mean you have to have some kind of vetting of the investors at onboarding. So you might go through a platform that checks the financial situation of the investors, so you make sure as an issuer they're only selling to accredited. So that's Reg D, and if you can get that vetting, then it works. Regulation S is where you say we are selling outside the United States, and then as long as you check ISP addresses and get people's promise they're not going to resell back to the US and such, that pretty much works. You have to follow the regulations in the jurisdictions where the investors live, but often those are not as onerous as the US one. So a lot of companies do this. Say we're going to issue these securities, but only outside the United States. Crowdfunding is great, but it by definition is for small amounts, small total amount and small amount per investor. So we see that for small issuances, but nothing significant really. And even for those, the disclosure obligations are sufficiently onerous that given the small dollar amount, there's not a lot of uptake, especially on the crypto side, which leads us to exactly what you were talking about with Reg A, or as people call it, Reg A plus, because of an extension a few years back that raised the cap. And in fact, that cap is going to be raised again in a few months unless there's a change with the new administration. So right now you can raise up to 50 million. It may soon be up to 75 million. There are disclosures required in terms of audited financials and such, and significantly, unlike with Regulation D, you have to get these things approved in advance by the SEC. And that's where the tricky part comes, because it's straightforward to follow all the rules and fill out the form to get your Reg A issuance of a security token. And then you send the thing into the SEC, and people there are just reluctant to approve these. There have been Reg A issuances with non-tokens, like that is securities, ownership of which is tracked on a traditional ledger. But for distributed ledger technologies, the combination of that with the likewise novel Reg A Plus has been almost a bridge too far. I would love to see more of them, and we are working on some. We're trying to get those out there, but the SEC is slow to approve those. I would love to see many more, and I think we will see them, but you're right, it's not been a big share of the market thus far.
Okay, absolutely, absolutely. I think we tried to make this, thanks a lot for the great wrap up for the US. And I think that we really tried to make this panel a practical one for those who would like to conduct a security token offering or are already maybe involved. You're absolutely right. We have seen, I would say, not much. I mean, around maybe 10 or 15. In the US, maybe there are more. We have seen over 10, 15 in Switzerland. And we have seen also, less than 10 actually, also in Liechtenstein, and we've been involved in some of them. And the question is actually, why? What's holding up the security token market? The thing that you have already mentioned, I think, is the secular market. And we move on with the next topic. On, let's say, practical criteria for choosing a country for conducting an STO and some practical issues that you see in conducting an STO. I'll mention the first one. The issuance is not that bad. So you can do it for European investors in Europe, for US investors in the US, for Asian investors. You have really check all the legislation of all the countries where you're going to conduct the public offering. And security token is most likely a financial instrument there. But then where are you going to trade it? Where the investors can make an exit? That is an issue, I guess. The secondary market, and the second issue is Natalia mentioned the custody depository, because in most of the countries you need some sort of a central depository, or you need to use banks to do so. And in some of the countries, the banks are not really part of the crypto blockchain infrastructure. They just don't want to play together. These, in my opinion, are some of the most important issues when you conduct a security token offering. What are, in your opinion, the let's say the practical issues for conducting an STO?
As in to choose a jurisdiction, you're saying?
Yeah, within your jurisdiction. I mean, regulation is just one part of the story. What are all the practical issues that you see that projects face?
Well, okay, so the adoption of crypto is still relatively small in the US compared to some other jurisdictions. Maybe 5% of people in the US hold Bitcoin, well under that hold Ether. There are just a lot of people who haven't touched this. That said, it's an echo chamber. The people who are in crypto talk about it all the time, so they think it's everywhere. So you're limiting it. So while the US is obviously a huge economy, and you gain certain you gain a perception that your company is for real when you list in the US, because if you can make it there, you can make it anywhere, because the rules here are so onerous. They're picky about disclosures and such. So there are benefits to listing in the US, but people can, that is the number of dollars that go into investments in crypto and the number of people investing in it are perhaps lower here than in some other jurisdictions. And in the US, you mentioned regulations. I don't want to limit myself only to that, but part of the complexity in the US is that we have this federal system. And so there's this crazy quilt of different regulations in the various states. You can, with some of the exemptions for securities issuance, deal with just the federal side and hope, and then that preempts the state laws. But for some activities, not just on the issuance side, but on the trading side and whatever else, in terms of just shipping, transferring virtual currencies, transferring various digital assets, you run into state regulation of this side, which can complicate things. And I know a lot of people, a lot of companies that intentionally avoid U.S. jurisdiction because just the impression is that it's easier to be sued there. Things can go wrong. Regulators are looking to make an example of people. So even if the laws are pretty clear cut, which I think they are now, where we have much less uncertainty in the U.S. than we did before, and there's a solid rule of law, traditionally low political risk and such, or great changes. The fact that there are perhaps crackdowns coming on DeFi down the road, just like there was on security issuances and such earlier, some people say, maybe let me just not trade on that. You mentioned secondary markets. Think about how many exchanges located outside the US, when you read their terms of service, say, we accept anyone. Except, of course, the US. No US traders, please. There are lots of exchanges that steer clear of this because the way regulators say, if you are operating an exchange that invites US persons, you must do A, B, C, D, E. And they just don't want to go there, which means that US persons have limited ability to trade out of these things, which in turn decreases their willingness to buy something that they could find illiquid once they hold it.
Absolutely. Thank you for wrapping up all these practical issues in the US. Steve, what do you know about practical side of the STO in Malta? How does it work there? How many security token offerings have you seen so far?
Yeah, so this is like a double-edged sword. It's two sides of a coin here. Pardon the pun. It's not a crypto coin. It's the physical coin with two sides. Because up until now, in Malta, we've seen only one security token offering, which happened just a few weeks ago, maybe a couple of months ago. Mm-hmm. And one can look at this and conclude, oh, it's not working. Or the other conclusion is it's working too well because the bar has been set so high that not many are able to overcome that hurdle. And in fact, I think it's this second element which also explains why the Blockchain Island project, in a way, sort of capsized midway. Malta, as you know, has several reputational problems as a jurisdiction besides the cryptocurrencies and blockchain technologies. So one side effect of this situation was that the regulator, not the legislator, the regulator made it extremely hard to pass all the tests, to the point that that those companies that were attracted by the early announcements that this sector was going to be regulated in Malta, most of them actually went to other shores. So it backfired. But having said that, if you look at the laws and the regulations, they could still be considered as a role model, so to say, that could inspire, especially Europe now that it's going in this direction, to copy them. However, another point is that the legislation here has also, in view of the difficulties of companies to do their launches here, has created this new class of professional lawyers, which is known as the VFA agents, the virtual financial assets agents, which they have to pass scrutiny and exams. And the objective is to assist the companies that want to list in navigating through all these hurdles. So that is also one aspect that I think needs to be highlighted. It's not just the regulation as such, but it's also creating the new legal professionals that can master this new field. The risk otherwise is that maybe extremely expert and renowned lawyers start dealing with this field with all the knowledge they have in traditional securities legislation, but they miss like the subtler details of the connections to the crypto world. And that's where Malta has acted with the Virtual Financial Assets Act and the institution of the Virtual Financial Assets Agent.
Mm-hmm. Okay, I see. That is a really good wrap up of the practice to STOs in Malta. Natalia, would you like to add something to the practice of STOs?
So, as I have told before, we have now the relevant legislation here in Ukraine still, but we have lots of people, lots of clients who are very interested in STO. And the main question they are asking, their criteria for choosing right jurisdiction. So I hope that today's speech will be very interesting for them, because one of the most important messages how to choose jurisdictions is a difficult thing that depends on the specific case, the specific project, and there are many aspects. And clients are asking, what type of security could I choose, and what would be suitable for my business model? So are there any problems, or will I meet some problems with double taxation or the simple taxation? How would it be? Security or utility, and is it very important from where my investors come from? So, and accordingly to these questions, I would like to try to help them. Why I have asked previously the question which jurisdiction would be suitable, because one of those questions also is how could I deal with some custodian, because I do not know. Do I need to report when I sell my shares like securities in the moment of the purchase, or could I do it at the end of the year? So, and all these questions are very, very important for people who wanna deal with STO, as we do not have such legislation in Ukraine. We were trying to examine US legislation as well, like state of Wyoming, Liechtenstein legislation as well, and some other. So, and we still do not have answers for that question. So that's why I would really appreciate if we could clarify them.
Definitely. I would try to put it together maybe with the question on legal costs that was also on our agenda. So if I try to wrap it up, the most practical issues are secondary market and custody. And I think that in some countries they are covered by the national legislation, in some or guidelines by the regulators, in some they are not. And I think that in regard to the EU, MiCA will cover most of the issues because they're introducing this pilot regime for the DLT trading facilities. That's really exciting, and I think I suppose and I hope that this will be the issue for secondary markets, the solution for the secondary markets. Regarding the criteria for choosing a jurisdiction, legal cost is actually one of the criteria, because some of the countries, let's say I've heard recently that there've been one security token offering in Lithuania. Have been also, or they're doing it right now in Latvia using some of the national exemptions. But if you do it, you really should look at your target investors. I mean, if your target investors are in US, do it there. If your target investors are in Europe, do it in Liechtenstein, Malta, Latvia, Lithuania, whatever, using both MiFID and prospectus directive, either within the exemptions or do the full prospectus. In regard to Asia, just see how it is regulated there. Always start with your. I think it works for a lot of businesses like that. Always start with your consumer. And with financial instruments, especially, always start with the regulations in a target country. That is, I think, for a lawyer this is quite obvious, but for a lot of projects I discovered it's not. They're like, okay, let's go to Liechtenstein, Malta, Switzerland. They seem to be crypto friendly. Let's do it there. No, it doesn't work this way. Or I think one of the questions that I've been asked a lot, can we do security token offering in one country and sell it over the world?
Yeah, exactly.
Most likely no. Most likely no. Or if you would like to target retail investors all over the world, then definitely no. Talking about the legal costs. I think that there are countries, okay, Lithuania, Latvia, Malta, something I think comparable to Liechtenstein. Switzerland is one of the most expensive countries in general, and in regard to security token offerings especially. What kind of models I have seen till now working with lawyers is that even with larger law firms, you can still agree on, let's say, some sort of fixed fee plus percentage from STO or equity, or yeah, something like that. That they also participate in your project, and then by way of doing so, you can lower the legal costs. Yeah, that has been a solution, and also I think for the future. For now, because it is so new, there've been only few STOs in US, Europe, in other also some security token offerings in Asia, and that's why the lawyers have to do everything. Let's say, write the new prospectuses with new risk factors in regard to security tokens, and that's why it costs so much. But I think once there will be a lot of tokenization, asset tokenization platforms offering crowdfunding, security token offering opportunities to others, to other projects, all the processes will be streamlined and the cost will go down like that. I mean, right now in Switzerland or Liechtenstein, you can have from, let's say, 30, 40K up to 150 to 100K with a big four law firms. I think it will be like 10K or 20K in 5 years, I guess. I could even bet on that, but I won't.
Yeah, 20K.
So what would you think?
Yeah, so it depends on yeah, it depends on the difficulty of the project. So mostly we've checked that all this time to prepare investment agreement, all memorandums to incorporate the jurisdiction, so and so on and so forth. It will cost it will start from 20K, like something like that. But I've heard that you told that if you want to sell worldwide, you should choose a few jurisdictions, not only one.
Well, if you conduct a public offering to retail investors, most likely yes. Then you can choose different exemptions.
Yeah.
You can do private placements. Then it's okay. You can do it from one country. Let's say you can issue a security token in Switzerland and offer it within private placement in the US, but still can sell the lowest there even if you do the private placement.
Yeah, so it's also one of the things why clients are and people are a little bit afraid of doing that. So we have just a few projects worldwide of STO because of unknown field like Wild West, which jurisdiction they choose, the costs, but from the other side, if you're gonna be first, you can be Apple in STO.
Well, maybe we'll see. I think the market is getting more regulated, and in 3-5 years, it will be already divided between the major players. But we'll see. Zach,
Yeah.
Steve, what would you like to add on the practical issues of STO, on costs and criteria for choosing a jurisdiction?
Well, I think your advice at the beginning that you should start with where you think you will find your investors, and then like reason backwards for that. So if you're interested in the US investor market, because it is obviously the largest one, well, think about getting regulated there rather than in Malta. But if you want to go to Europe, then any European country is good, because as this evolves with MiCA, there will be a uniform legislation across all of Europe. In terms of cost, I think that when a uniform legislation comes about in Europe, even the differences in prices will go down. The cost of compliance, so to say, here in Malta is probably one order of magnitude larger than the amounts that you mentioned, Janina. So that explains why many just went away. It was far too expensive to get regulated here. So competition between jurisdictions, I think, will be an element of important element, a factor. Not so much in terms of interpretation of what these instruments are, because at the end of the day, there will be a convergence. Standards will be set even at the basic technology level. We have like the ISO standards and several others developing. So from that, like architectural standard interpretation of what the technology is, you build up, and eventually you will get to the legislative interpretation, which will be compatible across jurisdictions. But even so, the competition between jurisdictions, I think, will be a key factor. And for instance, the cost of compliance will be a decisive factor. And there I go back to, this was the connection I wanted to make with the notion of law is code. Those jurisdictions that will be able to first enact the implementation of law in the computer code underlying the exchanges, the instruments, the smart contracts, and everything, will definitely have a huge advantage, because basically, like all applications of automation, the cost will plunge, and therefore it will be a huge attraction factor. And this is a bit what I'm doing. You might know I'm also advising the Republic of the Marshall Islands on the adoption of the SOV, the SOV, the crypto legal tender currency, where, for instance, monetary policy is being encoded on chain rather than regulated by a central bank. So that is like one example of how this could be done. It is for the monetary policy part, but of course, the same notion could be transposed into the regulation of securities, and therefore those jurisdictions that will understand this opportunity and implement it will have a huge advantage.
Thank you, Steve. That's been a really great note also regarding the future of the regulation. I see that both Switzerland and Liechtenstein they're working, and I see some examples of the projects which already use, let's say, transform normal, especially financial market contracts to smart contracts. But I haven't seen examples till now when the central policy is already encoded. That sounds great.
That's the big one. That's the big one.
Absolutely, that's so great. Zach, what would you like to add?
Just briefly, first of all, I agree with you entirely that issuers, that is companies looking to raise money, should look to where their investors live, and then that's the natural place for them to raise money. And I want to clarify something I said earlier when I talked about the size of the U.S. market. While adoption of crypto might be low here, just the size of the market is still so large. There's plenty of opportunity to raise money in the U.S. I don't want to scare people off of raising money here. Some investors steer clear of security tokens within the U.S. because of the limited availability of secondary markets. But investing in utility tokens and other kinds of things, people are still interested in. And to the extent that the secondary market grows, I think we'll see a growth in the investor base for security tokens as well. And when you talk about standardized language, I think we're already getting there. So we try to, for Regulation D issuances for security tokens, where you're raising money from accredited investors, we'll put one of those together for like 10 or 20,000 US dollars. And for Reg A1, we're more in like the $50,000 to $75,000 range. So, that's more or less dollar-wise what we're talking about. And we see people reaching out to us about these all the time. Some of them come to us asking us to help design their tokens so they fall within a particular regulatory regime, or help to design them to meet a particular economic need. But there's plenty of activity here. Even if the numbers are still small, they're growing. And if there's one thing we've learned from 2020 is we've seen how exponential growth works. And I think we're going to continue to see that in the STO market.
Okay, great. I think there is almost time for the next panel. We have a very interesting question, but it wasn't initially on our agenda, so I believe we would not be able to really cover it regarding the tax implications. I think it is just to mention.
I think we still have 5 minutes of the discussion before the next speaker joins in. So
okay, I see. Then we could maybe jump to this question about the tax implications, because it is really important. I think that regarding the individual investors, they solve it within the taxation of let's say physical persons in the countries, how they tax securities there. And then regarding to the amount of money that you raise, it is also solved within the national legislation of the country. Some countries have stamp duties, some some can tax the money within the STO. You can have profit tax. Within Switzerland and Liechtenstein, the practical solution is that you put it aside as reserves, but then you still need to get a ruling from the local tax authorities that they agree with that, and you can pay taxes, let's say less or later, but still you need a ruling. You still need to discuss it with tax authorities. What would you like to add to the tax issues?
Yeah, Yanin, I would like just to tell that tax implications are very, very important. But when you build your scheme, you should also keep an eye on some CRS rules and FATCA rules that will also be here, and you should keep an eye on some possibility to deal with banks, because banks are very, very careful while taking on board the clients, especially individuals, because due to some CRS rules, they should invest investigate, they should make KYC of your client, they should be sure where money comes from, and when you're gonna pay them some dividends or some other money, you should also be very clear with the local taxation of these neutral persons.
That is really important that you mentioned the common reporting standard and the automatic information exchange in tax issues. That is, yeah. Zach, Steve, would you like to add something?
Well, I don't want to double down too much on the tax side because a lot has been said already, and I know we have limited time. But would you mind? I see a second question came in also. That it seems to have been directed towards something I said earlier. May I just address that, please? It seems there was a question. Someone said that based on something I said, they got the impression that just about all utility tokens would be securities, and the questioner was asking how someone could issue tokens in a way that they would not be securities. And so since I perhaps caused that problem, I was hoping I could address that. There are definitely ways you can issue tokens that are not securities. First of all, there are stable coins. I realize that won't help you to necessarily raise money, but as far as just a business model, you can do things with these. So there are tokens that you can issue, trivially stable coins, that you could avoid having be deemed securities. Also, if when you issue a token, you quickly decentralize it, so that is, you just let the world, let it be out there and say, this will be a medium of exchange for what we're going to do. We're not going to control it. We will not administer it. It is just out there, much like what happened with Bitcoin and such. This is another way to bypass security status. But in particular with relation to utility tokens, the key point there is if the ecosystem is already up and running. Under the US laws, if you have already built a system, and now you're doing sort of a round B, round C, that's a follow-on series of raises because you already built what you have, or at least to some extent. So what you have, people can use your token on day one. Then you can say, great, we will sell this, like I forget whether it was Natalia or Steve was talking about tickets to use this in the future. But even right now, people could buy this and immediately use it. If the system is already up and running, so that when people buy these tokens, they can, if they want, go and just put their coin in the vending machine and get the services out, then you're much more likely to have your token be deemed a utility token, not a security. If you are rather issuing a token, and while you say it gives access to a system, it is that you're issuing it to raise money to build that system, which is not yet in place. That's when these things that look like utility tokens eventually get deemed securities right now when the system just isn't live yet.
Great. Really great comments. But I just see that it gets more and more difficult to issue utility tokens, especially in the US, but also in Europe, which still could be considered utility tokens by the regulators. Yeah. Okay, Steve, would you like to add something to the taxation issues or to the panel in general? Because I guess it's time to sum it up.
Yeah, well, I started saying that I'm not a lawyer, and I probably should end saying that I'm not a tax advisor either. So tax issues are clearly a very important element of this whole industry. But I think it goes back to the basics. If the classification is clear, then also the taxation is clear. Problem is that the classification is not clear yet, and it seems that it might even get more convoluted. I'm thinking, just to give you an example of this field of identity of things, where the clear identity of some object, some physical element, some physical asset can be put on a blockchain and hence can be tokenized and hence can be put on a trading platform. Well, then you are clearly getting in another very gray area of, no, is it a security? Is it a commodity? Is it something else? There are examples of, for instance, pieces of art, precious piece of art that have been tokenized, and you have schemes of fractional ownership and so on and so forth. So what is it that I'm selling there? Is it the ownership of the art? Is it the right to the ownership? And all these things have different tax implications. So I think we've just seen the start of the need to clarify how all these things are interpreted, and then how the various regulations and taxation rules are applied. At the end, I go back to my message the jurisdictions that will be able to codify these things on the platforms will take out so much friction out of the system that they will have a winning proposition. It's what I call, and it's what is also known as the attraction regulations. Build regulations that are attractive for both the investors and well, consumers of your products and services.
Absolutely, absolutely. Well, guys, I think that we have to wrap it up. It was really great to have all of you on this panel on this Saturday morning, at least in the European time zone. We had a great discussion, I believe, with some practical inputs regarding how to conduct an STO, how to choose a jurisdiction, what are the regulations in the most important market. We covered mainly US and EU. Well, looking forward to the implementation of the MiCA to the secondary market for STOs to be implemented in Europe, and we'll see how it's going to develop in a couple of years. Have a great weekend.
My friends, thank you for the panel. The discussion was fantastic, and I'm sure we all learned so much. I think that you devoted your time to education and spreading knowledge, and this cross-national collaboration of lawyers, which is something we definitely need to make global issuances easier. So I thank you all again. Thank you, Steve, for sharing the non-lawyer perspective as well. We definitely need all of this as well. And have a great weekend. Also see our next speeches and workshops as well. They are going to be great. So thank you, everybody.
Thank you.
Thank you. Bye.
Thank you.
Bye.
Yeah.
Great, and I'm ready to introduce our next speaker. And she's following greatly, actually, the discussion that was previously, because we had discussion about Switzerland that didn't involve people from Switzerland to protect the jurisdiction or to provide more nuanced input. And today, at this speech, we're having Alona Yudina, who is very deeply involved into Switzerland tokenization ecosystem. She was from the beginning in the Crypto Value, top organization uniting participants of the ecosystem. She is CEO of Quantum Leap Strategy, who provides advisory services and assists companies with business development and fundraising, which is actually one of the primary applications of digital assets. So Alona can tell you in very great detail what are the aspects of working with digital assets in Switzerland and whether you should go there. Alona, it's a pleasure to see you today.
Hello. A pleasure to see you too. Pleasure to be here. It was very interesting discussion just right now. Thank you, everybody. And great to see Liechtenstein, our neighbors, and quite progressed, I can tell you, your jurisdiction. Although I think Switzerland didn't go that far. And I would like to discuss today with you what is a good idea and what kind of STOs are potentially can be successful in Switzerland. So my name is...
You need help with sharing your screen? Is everything all right?
I think we can just do it this way, because that's new program and I'm not really sure. Like we have only 15 minutes. Let's have it like that.
A computer. You can, below in your screen there is an icon of a computer. If you press it, you can share your screen.
I can share my screen. All right. That's okay. You know what? Let's keep it this way. Let's keep it simple and efficient. You know what? Actually, I think it would be great if we could have our talk together. So, because I know that Stobox is also quite strong in connection to Switzerland. So, whenever you have the questions or you would like me to elaborate some topic deeper, just come over and talk to me. That's because that's a bit new format of conference when I can't see the audience and I don't see the questions right away.
I can hear and tell you questions if anything pops up.
Yeah, you can actually even stay like that. So I at least understand with whom I'm talking, otherwise. All right. So my name is Elena Yudina. I am a managing director of Quantum Leap Strategy, Switzerland. We provide business development for emerging technologies companies, and blockchain is one of the fields we are deeply focused on. We do work with the field since the last almost 3 years already. And I can see how Switzerland not just started, as many countries started some two, three years ago, supporting the blockchain infrastructure from the legal point of view, but also progressing and approving the projects over here. We have quite significant milestones, which we will go through. So you all know, I think everybody knows that Switzerland has the regulation where we have quite strongly recognized 3 types of tokens, and payment token and security token is one of those. And when now we're talking about conducting STBU in Switzerland, there is a certain established process which will take from 6 months and more, coming from the costs which are significant from one point of view, but from another point of view, you can see that Switzerland provides the infrastructure and the community which is deeply supporting the projects. So when we are talking about conducting any projects from Switzerland, it's not playing from only the technical perspective. I would call it working from a community perspective, as we have the Crypto Valley Association, we have the Swiss Blockchain Federation. Besides, we have the authorities, the federal authorities as a FINMA, the financial authority. Plus to that, we have that's the federation. So we have cantons, and each canton has the authorities which are able to manage the local regulations, taxation, and requirements. So all together, it makes the system of conducting the offering and then doing the business quite easy, in a way of question and answers. So if something wasn't established before, you can always raise a question and get permission from any kind of sides. From one side, from another side, from the perspective of infrastructure, you can have all possible companies, and right now one of the milestones we wanted to talk about is the banks, which got extended license for the crypto assets, and now you can do all possible banking operations, including the assets like in crypto. Plus, Switzerland goes towards alternative solutions to STOs, like securities, registered securities. Sorry, and of course, so we have, when we have the financial infrastructure, when we have legal infrastructure, when we have community of the technical projects able and ready to participate, and when we have also people which are interested in being involved in the project itself and being investors. So then we are coming to the investor community, of course, which is usually one of the main focus of companies which are coming to Switzerland. And from investor perspective, we have amazing landscape of both institutional investors and private investors. And private investors, interestingly enough, is not only big, let's put it this way, big guys, it's also ordinary people. So I will tell you that among my friends of my friends, which are not in the space working, they are investing, almost everybody is investing in projects on blockchain as a side thing. So people here are quite well prepared for obtaining information and supporting the projects they really believe in. And investor community is also interested and involved. Even very traditional funds like pension funds have certain allocated amount of assets towards projects on blockchain. So they consider it as highly risky investments, of course, but give it a try, give it a chance. There are certain important, in my opinion, important speciality of working with Switzerland is a reputation. Besides the fact that Switzerland has one of the highest reputations, I think, around the world, the projects and people working over here should be also quite transparent with their purposes and motivations, as well as with the background they're coming with, because whatever is it will be known, and the country is quite small, so the communities which are communicating and intercommunicating, of course, know whom and why they are working with. Thus, those companies which are targeting the Swiss market from any perspective should understand that respect to the local culture and track record from their side is absolutely as a requirement must. What is a good idea conducting STO in Switzerland? I would say the first thing is to really mean what you say. So being able to do from here anything you want, any kind of tokens proceeding, you can. I think I've seen you. I've seen Curio Invest here as speaker as well. That's one of the Swiss projects, leading actually projects over here. Incredibly interesting and quite unique idea. So basically, you can do quite almost anything you want, but you need to how to say it, the business language. Not that's not the business, but right, not to play around. So really do what you say. If you say this is a security, be it security. If you say this is not a security, better be straight with that. What not to forget? But not to forget to keep an eye on the platforms which are developing and coming to the market, because in collaboration with them, you might find quite a big exposure and growth. If it's coming to the business development perspective and companies which are targeting the already existing Swiss companies to give an input to, you can do that easily, and I would say Switzerland is so very open to any other technologies and the initiatives coming from abroad. So it's kind of mix and play, as long as it is for the people's good. So feel free, be open with people, be open for new ideas, and yeah. And I think prepare a certain budget if you want to do the marketing from here. Yes, so I don't know if you have any questions, or if anybody has any questions.
There have been several questions to your speech. Thank you for your inputs. I think Switzerland is one of the jurisdictions which have high bar, but if you cross this bar, then you are basically guaranteed success. And could you share, please, this is a question actually from me personally, could you share, please, a few tips how to actually engage the local community? Because from what you said, I see that having strong support in Crypto Valley from local investors is one of the crucial points for success.
Yes. First thing is respect. Respect to people who are working here, respect to people who are having this infrastructure. I've seen one company coming with a conference, and they did not ask, even like from a polite way, opinion of the players in the market over here. So what happened? And it was very childish, a little bit, I think, but at the same time, it was very picturizing how it works. So what happened? The local players, they took it as offense, because they just came and said, like, we are working from here now. And when it was the time of a conference, nobody came. Nobody. So like almost nobody. Not many people. And the local guys arranged here absolutely in parallel event, and everybody was there. Nobody, not many people came.
Cool. That's so cool.
And there were many other things behind, but the lesson is here. When you come over here, first get to know the community. Even when you move to a new house in Switzerland, first thing you do, you arrange an apéro for your neighbors. So you get to know the neighbors, and then you talk about yourself and about what you do, and then you see what is the reaction. And in Switzerland, if in general in Europe, it's about like three common like introductions, or three common friends you need to have in order to gain some trust. In Switzerland, it's 7. So it's like way more than the rest of Europe. But if you come and get to know the community, explain your project, and that's what's very important, why you're doing this, and what it brings to people, everybody can make money. But what do you change? Why do you change it? Then there won't be any problem.
I like how you describe the community as caring not only about the profitable project, but ones that do have impact. That's probably possible in such rich countries as Switzerland. I also wanted to ask, as a follow-up to the previous panel we had, if from Switzerland is not in the European Union, but has bilateral agreements with the EU. So if you do your offering, your STO from Switzerland, can you raise funding from European investors as well, from EU investors, or you need some additional registrations and permissions?
I think it depends from what kind of investors you're raising funds, first of all. So if it's qualified investors, I don't think there is any, I think there is not any problem. I mean, I'm not a lawyer, and as Janina just said previously, even if I would be a lawyer, not a lawyer can give legal advices. So first thing to do is to check with a lawyer. And then it is, with qualified investors, is quite easy. With unqualified investors, and that's exactly why STOs, in my opinion, are meeting this kind of difficulties last 1.5 years, because you need to, in order to work with retail investors, you need to get certain approvals from each jurisdiction you are targeting. But I think from Switzerland it is still more manageable.
Great, thanks for your introduction. We also have a minute or two left before the next speech, and there are also a few questions in the chat still. Could you tell us more about the crypto valley in Switzerland?
First of all, it's beautiful. Yeah, no, well, Crypto Valley is an area around Zurich and Zug region, where the whole infrastructure is supporting blockchain and crypto. We have, you can pay taxation in Zug in Bitcoins. You can quite easily conduct any kind of incorporation, and you can incorporate a company in Bitcoin as well. There are lots of projects, so basically it's like a hub of blockchain-based projects of different kinds, and it's a certain like community to like everybody is a part of if you are into blockchain field. But also Crypto Valley, it's also an association where you can be official member and you get access to the member database. You can participate in the community certain political life and so on and so forth. So it is something like getting more and more organized. Let's see where it goes, how it goes, because we also have quite big hubs in Lausanne, in Geneva, besides Zurich and Zug. We have Canton of Schwyz, which is just next from Zurich, which is also getting very deep into blockchain field and has one of the lowest taxation in Switzerland. So like the whole country is developing towards opening it itself.
Yeah, it sounds like the Freemasons Club. Hard to get, but provides lots of benefit.
Yeah.
I know you're also a fundraising specialist. So could you provide us with some more insights? There is a question from the audience on fundraising for blockchain projects in Switzerland, except for approaching the community in the right way. What are additional common mistakes or tips?
Well, first thing, don't be in a hurry, because if your budget is running out and you urgently need funds, that's not going to work. People here take time to make decisions and take time to make the due diligence, and due diligence will be deep. So be ready. And if you have something to hide, it will be found. So that's the first thing. So no hurry, be stable, solid, open with everything you do, with everything you've done, and technically ready. When you have just a beautiful idea, you can raise the angel investments. And we do have quite strong angel investor community, but that's like a slightly different perspective. If you were talking about classical fundraising from rather private investors or like institutional investors, like smaller scale, then yes, and it will take, definitely it will take time. And you need to present yourself good, but how do you say? Yeah, my first and most recommendation is be really open. So if you have something where you're not strong, say it. Because if you hide it and show just your beautiful sides, it will be less trustable than if you come and say like, hey, we are ready, we have this ready, but here, this is something we're developing, and we have this and this and this project progress. We have this and this specialists working on this, and potentially we might have issues here and here, but we know about it and we are ready for that. So this approach is really like you're talking to your partners. Don't talk to people who have money. Talk to your partners who will be sharing your ideas, sharing your vision, and trusting you their money to grow your ideas. So that's a very, very important understanding to have when you are talking to people, I would say.
I love this vision. Definitely transparency and integrity are crucial if you're going to build your reputation long term. And probably the smaller is the country, the more important is your reputation. And it's harder to get out after you did or said everything wrong. That's definitely so. Aliona, I thank you for this nice overview and introduction. I think Switzerland is for certain kind of projects who are doing not their first fundraise, but one of the later ones, is probably one of the best jurisdictions to go to and to try. So, and I assume people can use your assistance as well as getting to know the local community and engaging into conversations with partners.
Yes, but you also we do work. We are focused on business development more. So we are focused on working with the projects which has already quite significant technical achievements and ready to show how the technologies are working over in other infrastructures. We are not that much focused on the fundraising for just like fundraising for fun, you know. When we see that the project is working, when the project is growing, then we can recommend it to people who trust our opinion. But that's rather like this coming. So it's coming.
So basically, if you're doing the business right, the money will come, and the investors will find you themselves.
That's also true. Yes. But we help. Our focus and like my passion is people and the ideas. So how the idea can really work and scale up the current businesses that are already operating classical models. That is something we really are involved in and focused on. And when it works, money will come. When it's just like fundraising, like give us money and let's see where it goes, that's not exactly our specialty.
That's true. Thank you for such intro. By the way, we are having the demo of our digital securities dashboard today at the workshop at approximately 3:20, 3:30 at the GMT +2. I assume it will be 2:20 at Swiss time. So I invite you to visit, as well as all our current viewers. We put quite much effort into it, and I hope you like it, and maybe some of your Swiss friends as well. So make sure to check in.
Thank you very much. It's quite interesting. I'll keep on watching other speeches as well.
That's very pleasant, because my speech is actually the next one.
I'm on time. Great. Thank you very much. Thank you for organizing, for inviting, and can't wait for the presentation.
Thank you as well for your great speech.
Thank you. Bye.
Bye. Okay, we are ready to proceed to the next speech. And we have quite an unusual situation with the next speaker is me, so no delay, no technical problems, and everything is let me yes, this connection is hello. Oh, okay. Thank you. Ini open the file from my requesting you everything backup. Can you see now better? I'll probably leave and join the conference again to improve the sound. Give me a second. Hi, can you hear me now better? Guys? Even when I'm sharing my screen? Great, that's fantastic. So I'm starting to present. First, let me to introduce myself, a few words. I am, as you probably know already, co-founder at Stobox. We are helping companies comprehensively with their fundraising campaigns, with managing their security token offering, with all the aspects from advisory and structuring the project and understanding whether you need a security token offering at all. We're doing feasibility assessment, to legal structuring, and also using the assistance of our partners such as Zach or Yanina or Natalia as well from the previous panel, with technical setup using the dashboard and smart contracts that we will be presenting later, and with marketing using many of our partners as well. Personally, about me, my main focus in Stobox and all that we're doing is actually research and analytics. So I assume I did a few, I would say a few thousand hours of research in technical nuances, legal nuances, and other, and even issued a book on this, matter. Apologies, a second. Yeah, and even issued a book on this matter with practical advices how to issue your security token offering. And in this speech, I am going to present some of the findings of our research. I'm going to present some of the findings of our research and how actually people perceive real estate tokenization. Because what we have found is that people often think about tokenization, and specifically tokenization of the real estate, in a very narrow sense. Think about tokenization as primarily the means of fundraising. However, in reality, the space of potential applications is much wider. And there are ways to get creative with how you leverage tokenization. In this speech, I am going to present you 3 creative business models and 3 creative positionings to use tokenization in the real estate industry. Because given that the market is huge and has hundreds of trillions of dollars in the size, in order to leverage this market for your advantage, what you need is many different business models that allow you to tackle to the needs of different kinds of investors. So in this speech, I'll cover 3 business models. One is the real estate as an alternative to bank deposits. The second one I call the renovation flip-flop. And the third one is the tokenized real estate marketplace. So let's get straight in to the real estate as an alternative to bank deposits. I call this section disruption they don't expect, because people often speak about alternatives to banks as in the case of cryptocurrency, in the case of central bank digital currencies, and other similar banking technologies. And real estate doesn't seem anything that can replace the banks. But actually, I would say, given the size of the industry, it can actually be disruptive if you democratize access of retail investors to real estate. The problem that you are solving with using this kind of business model and this kind of positioning is twofold. On one hand, you're solving the problem of interest rates and saving rates, which are at all-time low or almost all-time low. And in many countries, they're actually negative. So the problem that investors, and when I say investors, I actually mean all people, because we all have some kind of money, and we are all investing it. So someone is investing in cash and someone is investing in banks, but still. And the problem is that returns on bank deposits are extremely low and often lower than the inflation rates. So people are actively losing money from the mere fact of having this money and it not being put into the right place. And this problem is further amplified by the fact that investing on a professional level is complex for many people. They're not going to put their money on the stock market. They are not going to put their money into ETFs or some other complicated stuff which requires hard due diligence, which requires trading ability, etc. So they're quite limited in their options to save money the right way. And we are seeing some apps and solutions be appearing in the last years, such as Robinhood, such as Acorns, etc., that help people with saving on stock markets. But the problem of inherent volatility of stock markets still remains. And this, even on the psychological level, for many people is problematic. The problem that you face at the second side of this problem is actually the problem that real estate developers face. The problem is that getting break even in the real estate industry is becoming increasingly hard. We are seeing many articles in New York Times and mainstream media about millennials as a lost generation, about growing generational wealth gap, etc. So this, we are all facing the fact that young people and even middle-aged people find it increasingly difficult to purchase even their first real property, even small one, especially in large cities when most of the population lives, which means that getting return on the property you build by selling this property, and especially the residential property, is becoming very complicated, which means that the only way that you can get return as a developer is by rent, by getting cash flows from the property rents. And in the modern environment, getting the return even on the level of break even from this property can take decades, which is not, and if you need a decade to get a break even, probably that's not a very good business model and not very attractive from the perspective of the return on capital. But the additional problem is also time value of money, which is the fact that $1 in 50 years costs 10 cents or even less. I don't know the specific math. So the return that you get in dozens of years is basically zero, which means that this business model is barely feasible. And here you get ability to solve these two problems with one step. Because while for developers, the long time for break even, the low returns, but the low risk and low volatility of real estate is a problem, because in order to get funding, they need to maximize the return on capital and return on equity. But for investors, this is not a problem. This is a feature, because if your main goal is saving for your elderly years, then low returns that barely cover the inflation, but high stability, while they're still better than banks, is actually the solution to the problem of losing money that they are facing. That is, putting money into real estate and selling the real estate to retail investors is the solution to both of these problems. And tokenization is a solution that you need to solve it. This is done in 4 steps. The step 1 is securitization. That is, you issue, that is, you transfer the object of real estate to a separate company called special purpose vehicle and issue securities backed by this real estate. At the second stage, you tokenize this security, that you prepare all the necessary documentation for their offering, for securities being stored in the digital form, etc. At the third stage, you sell these securities as now one property can be represented with thousands or even millions of shares. You can sell this property to thousands of investors and make investing much more accessible. You can actually sell the Empire State Building to common investors, to millions of common Americans, or not only Americans, people around the world, because tokenization allows global sale. And as the first step, you still conduct management of the property, find renters, distribute cash flows to investors, and get your certain fee for managing it. One of the concerns regarding this business model is actually the liquidity. It is the fact that real estate investments are not very liquid. But the beauty of this business model, that what is a bug for other business model, for this one, is actually a feature, because you don't want your long-term savings to be liquid. Why? Because people are weak, people are compulsive, people are emotional. And if you have invested into the stock portfolio, when the stock market crashes or when it goes up, it is very likely that you will act emotionally and will buy high and sell low, which is opposite of a good principle. So liquidity allows market makers and the professional on the stock market to exploit your weakness and profit from your savings. That while if the investment is illiquid and you cannot simply exit or come in, you're just sitting and waiting. And in the long-term game, everything you need is just sit and wait. So low liquidity of real estate investments is actually a great feature that you can get, and that further solidifies this business model of real estate as an alternative to bank deposits. Now let's proceed forward. The second business model, I call it renovation flip-flop. And this one is targeted at a bit other type of investors, not on traditional guys that 35 plus who are looking for savings, but rather on younger investors and more risk-hungry investors that are looking for outsized returns to double their investment in several years, for example, which is not possible for common real estate investments. And in order to accomplish that kind of high growth, what you need is another type of business model. And actually the demand for it is appearing as well. And the demand is coming from crypto investors, actually, because currently, given that the STO market is on the stage of early growth and early adopters, these guys who previously invested in ICOs and DeFi tokens and DeFi scams, they are also an audience of your early purchasers of your tokens that you need to spread the word and get some support. And given that these investors are quite risk hungry and return hungry, this is the model that can help you reach them and provide something they may be interested in, because 3 or 5% annual yield is not something you would interest them with. How does this model work? At the first stage, the entire business model revolves around finding and renovating the distressed properties. So at the first stage, you find the distressed real estate that is sold at 60 or 80% discount. And there are such properties, and it is entirely possible to find them. What you do then is you reserve this property. That is, you sign an agreement that it won't be sold to anyone else except you. This is necessary to provide the legal protection to your future investors. What you then do after finding this property, you actually raise capital to purchase it via selling security tokens. And one of the variations of this business models is actually that you instead of finding a specific property and raising capital for it, you actually set up a real estate renovation fund who sells the tokens, and after it hires the managers and goes shopping for distressed real estate. After conducting the token sale and raising money, you purchase the distressed property and renovate it to make it revenue generating again. This is the key point in this business model. Here you actually get the increase in the value 2x or 3x, depending on the kind of real estate you have found. And then you get the redemption stage, where you sell this property and your investors get the return. And there are two forms in which you can conduct this redemption. The option number one is what they call autonomous. In this situation, you are not engaged in the redemption process. After you conduct the renovation of the property, the price of tokens or shares related to these properties has jumped in twofold, threefold. People can sell them themselves on open markets. And here you obviously face the liquidity problem. By the way, we are having a panel on secondary markets soon. So I hope guys will cover the problem of real estate liquidity as well, which was raised in our previous panels yesterday. There will be recordings of all of these speeches, so you will be able to review them. So depending on how secondary markets for digital securities are developed, the autonomous form of redemption may be more or less feasible. The second option is centralized redemption. You conduct centralized redemption by actually selling the properties, selling the tokens yourself, finding buyers for them. And here you actually face the same problem that we had in the business model number one. It is the fact that finding buyers for large property objects is highly complicated, and thus you can combine it with business model number one and tokenize and use tokenization as a way to sell the renovated properties. Therefore, you firstly find risk-hungry investors, find a distressed property, restore it, and then you sell this new renovated property that made huge returns and now starts making common lower for like 3 to 5% annual yield returns. You now resell this property to less risk-hungry, more conservative investors, and your early investors get the returns. And there obviously, you can obviously also do it in different forms. If you decided to do it not in the form of a single property, but in the form of a fund, you are selling properties from time to time and distributing the cash flows, the proceeds from the sale, to investors to redeem, to burn their tokens and reduce the total amount of outstanding tokens to represent the outstanding real estate value. So this is the second form of the disruptive real estate business model that allows you to get risk-hungry investors. The third business model, and it seems that I don't have much time left, I'll try to be fast. The third business model is targeted at doing the real estate tokenization at scale. Because if you want to attract enough, because if you want to tokenize hundreds of trillions in real estate, we need the model that would allow tokenization to be conducted on scale and to be conducted easier. Otherwise, it would take hundreds of years to tokenize all the existing real estate. And the marketplace model can serve as a facilitator of this mass tokenization. And I am pretty sure that on the tokenization market, we will have many unicorns and many companies valued at hundreds of billions of dollars. I obviously hope that Stobox will be one of these companies. But I also believe that a real estate marketplace, perhaps powered by Stobox, can also be one of these $100 billion in valuation or even $1 trillion in valuation companies in the tokenization market. So the problems that you're solving is the fact that conducting the tokenization itself is complicated. If you're an owner of the property that costs $100,000 and you should pay $30,000 only to conduct tokenization, this is not a feasible solution. And there are many properties that are not very expensive. And on top of it, even if it's a more expensive property valued at several millions, there are still problems of operational complexity, of high upfront cost. And many real estate owners, they are rich in terms of having expensive real estate, but they don't have much cash to pay upfront for tokenization, which makes it really complex. And all of these barriers are actually among reasons why the tokenization market is not still as huge as it should be and as it will be. So if we want to favor mass adoption of tokenization, we need to solve this problem of operational complexity of STO and high cost. And using this kind of marketplace is one of the solutions. So here is how this marketplace works. Please pay attention because there are very interesting nuances. The first stage is when a property owner comes and sells that he or she wants to tokenize and sell the property. You sign the reservation agreement as in the previous point, so that the property is not sold anywhere else. What you do on the second stage is token sale, and here is when the magic happens. Because what you do is, instead of making this property owner incorporate the company, issue security, set up the technology, and do marketing, everything else, you do all of this and all of these properties yourself. And what it means that you get economies of scale because you don't incorporate the company each time. You can issue many securities from the simple company. Registering these offerings becomes easier because A, you get the learning curve and you get people knowing well how to register them, and you're just doing it as a conveyor. And secondly, you get brand and recognition from regulators, which also makes this process much easier. The technology, at the technology stage, you also get economies of scale because you can do it in the form of one single marketplace instead of hundreds and thousands of investment portals. And in terms of marketing, one investor now can invest in many properties in your marketplace, and you get the brand enhancements with each property sale, which means that the total investor acquisition cost goes down and you get this economies of scale as well. This is the principal point when you get the magic and get the ability to tokenize multiple properties simultaneously. The third step, the purchase of the property, is when you proceeded with the token sale, you buy it from the business owner. And the critical point here is that the business owner has only to sign a few documents and doesn't do anything else at all. This also matters for scale, because if you want to get many people sign up with your product, you need to make using your product or your solution as easy as possible. And if you manage to simplify it the maximum way for your prospective sellers of the property, then you get as much sellers as possible. So making it simple as Google or Facebook is your way to become a trillion-dollar company in the real estate. And the step number 4 is scaling your system to reduce the fixed cost and get this break even and the economies of scale. Whew, that's it. I hope you enjoyed this speech. As a Stobox, we can support you with conducting the token sale with any kind of this model. We can help you to choose the right model and with all of the aspects of these offerings. And actually, I have told you these business models because we already encountered them. And we have clients in different jurisdictions, in Cyprus, in Ukraine, in UK, in India, who are working or thinking about real estate tokenization already. So we have definitely experience and all the aspects, technology, legal, marketing, advisory, to assist you with real estate tokenization request. So if you want to find out more, we actually publish videos with insights on tokenization once a week on Stobox YouTube channel. So please find Stobox in YouTube and subscribe to find out more insights about tokenization. You can contact me by email, Telegram, LinkedIn, any kind of social media. I'm always open to answer. And thank you for your attention. Whew. Again, I've been a speaker. Now I'm back to my role as a host. And it's time to Felix, our next speaker, well, it is the brilliant Felix Mago, co-founder of Dash Next and Dash Thailand. Dash is one of the biggest privacy-focused cryptocurrencies, and it is. And so today we're going to get insights from people who are actually able to a person who demonstrated on practice that he is able to achieve success and knows what should be done in the cryptocurrency space. So Felix, please join us, and we are ready. We have listened to me already for longer than necessary. Felix, yeah, I can see you and I can hear you well.
Perfect.
Are you going to share your screen? Do you need any assistance from my side?
I am.
Cool.
Can you see everything?
And good.
Yeah, thank you for these kind words. Very, very kind words. Boris. Thank you very much. It's a pleasure to be here, and we have spoken several times before. We, in fact, even won a prize together almost exactly 1 year ago in Malta. For us, there was the prize of the DAO Building of the Year. for you it was the asset tokenization prize. So I'm very happy and very proud that exactly 1 year later we are here again. So I'm Felix from Dash, and I'm here exactly what was announced to talk about crypto adoption, to talk about where we are in the space, and what has happened the last years, and how essentially you build a business in the crypto industry to scale and to get users and to get real world adoption, to get usage of your product. So allow me to give a little bit of an intro who I am and what our organization is. It's called Dash, standing for Digital Cash, and we are working on one of the very classic use cases in crypto, which is crypto payments. So what we want to do, we want to be the cash of the world, and we want to be accepted everywhere. And obviously we want that everybody has Dash on their wallet and is able to spend it for things they like. Our claim, be your own bank, says a lot already, especially in the current situation, where everybody is talking about DeFi, decentralized finance, cutting out the middleman, and banks having a hard time of finding new customers. So the way we operate is very much different in terms of the organization, because we are a decentralized organization. I just mentioned, actually, we are a DAO, a decentralized autonomous organization. What that means in very simple words is that we do not have any corporate hierarchy or a corporate headquarters with the CEO or everything you are used from the normal corporate world. Instead, we consist out of several teams that are scattered across the world, and teams that apply in an open system for funding, and in an open voting. This, the fund allocation is assigned. By this, we have essentially, established a whole network of decentralized teams all around the world in the last years. We are operating since 2014. Most has started with Dash Core Group in the US, and since then, it has spread out across the globe. I said I am the co-founder of some of these organizations within Dash, and specifically the ones you see here on the right, Dash Next, Dash Thailand, and Dash Philippines. So we're doing two things. We are, from the bottom up, building merchant ecosystem and driving user adoption, and from top down, creating partnerships on a rather broader level. And the fact that we are based here in Asia is amazing, because there's so many different companies. If you look to Singapore, Hong Kong, Japan, China, it's an amazing ecosystem, and these businesses definitely do not only operate locally, they operate globally. So for us, it's really about establishing global partnerships with local partners. Exactly what I just said, it's as the crypto space is still a very family-driven event. And I just, in the intro, I already said that we met last year already in Malta. So it's in crypto conferences, it's always a bit of a family happening, and that is amazing. So it's very much about, having relationships and establishing partner networks in this new industry, number one. And it's also about looking out of your own industry and creating partnerships with players, that are interesting and relevant for what you do. Obviously for us, as Dash, as we are establishing local ecosystems and local merchant network, it's important to have contacts to these merchants, to have local communities that know about Dash, know that they can spend it, and kind of promote this message. On the other side, it's everything that happens in the background that has to be brought in place before you can even start. And being a payment currency, obviously, this is a lot about exchanges and fiat gateways, because the truth is we are still very young, and many people are still skeptic about Bitcoin, or Dash, Bitcoin, any cryptocurrency, have never tried it, and fear the volatility of the assets, fear that they can lose it, and they have no insurance against it. So all these things have to be brought in place. And the way we're doing it is by building partnerships, because also obviously if you are in different markets, you would require different licenses. And as a cryptocurrency, I don't think that's the best way to go around and buy these licenses. It's a rather doable and more business-driven way to create partnerships with people, that are in the space and already have all the requirements in place. So obviously these are payment companies, gateways, payment networks, payment rails, all the exchanges in the background, and even financial institutions. In terms of use cases, I'm also very happy, to be working for a payment-focused cryptocurrency, because the truth is, payment is everywhere. There is essentially no industry that doesn't have payment, obviously, because it always happens if in real business life. So of course, if you think about we do crypto payments, the first thing you think about is anything retail. So any shops that accepting it online, offline, which a lot of things is there. I will show you some examples in a second. The travel industry has been, especially before the COVID crisis, it has been very, very interesting for us. I'm here based in Bangkok, one of the probably most visited cities in the whole world. This is why when we started here in Asia, we specifically focused on that travel industry. And also that, it's like we are all very global in the crypto industry, and I think many of us appreciate the fact that we have built these partnerships. New of that is gaming, and gaming is for me especially interesting because what we definitely want is to have young people in our community and to get the next generation always on board. And I feel if we target the gaming industry, we have seen great results. We have a partnership with ReadyRaider. I recommend you to check that out. It's really cool stuff what we're doing there in the esports area. And obviously, I'm a bit limited with the time, so I cannot go into all industries, but there's a lot. There's gambling, there's even marijuana in the States, there's CBD here in Asia. I was just speaking at a big conference for CBD in the medical industry here in Southeast Asia. So there is a lot of stuff, and again, there is essentially no limits. Some of our partners, to give you a little bit of something to try out, we have gift cards. You can book hotels and airline tickets. You can recharge your SIM cards or buy more coupons, or you can even have some delicious fast food if you go to Latin America's church chicken. If you want to find out more, go to Discover Dash, enter your city, and you can explore the different options. One thing to mention here as well, we are it's very important for us to not brag about numbers, like it's sometimes the style of some blockchain projects. We really want to be real with what we have. So there is two levels of this. One is the direct merchants we have, which is most of that what you see here, and the other ones, and that's what I'm sort of talking about, are rather platforms. So we would in fact you can book a travel with Dash in millions of hotels, but this goes not if you book directly with the hotel, but obviously on the travel platform, right? So it's always a question of how you count these things, and from our perspective, it's just better to be a bit humble and having the value in place and having the options in place. So that's just as a side note. I mentioned before, crypto is moving very fast in this industry. It impresses me constantly. I have to say, last year I thought, oh my God, this year was so exhausting. This year has been the same on steroids, I feel. A lot of things have happened, especially in the payment and the finance space. One thing that I think really stands out in the cryptocurrency industry right now is the fact that we have a lot of companies with running products that suddenly came to life in 2020. And by suddenly, I mean, it was friggin' hard work to develop them in the last 3-4 years. But these last 3-4 years gave, all us very impatient people always the impression, oh my God, it's like nothing is happening in crypto. What's up there? And, finally in 2020, all these things come to life, and bit by bit, we can really continue on the vision that many people had in the crypto space, which is building decentralized ecosystems and having everything in place to do that. So especially in my opinion, the financial industry actually is a perfect example or a perfect starting point to do this, because it's so obvious of which players, are kind of intermediate or in the middle of something and don't really contribute to the value creation in the space. So I'm very happy now we are talking about money Legos and how to plug and play different things together to get it work. We as Dash see this as a huge opportunity, and in fact are very happy about everything DeFi, because now from our perspective, it really brings together a lot of things we have been building for the last years. I mentioned, our claim is always has been be your own bank and control your own money. So we have been working very, very hard on our upcoming release that is about to be launched in the very near future, called Dash Platform. And it enables a lot of new things on Dash. So for the first time in history, developers will be able to build stuff on Dash. And when I say stuff, I said it in the most positive way, because if you release something, you really invite all the developers in, and you want their creativity and ideas to have new solutions, idea, and business models that can be built of it. So some of the features that they can leverage are usernames, a decentralized API, decentralized cloud, or data contracts. And as I mentioned before, we have a funding system in the background, and we really invite with open arms people who have ideas to build anything. My personal perspective on what this enables, because as we are a cryptocurrency, a payment-focused cryptocurrency, of course, every payment, finance-related solution is kind of obvious, to build payroll solutions, or I don't know, something with identity in the payment space. But again, I don't even want to give too many ideas. I want that people, get the motivation to do something. And again, I invite everybody to approach me or anyone in Dash to get some guidance and help of how to come into our ecosystem. Another amazing thing we launched that comes together very well with the DeFi and the rest of the blockchain space is what we call a FastPass network that was driven especially by Dash Core. So my props to Omar, who was really working hard on getting this done. It's a network that features one very distinct feature of Dash called Instant Send. And what Instant Send does is enabling to send a Dash transaction without waiting for any block confirmation. This sounds very abstract, but in reality, it means if I pay or if I send someone Dash from my wallet, it will arrive instantly and it can be respent instantly. This is not the case with most other blockchains, because as you are probably well aware of, usually you will have to wait for block confirmations, and it really depends on the use case. For many use cases in payment, waiting is just makes the use case bad, or is really not viable to produce a good use case. If you think about trading, even paying for your coffee, arbitrage trading, sending money from one exchange to another. So I'm very, very happy that we brought in a lot of partners who implemented this feature, and now users essentially can have a long list. These are just some top partners I'm showing here, but the list is much, much longer than that. Please check it out on FastPass Network on our webpage. Users can essentially send Dash in lightning speed between all these services. So I think this is very, very nice. And obviously, the partners you're seeing here are not in core DeFi companies, but as I see it, there is a big need, and there will be a big need to bridge the gap between DeFi and non-DeFi. Now, last but not least, let me talk very briefly about what we are planning in the DeFi space. And I'm super excited because I really fell into a new rabbit hole this year called DeFi, and very, very excited about it. So this is why I was pushing very hard to get partners on board here, and to enable Dash to be part of this. And I think the first step to do this is having a wrapped asset, because so far blockchain has been or all these different blockchains have been rather their own closed ecosystems, which are usually amazing with amazing communities in the back, but it was very hard to bridge these different ecosystems and to find solution that one can interoperate with the other. So in this case, I think, you know, it's for us the first step to have a wrapped asset that represents the original in a very sound and safe way, and that enables to be traded on other blockchains, specifically on Ethereum. So by doing that, you know, this will provide Dash users a way to participate in all the yield options and DeFi payments, and it will enable Dash users the option to participate in yield farming, in many of the services around DeFi, and it will enable Ethereum users to have an out and to, you know, hopefully leverage our merchant network very soon. Meaning, you know, you can save your money, you can do all these crazy DeFi things, but at the end of the day, it's very much fun to spend money for something you like. And this is exactly my vision, you know, to give everybody an exit into the real Dash world with our connections in and our setup system in the merchant and different industry space. So the way we do it is also actually very straightforward, but yet very, very complicated, because it's you know, it's still very, very new, and for us it's really a new challenge to find out how that works. I'm very happy to work with Albert Castellana from Stakeout on this. We just announced this partnership, and I think we're going to have the solution somewhat by end of the year. The way it works is that you have an original Dash, you send it essentially to Stakeout, and in return you will get a staked Dash. So this enables a lot of things. Number one, you have an asset you can use on Ethereum. Number two, as Dash has a staking system with the masternode network and with masternodes in the background, Dash is already since 2014 one of the first coins generating constant yields with this system in the background. So what the stake Dash will do is essentially leveraging it, because if you send it to Stakeout, they're going to stake it as a masternode, and that enables you as a user, you know, with only little investment to participate in this amazing system and to just gain rewards simply by holding this wrapped asset. But of course, you can do also other things having this wrapped asset. You can participate in staking, you can participate in liquidity pools on Uniswap or whatever. And a lot of new partnerships will be announced soon. Again, I'm working very, very hard because it's brand new. So just some ideas, you know, and I think these are kind of obvious. Automated market making, liquidity pools on Uniswap is something I mentioned already. Very, very obvious use cases in the DeFi world are all these borrowing, staking, lending, saving platforms. And I think we are seeing more and more popping up. And again, lastly, I think this is something that has been a little bit or not enough in the focus yet of DeFi is everything payment related, you know, because if I'm my own bank, yeah, it's nice to create more money out of money, but it's also nice to spend money. So in order to do this, everything I mentioned in the beginning has to be brought in place. So this is it for me. Thank you again very, very much for the opportunity to speak here. If you want to contact me or talk about, you know, how you can be part of Dash platform, reach out to Felix Mago, MAGO_Dash on Twitter, or add me on LinkedIn, Felix Mago. Thank you very much.
Felix, thank you very much for your speech, and thank you for joining us. We've been all excited to find out about your plans and how that is going to and how Dash is going to take out the world. Please, we have another minute or two, and we have questions from the audience. One of the questions is that a lot of our big part of our audience are actually crypto traders and investors who are looking for early stage projects that can become as big as Dash did. How do you? And they're asking, how do you recognize at that early stage that the project has that big potential? What would you answer on that?
Always have a talent to ask the complicated and hard questions. Thank you for this great question. You know, for me, it's like in the real world. The first question is: do you have a business case? Do you kind of have an idea of who is your market? What is your market? What are your customer acquisition costs? What is your growth potential? And what is like kind of the roadmap of getting there and being scalable with the technology you use? I think, especially in this blockchain world, you know, we see always many projects popping up, and sometimes people ask too little of the critical questions, and you know, throw money first and ask questions later. So I would say, from an investor perspective, greed is never a good driver, and you know, common sense is always a very good idea. You know, I think everybody who invests with, you know, looking at successful companies versus not successful companies, you kind of always get a good idea. And you know, this is actually always my standard answer. Blockchain is no magic, and as much as we are, you know, experts in buzzword bingo, look at the business case and look at, you know, the real scenarios we can provide.
Great. Thank you for your insightful and realistic answer. I assume it is true that there are no magic pill to find a good investment. So thank you again a lot for joining us. Thank you for your fantastic speech. I hope you live until the rest of the event as well and enjoy other speeches and panels. We have a great array of speakers as well, and the workshop where we'll be doing a demo for dashboard. So if you have time, would be glad if you could join us.
Boris, and let's talk soon. Have a great day, everyone. Thanks for participating.
And we are ready to introduce the next part of the conference. We are having the last panel for today. It is the panel related to secondary markets for digital securities. And this is one of the most pressing issues in the industry. We've seen people for 2 years begging for good liquidity and secondary markets to emerge. And we have many exchanges at last getting regulated and emerging. And now the next step is for these exchanges to solidify, to get enough trading volume and activity. And whether you're an investor or a business, you need to know the future of secondary markets to make informed investing or business decisions. So today we're going to get the knowledge from people who are the closest to what is actually happening, to people who are C-level executives at regulated exchanges that are creating the future of digital securities industry. I would say very strong people who have been able to pass through all the hurdles and complexities of the regulation process. And I am amazed by having 4 of such great individuals today with us. So waiting for you to join us. Hello, everybody. It's a pleasure to see you here.
Hi, good morning.
Thank you for being here on time.
Hi. Thanks, Boris. Thanks for that introduction. We're all very pleased to be with you here today. Good morning, good afternoon, good evening, everyone, wherever you are in this global audience. Glad to be chairing this final panel with some great friends from the industry too. So looking forward to the next hour or so. So just to kick off, kind of echoing what Boris just said, if you kind of look at the history of crypto in its broadest sense, cryptocurrencies came along, then came ICOs and utility tokens, and then emerged sort of STOs, those sort of regulated tokens off the back of the technology that underpinned all those other types of tokens before. And I think it's interesting because, STOs have been the next big thing for the last couple of years. Everyone's been kind of waiting for them to really take off. But maybe they haven't quite yet, and maybe they're about to. I think that's one of the things we're going to chat about today. I think digital securities or security tokens, and we use those terms interchangeably, by the way, they kind of mean the same thing. But by their regulated nature, they have a certain amount of inertia in them. And maybe that's why it's taking a little longer for things to really take off. But also, I think the advent of secondary markets is key. Regulated secondary markets is what is going to really help drive the adoption. Is it going to bring in retail? Is it going to bring institutional money? Is it going to do all of the above? Well, that's what we're going to discuss today. But to kick things off, I'd like to introduce the panel. In fact, I'll let them introduce themselves, and we'll follow the global clock and start over in Japan, where it's early evening, I guess, for you, James. But James, you'd like to introduce yourself and Standard Capital?
Yeah, so hello. Thank you for having me today. My name is James Parker. I'm from Standard Capital. We are an exchange based in Japan and the Philippines, or SEZA. We are a security token exchange.
Great, thanks for that, James. And next on our global journey is Mike Kessler, who is sitting somewhere in a gloomy London, like I am, I think, on this rather gloomy Saturday morning. But Mike, introduce yourself and tokenize.
Hi there. Hopefully you can hear me. So I'm Mike Kessler. I'm CEO and founder of Tokenized Stock Exchange. We're an exchange that's regulated over in the Caribbean, but we've also got regulated activities in the UK as well with the FCA. So we're looking at becoming a global exchange, but with international parts to it in terms of access points, but a single global order book. So that's what we're doing.
Thanks, Mike. And finally, Douglas, over to you. It's like 5:30 in the morning or something for you in New York, I think. So thanks for getting up so early and seeing us. But please introduce yourself and INX.
It's my pleasure. Thanks for having me. So I'm Douglas Borthwick. I'm the Chief Marketing Officer and Head of Business Development for INX. INX is a company that will be going live in the first quarter of 2021. We're currently doing our IPO. It's the first IPO in the blockchain. We're an SEC regulated security, SEC registered security. It's the first time that anyone's gone through the whole process where it's not sort of a Reg D or a Reg A plus, but actually an F1, which is the foreign equivalent of the S1. So it's we've got a huge, big prospectus. We've got a lot of transparency, and we're doing something that's a little bit different, I think, from the others in that we've got two platforms. One is the trading of cryptocurrencies, and the second one is the trading of security tokens. Great,
thanks, Douglas. And finally, myself, Simon Barnby. I'm Chief Marketing Officer at Archax. We are another UK-based company. Recently got our regulation from the FCA to launch a regulated digital securities exchange alongside a brokerage and custodian. And similar to INX, we'll be launching in the first quarter of next year. So to kick things off, Mike, I'm going to turn to you because and get your view, I think, first, and then circle back around the others. But I kind of guess where I wanted to start was, what are we seeing currently? What are the types of issuance that are coming along as STOs that want to list on exchanges? Where is the current activity? And then, a bit later we'll move on to where we see it moving in the future. But give us this kind of a status of how you see things right now.
Okay, so I see things slightly differently maybe to some of the other people. So I think in terms of, we're seeing, in terms of the people that are interested in doing some potential listings with us, is not necessarily in the plain vanilla equity arena, because I think there's so many different avenues that these people can go down if they are just doing a plain IPO for equities. I actually think that the digital security space, especially whilst it's in its nascent stages, will be far more kind of in the esoteric stages of capital markets. So whether or not it's trading things like bonds on a full exchange rather than over the counter, I think you'll see things like fractional ownership of property. I think you'll see things like royalty tokens taking the fore, and just coming up with slightly more innovative approaches or kind of hybrids of these. So I think that there's things like royalty tokens, which are a bit like a preference share and have some of the hallmarks also of a bond. So I think that people will start creating things that actually give better access to capital markets, potentially give more capabilities to the investors. So I always liken it to, I would rather own 1% of the profits in Apple rather than 1% of the equity in Apple, because that way I'm in control of the destiny of where those things are going. So I think the markets in general are looking for something a little bit different, because if we're just the digital exchange, and let's face it, all of the exchanges are digital exchanges. They're all trading electronically. But what they're trading, they're not trading the tokens, they're trading the actual instruments. But it's just a number, it's just a unit in the same way that it is for a share. So I think that although people are most familiar with equity, and we will see equity trading taking place, I think for the smaller exchanges, I think it is being able to change what was considered complex and doesn't typically trade on a stock exchange, being able to trade on a digital market.
Yeah, thanks for that. I agree with a lot of what you're saying there. I mean, I think it's interesting, existing exchanges are digital, but I think, one of the key differences is, DLT, blockchain technology can bring all sorts of benefits post-trade, which is something we'll touch on later. But Douglas, over to you. I mean, like Archax, your INX are launching in an early part of next year. I know from previous conversations you have a pipeline of people coming to list with you. How are you seeing the landscape? How are you seeing things pan out for you guys in the US at INX?
Well, I think that there's a lot of different projects out there, but we've got to kind of think about what's going to be exciting to get people motivated. I think that we're interested in projects that retail can trade from the get-go. And right now, the only security token that we know that could be traded by retail without any lockup period is the INX token, because it went through the F1 process. But on top of that, we've got to find something exciting that get millennials interested. Millennials, of their top 5 holdings of equities right now, GBTC is one of them. They own more GBTC than Netflix. They own more GBTC than Disney. So for them, digital is the future. So I need to find the types of things that's going to get a millennial very excited about trading on a security token platform. Now, what do millennials like? Well, they like video games. So I like the concept of having video game tokens that can be used in-game and also be traded out of the game. My kids spend a lot of time playing video games. They accumulate a lot of points, and they can't do anything with those points. Now, if they could sell them on an exchange, that'd be great. They wouldn't have to get jobs. So that's the kind of thing that excites me. That attracts, I think, the younger generation to an exchange. Other things that interest me are taking of a dead asset and then finding a way to be able to trade it. Let's say you're looking at whiskey, Scotch. Scotch, 25 years and it's sitting there in a cask. Normally, I spend my $500,000 and I buy a cask and then I share it with my friends. And then in 25 years, it comes out and it's bottled, and then we all get the bottle sent to us and we can drink it. 25 years is a long time, Simon, to have your money tied up. So I like the concept of, why don't you just tokenize it, own it, and then after the first year, maybe you could sell it to somebody. Maybe after the 3rd year, the 4th year, the 5th year. But having a liquid market in a liquid product that traditionally trades illiquidly. The other thing I like, and I'm talking to some folks in the Hollywood area, is the tokenization of, and you talked about royalty tokens. You think of Mariah Carey. Mariah Carey, every Christmas season, I don't know how it is in the UK and in Asia, but every Christmas season, her Christmas songs come on and she gets a check for something like $15 million. Now, why does Mariah have to wait every year to get her 15 million? Why can't she get 150 million today? And the token holders then own the royalties to all of her Christmas songs going forward, and they can trade that. I'd love to own that. Think of the correlation between heating oil and Mariah Carey royalties, in that as soon as it gets wintertime, Mariah Carey royalties are going through the roof and the heating oil is going through the roof, and which find a whole new way to hedge Mariah Carey through heating oil. So I think there's some exciting things. Now, obviously, real estate is where people are looking at right now. Real estate can be interesting. You can get a big high dollar number, and that, it's a $400 million deal, a $300 million hotel here or there, but it doesn't get a lot of volume, because generally the person that buys that real estate, they'll hold it for quite some time, and it doesn't really get that rush of excitement from the media. And I think that as we're growing these businesses, we need to be able to get something that gets people excited, because nothing is more boring than the term security token or electronic wallet. And as soon as you mention that to people, their eyes glaze over and they fall asleep, and you've lost your audience. But if we can give people things that are truly exciting to them, whether it's alcohol, whether it's royalties to do with some famous person, whether it's video game, but we've got to find the way to get that trigger and to get people to get excited about something that we're already excited about. And the crazy thing is the way that security tokens have been sold, I think up to this point, it's sort of like, it's been sold to that 0.2% of the population that cares about crypto. But then I think that's crazy because 80% of the population has equities in some way, and we haven't been able to break through to the equity holder. Because that equity holder needs to understand, you know what, there's something here that's exciting. Now, it's been hard to do because traditionally security tokens have only been for accredited investors. So maybe you have 1,000 people that care about a deal. But the way things are going in the United States, and certainly the breakthrough we had with the SEC, tells us that retail soon will be able to trade these products. And it's our interest to have someone that's trading crypto hit a little tab and then start trading security tokens and say, oh, you know what, this is an interesting thing here. I'd like to see this. But security tokens, I don't think will get sexy to the market until GQ's writing about it. And GQ is not going to write about a security token that's real estate. They're going to write about something about, you know, alcohol or royalties for an actor or royalties for, you know, an athlete in the NBA. And I think that, you know, we've got to find those triggers that get people excited and get the juices going. And until then, we're left with the security token that sounds so boring. But I will say this. I think that, you know, the SEC has made it very clear in the United States that security tokens may have been sort of a sleepy backwater for some time, but they're definitely pushing for AML KYC reasons to have all equities move onto the blockchain. And the reason is, when I have Nike stock today, I can give it to my mother. Nike doesn't know and the government doesn't know. She can sell it. She could be a money launderer. But when it comes to security tokens, as we all know, when you sell from one person to the other, the issuer can see it, the government can look at it on the blockchain, and there's a lot more transparency. And the government wants that these days. They're pushing for it. And I think one of the most exciting things that we have is, you know, we're building exchanges all around the world. And we're going to find that the NASDAQ company that's got a sub $1 billion market cap is going to be convinced by their bankers that maybe they should float some of it on a digital exchange. And then you get the arbors coming in, the digital token versus the underlying. And we saw the same thing in currency markets, where people would arb the electronic on the IMM versus the voice. After a while, the voice disappears and it goes electronic. And so I think in the next 3 years, there's going to be a huge migration of assets onto the blockchain. And you want to have an exchange that can handle blockchain because that's where the future is.
No, thanks for that. And certainly that point on liquidity is key. And I want to come back to that in a moment. But, you know, a couple of things I'll pick up on there. One, when that $500,000 barrel of scotch turns up, I'm definitely coming around to yours to try some of that. And it's interesting, you know, you mentioned these kind of exotic assets, you know, Mike, you mentioned them too, and we're certainly seeing that at Archax, you know, everything from race horses to container ships to art. I mean, you know, people are looking to tokenize just about anything you can think of. I'm sure some will fly, some won't, but it's great that the technology is allowing people to innovate and come up with different things and approach things in a different way. But, you know, moving over to you, James, and what you're seeing in your neck of the woods, I mean, what is the market like there? What's getting traction? What's exciting people? How are you seeing things pan out for you guys?
Right. So our company is based in Philippines, but we actually operate out of Japan. Our license is in the Philippines, so we kind of have an insight into both because we cooperate with the Japanese government as well. Because basically in Japan, it's not established yet. But in the South Asia, they're trying to get it established because basically their infrastructure is not very good right now for security. So basically they want to jump to kind of the next level. And I think that what we're seeing is that the security tokens provide like an extra layer kind of like AML and KYC, and it allows for people from international markets to be able to participate in, like, I guess, Southeast Asian markets with confidence. And as Douglas said, you know, it does kind of captivate the younger people as well. It's more interesting, you know, talking about security tokens or crypto than just traditional, you know, securities. Or it's not very interesting when you do that. But I also think that for security tokens, that, you know, it does invite retail, and that's a huge thing that really, you know, will boost this the kind of usage case in Southeast Asia, because you've got kind of this Indonesia, for example, is, you know, becoming more and more wealthy. You know, Southeast Asia in general is, and you're going to see a lot of people wanting to accumulating money and wanting to park it somewhere, right? And security tokens are an attractive option for them because it's all online. The KYC is built in, and they can see the company. It's pretty trustworthy. So I think that's really kind of what I'm seeing in our region is in Japan there's still skepticism, but in South Asia there's more of kind of an interest.
Okay, thank you. Yeah, I mean it's you kind of picked up on that technology point too. I think we need to not focus on the underlying tech. That's pretty much irrelevant. It's the use case, the business use case that's important.
Right.
But obviously the tech that has other benefits, which we'll come back to later. But so a lot of you have mentioned retail, and obviously retail is important and exciting, and you only have to see what happened with the ICO craze as to the power of retail communities and what was driven there. But what about that wall of institutional money? At the minute, traditional financial markets, there's a huge amount of institutional activity and money there. When is that going to come across? Is that going to come across? How is it coming across? I mean, Mike, maybe kicking off with you. How are you seeing that side of things?
So I think it's an awkward one, and I think it's going to follow crypto markets in reality. So I think what will happen is you'll start seeing adoption by the retail markets. The retail markets then get noticed by the institutional markets, and they start playing in the same kind of sandpit. I think it's interesting about what Douglas was saying earlier about Mariah Carey and stuff, because I think really that's where we need to go. The most difficult thing about all of what we're doing is educating the masses as to what a security token is. And we try and avoid actually the term of using security token. Being called tokenized doesn't help with that, but we're kind of trying to go down that path so that if someone has a royalty, if someone has an equity, if someone has a fraction of a property, then that's what they have. But I think what's really interesting is there was a recent flotation that happened in South Korea with BTS. I don't know if anyone's heard of it, but it's a K-pop group. There was a management company, and they floated the management company who had 88% of their revenues coming from one K-pop group, and they raised $894 million. And on the first day of trading, it went up 90%. And that's because everyone wanted to buy one unit, one share in the management company, because that management company managed this K-pop group, which is the biggest boy band in the world at the moment. And I think that's how we can get this this industry started, whereby it might be a celebrity, it might be someone who just says, do you want to earn a little part of this because I'm connected to it? And I think it's far easier for someone like Mariah Carey to say, I'm going to earn $15 million every Christmas. If we securitize that and you pay me that, whatever it is in advance, you can have a percentage of that every Christmas or ongoing or whatever it ends up being. And I think by having that, they can talk to a mass market. Don't forget, they've also got huge amounts of followers on social media. So I think if we can convince the generation, I don't know if it's Gen Z, Gen X, whatever generation it is these days, but I think what we have to do is we have to follow the pathway of the kind of retail investors. It is about educating them, and it's trying to tell them, actually, what you're getting here is just a normal product. It is a security. You do have the benefits of regulation. And I think over time, what you'll then see is the institutions will follow on the back of it. I think, but coupled with that, I think what you're going to start seeing is those brokers, when you start seeing, say, Mariah Carey is doing her royalty token or whatever it ends up being, you're going to see that the people that are signed up with TD Waterhouse, Charles Schwab, etc., and even places like Goldman Sachs, people may turn around and say, how do we get in, and can we use your institution as an inroad in order to do that? So that they put a bulk order in or whatever it ends up being. So I think there is going to be a bit of give and take. I think it will be retail driven originally, and then I think the institutions will follow suit.
Great, no, thank you for that. Yeah, I'm coming on to you, Douglas. Yeah, I mean, I know with your kind of hybrid INX token, I'm sure you're out talking to institutions a lot anyway. So it'd be interesting to get your view on that and how they will fit in, when they will fit in, and your views. Yeah.
So thank you. First thing I'd say that institutions, the portfolio managers have a strong interest in this area, but the infrastructure is not there in a 30 or 40 act fund in the United States. Now, by that, I mean a mutual fund may say, you say, look, the portfolio manager says, I'd like to buy your security. It's a security, it's registered, I'm allowed to buy registered securities. And then the back office there says, hold on a minute, let's look at the prospectus for all of the funds that we have within our institution. And the prospectus says that the institution can buy equities and fixed income. And security tokens are a different asset class altogether. And so because of that, these larger mutual funds that we expect that wall of money is unable to actually move into this space until they change the prospectus for every one of their funds. So that's probably the biggest limitation. So you're going to see it first, we see from retail. Retail has no limitation whatsoever, but there's a limited product for the retail to buy. Then there's what we see is the college endowments. They also have, they can make off the cuff decisions, and they can buy and they can get excited about it. Pension funds to a lesser extent. Family offices, absolutely. There's always a family office that wants to get involved. But for the largest institutions in the United States, the ones that we see as like, the mutual funds that you know about and you can buy into, you can forget about that, I'd say, for another 2 or 3 years, because they have to change so much documentation that they already have. I mean, it's an absolute, it's like trying to turn the QE2 or Titanic. It's just not going to happen overnight. Now, Simon, you brought up something really exciting, and that was racehorses. And I was having this discussion with a friend the other day, in that with betting, you can bet on the racehorse, but when the race starts, you can't do anything. But with the security token on that racehorse's bloodline, you could be buying and selling that security token on the bloodline, on the stud fees during the race. And I think that that's one of the most exciting things that security tokens brings, and also is another kind of sexy point to security tokens, is that you've got 24 hours, 7 days a week trading of something. And the millennial generation, that's the Amazon generation, they really laugh at us. When bad news comes out on a stock at 5 o'clock or after at 4:30 on a Friday, and I say, don't worry, kids, I'll get out of it at 9:30 on Monday morning, they look at me like I'm an idiot. And that's the reality with equity markets today. And if you're in Asia and you want to trade Amazon, you got to wait until New York opens? It's crazy times. And it's very much like the way that currencies trade to a greater extent. Something like the Korean won used to only trade in Korea and would have no trading in the US. Then they invented something called the non-deliverable forward. Now there's more volume in the Korean won in the New York time zone than there is actually in Korea on the spot. And I think that, when you bring esoteric products in to create that 24 hours of trading, the interest becomes much, much greater. And there's a lot more excitement about it. But look, racehorses, to me, that's exciting. Alcohol is exciting. Real estate, it's a great announcement, $500 million deal, but it doesn't bring the eyes to your platform. It doesn't get people to sign on, and it doesn't get people excited about the product.
Great. No, thanks for that. I think the most obscure project that I've spoken to someone about is the tokenization of frozen pedigree racehorse stallion semen. Apparently, it's a huge industry. It's kind of stocks of it held in vast refrigerated warehouses. Sorry. I bet you didn't think we were going to talk about that today. But moving swiftly on over to you, James. I want to pick up now on kind of the whole liquidity area, because one of the criticisms of STOs so far, and the existing STO markets, I mean, no criticism particularly, but they have been fairly illiquid. So how is that going to change? How do you see things? What are the ways of bringing liquidity to markets? What have been the things that have hampered liquidity so far in your view?
well, I think if we had some, horse semen and more exciting products, that would bring more liquidity. But no, I think that, to be honest with you, it's kind of, well, we're in the very early stages. I mean, this technology has been around for, less than a few years. We can't expect instant liquidity. I think that, obviously, I think that what Douglas said about the Amazon generation and this kind of new generation that's coming up, that's, they live with technology. The fact that there's no 24/7 market for stocks, when you can, bring up anything on your phone instantly, you can get your, your, I don't know, Deliveroo or whatever at any point in time. It's a bit silly. So I think that with the younger generation, there's going to be a deeper understanding of this technology. There's going to be, more appreciation for security tokens. I think that basically, I agree with Douglas that if we get some, cool products that will be tokenizing, or like BTSs that Michael mentioned, we get those kind of players into the space, it's going to draw attention. It's going to give credibility to the space. I also think that, as I said, over time, we're just going to see more. We're going to see more and more trend towards digitalization of these kind of assets. And I really think that, it's just a matter of time. It's a matter of getting the right players in the game, and also regulations and getting institutions in. So I think that, as time moves forward, we're just going to see, it's inevitable that we're going to see this.
Sure, yeah, you're saying kind of it takes time, and in time it will happen. But I wonder whether, what can we do to kind of fast track or help it maybe? I mean, Mike, you have a business model where you kind of, I know you're regulated by the FCA for some of your activities. You've got a very glamorous Barbados regulation, I think, for your exchange. I hope you get there occasionally. But how do you see the whole liquidity side of things? What are the challenges? What are the solutions? Or do we have to, like James says, is it really just a matter of time?
I think it is to a large extent a matter of time. I think anyone who wants instant liquidity it's a fool's paradise. I think the reality is, I think it really depends on the sexiness of the product. It's like Douglas was saying earlier. If you go into real estate, you buy real estate for a long-term hold. You don't buy it to flip it on a daily basis. I do think, though, however, at the same time, if you can have internationalism, globalization of this, I think it becomes far more capable of being traded more on a more kind of liquid basis. So if you take, for example, Venezuela or Ethiopia or any of these countries that are going through, say, political or stability issues, then sometimes I actually think for them to buy an asset in, say, Manhattan or wherever it is in terms of real estate, I think is quite useful for them. Whether or not it appreciates in value particularly, I think it's more or less a stable coin, but in a securities market. So real estate, I don't see people buying and selling and flipping, but I do see the access points coming from other jurisdictions where they want to be in a safer environment. I think in terms of liquidity, I think it really does come down to that sexy product. I'm not talking about horse semen here. Sorry to bring it back to that. But I do think if you do have access to that Mariah Carey, and I think if you think about it, someone like Rihanna, and I only use the example of Rihanna because she's originally from Barbados, but she's got 80 million followers on Instagram. If she was to get 1% of her followers who were investing in her products and her back catalogue, her beauty products, etc., that's 800,000 investors. Now, 800,000 investors very quickly start trading. I mean, in the old days, when we were younger, we used to trade football stickers. And we used to pass them back and forth and swap 1 for 3 or whatever it ends up being. These days, people are trading trainers and Supreme products and all of these things on StockX and stuff like that. So I think the millennial generation, they're quite used to this. They're used to in-game currency, as you were saying earlier. They're used to loyalty points and various bits and pieces. I think what we've got to do is the more we actually educate people that this is an environment, and I do think it's about gamification. I think Robinhood has done very well in terms of gamification. And I think if you have the right access points for people, you don't make it too onerous in terms of being able to get onto a system, and you use gamification to make it a bit more fun, I think you'll start finding that people will start trading and it will create better liquidity pools.
Okay, good.
But I do think also you have to go back to the traditional as well. I mean, I know we're probably all speaking to some of the similar people in terms of market making activities, and trying also to get some of those large institutions, and especially in the early days, to help provide some of that liquidity that won't exist unless you've got some people making that kind of first move.
Okay, now thanks for that. And actually, market makers is something I want to come on to, but maybe before we kind of focus on that, you know, Douglas, from your side, I mean, you know, Open Finance, you know, they're a well-established STO exchange based in the US, announced that they were sort of getting into difficulty or unable to make money, questionable about how they would move forward. But then, you know, you guys have swooped in and picked them up. And so I'd be interested to get your take on you know, the challenges that of liquidity so far and how you see that changing.
Yeah, we've always admired Open Finance. I think that, you know, these guys were real pioneers in this space. I think they were the first in the US to get that digital license for ATS and broker-dealer, and phenomenal team. I think that one of the problems or the issues that all of us are going to face is a lot of these sexy issues, or even real estate. You know, let's say you take a real estate $300 million deal, given that it's barely going to trade because people aren't getting in and out of this all day long, you're not going to find a market maker, or you're not going to pay a market maker $5,000, $10,000 a month to be making markets on a daily basis, 24 hours a day, 7 days a week. And in a $2, $3, $4 million type STO, and that's kind of the size of the sexy ones that sound exciting. Again, they're much too small to expect a market maker to come in and start making markets. You know, I'm 24, 26 on horse semen, you know, all day long. It's just not going to happen. Like these are such small sizes in terms of market cap that excitement's not going to be there. So I think that there's going to be illiquid niche markets, but the only way they're going to start trading more is by having the retail investor be able to invest in them, as opposed to just the accredited investor. That's the first thing. But the second thing is the real liquidity in this space will come when we start tokenizing current issues that are sitting there in the market. Now you see that as well with Overstock. So Overstock would they've got the underlying stock, and then they have a tokenized version of it, and then a market maker comes in just to arb. And it's the arbors that will end up becoming the market makers, as opposed to us paying someone to make markets for us. So, you know, if at some point Joe Blow that's sitting there on NASDAQ says, I want to get tokens version on 20% of my float, and we float it, then that NASDAQ market maker that market makes for them right now on the NASDAQ will turn around and say, I want to take markets as well on your exchange, just so they can arb the two exchanges. At the same time, let's say I list something in the US, and then Simon, you also list it, and Michael lists it, and Mr. Parker, James lists it. Well, now you're going to have this arbitrage where you're trying to pick off one exchange against the other. And I think that that's how we're going to end up getting folks excited. What you've mostly found with a security token is, you know, T0 would be a good example. They create a security token, it just lists at one exchange. That's not really taking advantage of the security token nature. The digital token can trade on multiple exchanges at once. But if a token does trade on my exchange and on Simon's exchange, well, there's going to be all sorts of interest, because, you know, there's going to be the arb between the two of them. There's a little bit of a currency differential there as well. And now suddenly, you know, we're making security tokens sexy again, in that you've got to have it trading in multiple places for the market maker to actually be interested. And whether that's multiple places in that you've got on a legacy exchange and a digital exchange, or internationally in the UK and the US, that's how we're going to end up bringing market makers, because it's absolutely not worth paying a market maker money to make market in a $400 million real estate deal, or to make a market in a $3 million horse semen or whiskey deal or something of that nature. They're just too small to get to pay someone to get involved.
I think that's right, and also, you know, certainly sort of experience at Archax too is, you know, if you kind of look at the different projects that are coming along as STOs, you know, some are naturally more liquid or less liquid than others. You know, the type of trading that some things are never going to be liquid and never should be, and there's nothing wrong with that. It's just the nature of the asset where others are you know, are much more liquid potentially. And you know, James, what about from your side? I mean, do you get involved with market makers? How do you see the sort of liquidity picture?
Yeah, we're talking to a number of market makers. I see the liquidity picture. You know, I think for certain things, there's always going to be some kind of interest, no matter what the medium. I think that for some, the medium actually excites them. I think that, you know, insofar as liquidity, I think that, you know, there's two ways of kind of going about it. One, you just hope that people buy it on the exchange, or two, you're going to actively advertise it. So we're actually trying to like advertise our exchange, and a lot of the we're also like helping some projects advertise in the region some of their their assets. So I mean, I think that, you know, I think that security tokens are interesting because, I mean, you know, the liquidity will come from not just the interest in it comes from both the interest of the, you know, the fact that the asset is digitalized and is on security token exchange, and also the asset itself. So for example, if we take, I'm going back to the example, horse semen, you know, I guess there's many people that love horse semen or something. Or there's an interest in the semen market, and those people might be drawn to buying the security token. And maybe and maybe people that then people that are also fans of security tokens may also think, oh, horse semen, that's interesting. I've never gotten into that. Let's get into that. So I think that you've got kind of two, I guess you've got kind of two parties that may be interested in the horse semen token. And I feel like that's going to be kind of the driver of liquidity, is like the kind of interest in the product and the interest in the rising of the technology.
Yeah, and I think engaged communities is key, isn't it? Like kind of that kind of fuel interest and fuel activity and everything. Okay, well, we're at kind of 45 minutes of the hour, so I just want to ask the organisers if any questions have come in that we can pick up. If not, we will continue. But are there any questions from the audience at all?
I've just got to say, whilst you're waiting for that, I think if Archax doesn't tokenize this horse semen, I think it's going to be a problem for the community.
Yeah, who knew that was going to be such a focal point of this panel? But anyway, Boris, are there any questions from the audience? Or?
Yeah, there is actually a question about microcap stocks. So many security tokens are actually have a very low market capitalization. There are 5-10 million raises, and even now it's $100 million stocks trade with very narrow liquidity. So I wonder whether it makes sense so list, and whether we can expect some liquidity for them to emerge.
Anyone like to pick that one up? Douglas, yeah.
So you're right. I'd say that the listings that are out there right now have been de minimis, rather small. And one thing you've found is that I think traditionally with security token markets, at least in the United States, it seemed to be the idea was, let's get someone on our exchange, they'll list, and that's it. Now, when someone lists on the New York Stock Exchange or on NASDAQ, there's a fanfare, there's an excitement. And James, I think, linked on this as well. It's when someone lists on your exchange, you have to bring awareness. And the only way you bring awareness is you have to have a community that's associated with your exchange. You know, one of the reasons that we decided to do our IPO the way we did it is that every time someone comes to our site to buy security tokens in this IPO, they also become a user of the exchange. And I think for the first 3 days, we ended up signing 3,000 people up. And that's maybe twice as what we saw the average security token exchange had signed up in the last like 3 years. By the end of this, maybe we'll have 25, 30,000 people signed up for the exchange that can trade security tokens. But it's also 30,000 people. We've got a mailing list that we can talk to and say, look, we've just brought this in. This is really exciting. We'll do an AMA. Let's all get involved and let's discuss it. And that then brings an awareness towards the product that you have in your exchange. And doing regular AMAs for the folks that are issuing with you making sure that the issuer feels special and knows that they're special is important, but also having a community that you can relate these specific instances to and get directly into people's mailboxes and say, look, we're now listing this. Are you excited? That's the kind of thing that a bank does. A bank does an IPO and it sits there on the exchange, and it's, before it lists, it says, hey, to all of their brokers, go out there and find out what the interest is. And I don't think security token markets in the past have done this. I think they've been excited to get a pipeline to list somebody, to stick it on the exchange, and then they've hoped that one of 1,000 people that signed up for their exchange will one day pop on there, see it, and say, oh, that's interesting, maybe I'll take a gander. But that's not how you should be running these things. It's about, you get an issuer, that issuer becomes your baby, and you want everyone to know about it, because obviously the more people know about it, the more people start trading it, the more volume there is, and the better for the exchange.
Thanks for that. That's a good answer. And if anyone in the audience has any questions, please use the chat facility to send them in. Yeah, Mike, do you want to add?
Yeah, just to add to what Douglas was saying, I think what you've got to bear in mind as well is most exchanges around the world, they have different tiers of stocks and the liquidity within those. So the top 25% trade fairly regularly, the next 25% trade fairly irregularly, and the bottom 50% are zombie stocks. They hardly trade at all. So I think it's really important to realize that we're not suddenly going to make huge markets and huge strides to drive up the liquidity. But I do think one of the things that is really interesting potentially for these token exchanges, now, obviously it's going to vary from exchange to exchange, is the capacity or the size of the listings that we're prepared to accept. So, for example, there is a thing called an expense ratio. So when someone lists on an exchange, their expense ratio to go through the listing process, to get all the legal documentation, etc., marketing right, you don't want that expense ratio to be so high that actually it defeats the purpose of the listing. So we will typically have a minimum listing, ideally of around the $5 million mark, but it might be slightly lower in certain circumstances. And it really depends on the kind of the way that people can go about the whole process to bring the cost down of the listing. So in terms of having these micro stocks, I don't see us necessarily, from our perspective, from Tokenize, we wouldn't necessarily tokenize a $500,000 barrel of whiskey, but we might tokenize a collection of whiskey that is worth $5 million or something. Because by the time they've done that, I think you've got to bear in mind that if it is very low micro stuff, then it's probably more suitable for crowdfunding. Now, that's not to say that these crowdfunding platforms shouldn't have a secondary market, because absolutely they should. And I think that is the evolvement of crowdfunding as well. And that's actually how we originally came up with our concept. We wanted to create secondary market activity for crowdfunding opportunities. So I think that is a natural evolution as well.
Thanks for that. I'd like to bring the conversation round to one last main area anyway for this panel, and that is...
my apologies for interruption. There's another question in the section I wanted to remind you. Before the question, I will also add from my perspective, I think that actually complex products that may be one of the solutions to this liquidity problem. So if you have many properties valued at each of a few millions, they are going to trade purely. But if you have a fund that unites hundreds of such properties, then the market cap and liquidity is going to be somewhat better. Even though maybe real estate is not the best example, given that people don't trade real estate often. So the question from the chat is, what are the requirements for project to be listed? It seems someone has a very practical interest in this conversation.
So the requirements for a project to be listed, and I guess that's an interesting one, because obviously we're all operating in a regulated world, and we have to worry about our regulations not only in the jurisdiction we operate in, but in all the other jurisdictions where people may come from to trade or or with issuances too. I mean, what about kicking off with you, James, on for your marketplace? I mean, it's impossible to go through absolutely all requirements, but what are the sort of the key requirements for you when it comes to listing? Oh, and I think we've lost James. So let's go to you then, Douglas.
If it's registered with the SEC, we'll list it. And it's really that simple. We want to have a listing to be registered. And if it's registered with the SEC, then the due diligence is sitting there. People can see what exactly it is. And I think that that's the most important thing for us. The SEC, and obviously we'll do our own due diligence on the issue. But generally, we like something that's got a real auditor behind it, that's actually registered with the SEC in some way. And it could be a Reg D, Reg A+, it could be an S1, F1. It doesn't matter, but it has to have regulation. Now, it could be regulated, let's say, by the German authorities. But in that case, then we'll only offer it to German folks that come to our exchange to trade on it. And every single, where someone's regulated defines then who can actually buy and sell it. For example, if it's regulated by the SEC, maybe there's 30 countries that can trade that product without us, having to get deeper in the weeds when it comes down to the other regulation. Sometimes, though, if I want to list what I have up in Canada, maybe I've got to wrap it for the Canadian authorities in some way. So regulations in general change by jurisdiction. I think what the exchange's job is to be able to list something that's registered in some way with a certain government, but then to restrict it and how it's traded to just those people that can trade that specific product. Because regulation in Liechtenstein may be important for guys in Liechtenstein, but what does it mean to the US investor? The exchange has to know that. Registration by the SEC, does that mean that someone in Germany can buy it automatically, or is it limited to maybe 50,000 Germans? I don't know. But the regulations don't go across borders often as much as we'd like them to do. And sometimes if something's regulated in one jurisdiction, doesn't mean that anyone in another jurisdiction can trade it.
Great, no, thanks. And what about from your side, Mike? I mean, what does it have to do?
We can pretty much take a security from anywhere around the world and tokenize it and list it on our exchange. Whether or not we can then market it to all of those participants or potential investors, as Douglas was saying, is not necessarily the case. The most difficult market, no offense, Douglas, is for us to deal with the US market. The long arms of the SEC are far reaching, and the implications there are quite difficult. I mean, we do see it that we can, as long as they're not on the blacklist, I think for us it's key. It's got to follow some key components. It has to have a compliant prospectus according to the prospectus regulations and the rules of our exchange. We're doing that to EU standards or what they call ESMA standards, so that with the exception of the US markets, it tends to be passportable around the world. We also have to make sure that everyone's doing the relevant due diligence, KYC checks, background checks, AML checks, etc. So it's the credibility of the project coupled with the right regulation and prospectus in order to bring it to the marketplace. So what we don't want to see, and no offense to any of the crypto people out here, is we don't want to see a reinvention of the ICO days where people were coming up with valuation of hundreds of millions and not having any kind of practical demonstration as to why that valuation is there. So I think it's far more based on fundamentals, because it is going to be scrutinized by the regulators.
Thanks for that. I mean, from Archax's perspective, for something to list with us, it needs to be a transferable security as defined by MiFID. That's by the European regulations. So similar kind of thing. But I want to move. We're sort of approaching the end now. I want to move on to one last question, really. So keep it reasonably brief. I think we probably have 5 minutes or so it's not too bad. But I just want to sort of get your thoughts about traditional financial markets and these purely digital blockchain-based ones. What does the future hold? When are they going to merge? What are the benefits for traditional markets that are being sort of pioneered by all of us with digital markets? How do we see the two colliding at some point? Where will the benefits come? How will change happen? And Douglas, maybe you could kick that off.
Well, I think that there's three sides that need to bridge this. First, it comes from the regulators. We know that regulators want AML, KYC. Digital securities give that. And so, we know that they're going to be pushing for it. The second one is going to be the issuers. Issuers right now aren't aware because their bankers haven't told them about the benefits of digital. Obviously, the fact that you deal directly with your stakeholders is very, very important. The cross listings of a couple of lines of code and not lines of lawyers, that's also exciting. And fractional ownership. Most people in the third world can't afford to buy the average US equity because it's 1 week's wages. Now, fractional ownership means that everyone around the world can start owning Amazon or other stocks. That's also exciting because now you're not just reliant upon the investors in your own country. But then you have to look at the audience, the millennials. And the millennials, we've already decided they're digital savvy. They want 24/7 trading. And so they're going to start demanding that. At some point, they're going to turn around and say, you know what, Nike, I'm not buying your stock unless I can trade it over the weekend, unless I can trade it overnight. And I think that that's a very powerful movement that's going to happen. And it's also the generation that's about to, to inherit all the baby boomer cash. And that's the largest ever wealth transfer in history. So, these what we call kids, I guess, is people under 40 now for the millennials. They're going to end up demanding that things start trading 24/7. So it's now we can talk about how great it is, but it's irrelevant what we think until the bankers at Goldman Sachs, Bank of America, Lazard start talking to corporates and saying, look, this is exciting. Now we know that's going to happen because we've got the text messages from every head of blockchain at every bank that say, this is a new watershed moment. We're excited now because we're telling someone to now do an IPO on the blockchain after 5 years after we told them to do an IPO on a regular exchange, and they pick up their 3, 4, 5% every time they have them list somewhere. So they're excited about this, and the regulators are now beginning to hammer it down. There's no way that Clayton would have come out at the SEC and said he sees all assets moving onto the blockchain if we hadn't spent 2.5 years, 953 days, knocking on his door and answering 8 million questions that came back and forth between the two of us. And so there is a movement towards that. Now, obviously, we've got to be very, very careful and make sure that we have that runway to be able to last. And we've already seen there's a lot of guys that started 2 or 3 years ago that ran out of runway. And, COVID, I think, certainly accelerated that to a great extent. And so we've got to be, I think that our job really for the next year or so is education. And I think Michael said this, James said it, Simon, you and I have talked about this as well. It's that educating not just individuals and the media, but educating investors and educating issuers. Issuers is key because the issuer needs to understand in the legacy space that by doing this and switching to digital, they'll save money. And saving money is very important if you want to have a higher EPS.
Yeah, I totally agree on that education point. It's a vital thing we all have to do. James, what about from your side? How do you see the landscape evolving and across both the digital exchanges and the traditional, and how that may all pan out?
I see in the digital space that there's got to be a separation of security tokens from crypto. I think that crypto, for a lot of people, especially in Japan, with Mt. Gox being here, and I don't know if you heard about the NEM scandal. It's got kind of a negative association. So when you say the word token, all of a sudden, they're thinking of hackers and they're thinking of ICO scams. So I think that what we've got to kind of emphasize more is the security aspect. And I think that Michael said that. I remember he said that about the name of his company. But I think that that's really got to be it. I think the fact that there is the largest wealth transfer in history happening. We're going to get the young generation having cash. They want to park that cash somewhere that's secure, that's going to appreciate in value. They don't want to just keep it in their banks. I don't foresee people, especially the people that are like I guess Zoomers, not even millennials, but those people, I don't see them being satisfied, being okay with a non-24/7 market. Like, I think that digitalization of these securities is just a matter of time. I think that, I think that once we get legitimate, sexy products on the marketplace and we get, well-established exchanges that have trusted followings and we clear it with the regulators, it's going to, it's inevitable and it's going to happen in the next few years. And, as time moves forward, people will not be using the stock market. People will be they'll ask, what is that? I own security tokens. I don't own stocks. That's going to be the future.
Thanks. Yeah. I mean, I think you're looking way into the future there. But yeah, it's interesting. And then we could get onto the whole DeFi thing if we had time, but we don't. But I think another area that I think is interesting is post-trade. I mean, if you look at traditional financial markets, what happened, I mean, although they're very digital upfront for trading, you know, what happens post-trade, there's lots of intermediaries involved. Everyone's got their own books and records, you know, the reconciliations that happen and everything else. It's all a bit of a inefficient nightmare. And actually, you know, blockchain, DLT technology has the potential to kind of sweep a lot of that aside and, you know, really improve efficiency, remove friction. It's not going to happen overnight. And clearly there is regulation that dictates that some of those functions have to remain. But, you know, over time that could change. But Mike, what's your view kind of looking to the future across all types of markets?
I think it's quite an interesting one. I don't think we're going to displace the existing exchanges. I think they're so large and they have so much capacity on them. I don't see them necessarily being displaced. I do think one of the things our chairman said, and he used to be a director of the London Stock Exchange, is actually some of these inefficiencies in the market benefit the exchanges, and that is because they can charge more for their services. So the more efficient we make our services, the kind of more difficult it will be for the new issuers and the new Amazons and Googles of tomorrow to go to these traditional exchanges and say, actually, if these people are doing it this way, why are you still doing it in this historic way? I think in terms of digitization, I think all exchanges are digital. I don't think that it really makes a lot of difference if you put a unit in whatever, the London Stock Exchange or a unit in any other exchange. You're just trading those units, and what they represent is really down to how you've created that security. So I do think that people will move on to it. I don't think blockchain is necessarily the evangelical thing that everyone thinks it is. Sorry, but I think it's a way of recording activities, and it's an immutable ledger. But I think it stops there. I think there's other technologies that can still record things. But I think the other thing that we've got to be mindful of is private blockchains, public blockchains, the cost of using a blockchain. I mean, if you look at things like Ethereum gas prices, it's just ludicrous. So how do you attract the micro investor when you want to do a transaction through Ethereum and it's charging $10 for a gas fee?
Sure.
So I think over time there will be kind of more quantum resistant blockchains that maybe become the security chain of the future. And I do think that there will be more collaboration between, or I hope there will be more collaboration between us small exchanges, so that we do end up rivaling some of the large exchanges and taking them on at their own game. Because let's face it, all of the innovation really happens within the small organizations. As you start growing larger and larger, you become less nimble and less innovative. So I think it's by working together across border, across different regulations, that actually we can come up with some fairly interesting concepts between us to drive it all forward.
Yeah. No, thanks very much for that. I can see Boris has popped up, which means we're pretty much at the end. If it's okay, I'm going to ask everyone for one last sentence, one sentence only, just on one point. Is that okay? That's, 2020 has been a bit of a challenging year for many, many reasons. COVID, obviously a key one. But 2021, hopefully is going to be a more normal year with a vaccine, it looks like, coming to fruition. So where do you think, in a sentence or so, where do you think the STO marketplace will be in 12 months' time? So as we're kind of going into 2022, what do you think the state of play will be? And James, I'll kick off with you.
I think that, in a year's time, things will be a little bit more established. Maybe regulators will stop focusing on COVID and start focusing on other things. And there's a bit more opportunity at that. I wouldn't say it's established, like fully established, but I'd say that we're a step on the road.
Okay, thank you for that. Mike, what about you?
I don't think it's going to be a massive industry. I think there will be listings. I think we've got to create some excitement within the industry, and we've got to use other people to educate people. We can't do it ourselves. It's too expensive, too time consuming. But I think if we can use the Mariah Careys, etc., I think that's where I see it actually posing as really interesting and creating new hybrid products.
Thanks for that. And finally, Douglas, I've been watching dawn rise over New York City behind you. There's now daylight. But what's your prediction for 12 months' time?
I think this time next year we'll have a couple of listings that are also trading on NASDAQ. I think that the things are going to move a lot faster than I think any of us realize. And I don't know if you remember how quickly email was brought into the world, or how quickly music moved from CDs to MP3s, or how quickly people got rid of horse and buggy and got into cars. But when you get huge moves like I think we're going to see in the digital space, they happen very, very quickly. Now we're all fortunate that we're sitting here with our baskets. And so we're in the right place at the right time, but I think things are going to happen a lot faster than we've expected. I think that the big breakthrough in the United States was the ability to do a security token for retail without any lockups. And I think that came from the INX token. And the SEC has described it as being sort of, now there's a map for everyone to move on the blockchain. So I think things are going to happen very, very quickly. Ernst & Young kind of gives us that idea as well, based upon the conversations they're having. So I think in 1 year's time, we'll have 2 or 3 companies that are sitting there and trading digital and legacy, beginning the migration.
Great, brilliant. Thanks for that. I kind of agree with all those points. I think also, and we touched on this earlier, we'll be talking much more about the issuances and much less about the technology, which is a great thing. And obviously, we'll all be trading pros and horse seamen. On that note, I'd just like to thank all the panelists. It's been a great hour that's flown by. Thanks to Boris for hosting, and enjoy the weekend, everyone.
Thank you very much.
Thanks a lot.
Thanks for having
me. Thank you everybody for participation. The panel was fantastic, and the points you brought were deeply insightful, and I'm pretty sure that you will be able to build these secondary markets for us all and to advance the industry forward. Thank you everybody for joining us today on Saturday for bringing this enjoyable conversation, and hope you all had a great weekend.
Great.
Thank you very much. Thank you.
Take care.
Bye. And we are ready to announce our next speaker. We are having today we are having Samson Williams. Samson is a crowdfunding advisor, and people often say crowdfunding rockstar who helps companies with doing the crowdfunding right. He's also the professor at several universities who teaches blockchain and blockchain crowdfunding to students, thus advancing our cause further to young minds. And last but not the least, Samson was also pioneer of space economy and one of the first people who are likely to benefit from the tokenized and crowdfunded future from the space. And with this, I welcome Samson to our stage.
There we go. Excellent.
Nice to see you.
Nice to see you as well, Boris. I was really engaged in the last session, and so I want to capture a couple of points. I think Michael Kessler, he summed it up well, and he summed it up best. At the end of the day, it comes down to data management. And so you're trading units. You don't need blockchain to trade these units. And so I forget the gentleman said, he says, let's talk less about the tech and more about the company. And so in this perspective of investment crowdfunding and blockchain and ICOs, STOs, TGEs, token generating events, when we talk less about the tech and more about the company, we can then focus on, is this business going to make money in the next 3, 5, 10 years? Will it be sustainable? Because if you take a shitty business and you put its unit of ownership on a blockchain, now you just have a shitty blockchain. And it's like, why did you do that? And so we really need to think about, since we're talking about investments, what is the business? Is the business going to make money? Is it going to be sustainable? Is it going to grow? Are you going to see that 100x, 10,000x over the course of decades? And so, of course, you can look at pick a business that you think is like, oh, Amazon, right? In 2001, it was trading at $3. Now the stock is up to 3,000. Could you have picked that? It actually doesn't matter if in 2001 you put it on a blockchain or a traditional stock certificate, and now in 2020 that didn't actually change the value of the share price. What changed the value of Amazon's share price is their infrastructure, is their business model, is the 13 or so other billion-dollar businesses, Audible, Zappos, Whole Foods, that they bought. And so just because you have a unit, a stock or certificate that's on a blockchain, that doesn't make that certificate or that bit of stock any more valuable. And so I really wanted to stress that, because Michael Kessler said it. You don't actually need blockchain to manage that bit of data, but you don't need blockchain to manage that bit of data of ownership, because then we can actually talk about, is this business going to be relevant? Is it going to be around? So I wanted to say that because no one wants to own shitty data. If you have shit coins, well, congratulations, you have shit coins. Having shit portfolio, just because it's on a blockchain, is still a shit portfolio. So I had to get that off my chest. And by the way, good morning. Super early in the morning here in wherever I'm at, Washington, D.C. But I was going to talk to you guys a little bit about investment crowdfunding. And so if you have a pen and a piece of paper, I teach at a couple of universities, University of New Hampshire School of Law, as well as Columbia. So I like to give people something to take away from this conversation. So the first thing I'm going to give you is 3 simple facts. Number 1, customers have more money than investors. I'm going to give you a moment to write that down, because it is absolutely true. Customers have more money than investors. The reason this is important is because who do you think pays back your investors? Who do you think, if you're an investor, who pays you back? It's actually not your business, it's their customer. So if you have Amazon stock, it's because Amazon stock is worth $3,000 or worth X, because they have customers who are buying their goods, products, and service. So when you're thinking about, hey, I'm going to raise money, you got to keep in mind, customers have more money than investors. And when it comes to crowdfunding, it's how do you connect those two? We'll get back to that in a moment. Point number 2, we touched on it a little bit. The future of capital markets is content driven. I'm going to repeat this again. The future of capital markets is content driven. And partially is I forget the gentleman who said it. We do need evangelicals. We do need celebrities to go out and talk about the businesses. I don't care what the technology underneath that denotes how shares are owned. Let's talk about their businesses, so that people can be like, oh, I want to invest in this business. I want to invest in that business. Excuse me. And so the future of capital markets is content driven, because when that business can go, when the pen company can go online and talk about this pen, and word of mouth spreads it, you're talking about it on social media, on Twitter, on Instagram, and then they follow up with investment crowdfunding opportunities. It's like, oh, do you want to buy into this business? So keep that in mind. That third point is raise money isn't earned. So if you're an entrepreneur, if you're a startup, if you're a founder, if you're an issuer, when you raise money, that's not earned. You actually have to pay it back. I want a 10,000x return. Your investors want a 10,000x return. And so it's like, oh, if you go out as a business and you raise $10 million, your investors are expecting $1 billion return. That's what they want. And so sometimes it's like, oh yeah, we're so excited, right? We're talking about blockchain, it's going to revolutionize the world. And it's like, but you run a shitty business. You're not going to revolutionize a shitty business. The shitty businesses aren't profitable. And so it doesn't matter how you denote ownership and said shitty, unprofitable business. It doesn't matter. You're literally just holding shit certificates or shit stocks, very similar to shit coins. So now that we've got those 3 things out of the way, let's talk about investment crowdfunding. So when we talk about investment crowdfunding, it's an issue or a startup. They want to offer an opportunity for the consumer, the crowd, what we call here in America, the investor, customer investor, the investor, to have a little skin in the game, a little bit of ownership, a little bit of pride of ownership in the business. And this is a big deal, because this is where, hey, what is the future of investing? Well, it is digital, but it's where businesses connect directly to consumers. There's a lot of conversation on the last chat about exchanges. And it's like, guys, I don't think you're really seeing the future of exchanges is happening on this device. It's happening on your mobile phone. the future of exchanges aren't NASDAQ, they're not Wall Street, they're not the Nikkei, they're WeChat, they're Baidu, they're WhatsApp. We're looking at where humans, customers, are going to be able to connect directly to businesses. And the medium that they use to connect to those businesses is probably going to be Facebook or Amazon. Because at the end of the day, if you're engaging in transactions, Amazon doesn't actually care if you're buying this coffee cup, this pen, are some shares in a business that is already selling you a good product or service on Amazon. So I like the last panel. They're like, oh yeah, the different stock exchanges, we're going to blockchain, da, 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 da. But I don't think they appreciate that the cell phone companies, Apple, etc., the apps that run on these, they also, when you digitize assets and you digitize records of ownership, those units that are going to be exchanged, are traded, anyone can actually become an exchange. And so when I say anyone can become an exchange, yes, there are some rules, there's some regulations, people be like blah, 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 blah. But you have to think about when you look particularly at Tencent's business model. And I think China and India are going to dominate the digital exchange market, where on one hand, you say, do I want to buy this good product or service, or do I want to buy equity or shares in the business who sells these good products or service? And that all happens seamlessly. That will all happen seamlessly on a common platform, on WeChat, on WhatsApp, on this app. Because again, when you digitize the services, you might be buying a good product or service, and then there's another button that says, do you want to buy 10% of the stock or X number of shares? We see this now when they say, do you want to donate to a specific entity or organization? That's just a regular old donation, but they're going to add another button that says, do you want to invest in the business that made the pen because you just bought this pen? And they're going to be able to fractionalize shares. You can already do this on Fidelity. Fidelity offers $5 exposures to FANG, Facebook, Amazon, Netflix, and Google stocks. Why this is important is because before, no one cared about retail money. No one cared about no one cared about customers. No one cared about what the customers of these billion-dollar businesses, they were not investing in the billion-dollar businesses. They were just buying their good products or service. And this is where when you talk about, hey, we're going to digitize ownership. Ownership's already been digital, and we may be using blockchain to make it easier for you to go to a point of sale machine, pick up a coffee cup, and then buy, in addition to paying for this coffee cup, also buy X number of shares in the business that made this coffee cup or produces the coffee. So that's the future when we talk about investment crowdfunding. It's customers have more money than investors. So we're going to turn your customers into investors, or call them investomers. Then through the future of capital markets being content driven, you'll see celebrities, you will see people in your neighborhood who get on group chats, who get on Twitter and talk about, hey, I just bought this really great product. You should too. Here's check this out. And then they send you a link and you see the product, so you can buy the product, or you can invest in the product, in the business that made the product. We see this on Shark Tank, where they're like, hey, I'm Shark Tank, I make coffee cups. But then it's like, there's only 5 people who get to invest in the coffee cup maker or the coffee maker. And this is when you digitize stuff, things change, it moves at the speed of business, and everybody now has the opportunity to become an investor on their mobile device. So it's not saying that capital markets aren't changing, that investment isn't changing, but I think, forget the gentleman who said it, the adoption is going to be like that of email. It's going to go from here to hockey stick very quickly, where now more people are like, yeah, we no longer use the NASDAQ. We just, we go on Amazon, we buy, sell, and trade shares of companies that we actually buy stuff in, because that just makes the most sense. So hopefully I'm not beating that too much to death, but it's very important, because you're going to hear a lot of hype like, oh, we blockchain this, we blockchain that. It's units of data. If you have a shitty business, you blockchain a shitty business, it's still a shitty, unprofitable business. And so the other thing, as we come to wrap up, I'm going to repeat this once, write this down. Assets on a ledger don't make the assets more valuable. Just because you put ownership of this pen on a ledger, it's still a pen. It doesn't make it more valuable. There's, of course, the hype. And you can look at it very similar, 2017 till now, to the early .com internet age. Humans were very excited. It's a lot of new technologies. They're like, yeah, we're going to get super rich. And then you have this thing called narrative economics that kicks in, where there are some people who do make a considerable sums of money, but they're very small. However, humans love telling the story of, hey, in 2011, my cousin who never had a job, he bought $1,000 worth of Bitcoin. And now in 2020, he's retired. He has $25 million. How can I do that? Well, that's a story. Humans love a story. The most profitable line in the history of mankind is once upon a time. And so once upon a time, someone bought X, waited a decade or more, and now it's worth Y. How do you get involved in that? So when you're looking at making investments, you have to think the hardest part of anyone's overnight success is the first 10 years, because you'll see all of the shit coins that came up in 2007, they flared, they burnt out. And I think that is great. That is phenomenal. That's awesome. Big round of applause, because we needed that education. We needed that outreach. We needed that awareness so that we could have this conversation. So for everyone who invested like myself, I was just throwing ETH into different ICOs. That's great. Eros.io, they got me for a couple dozen ETH. They raised about $42 million, and then they disappeared into thin air. And that's just the sheep getting burned, early investors getting burned, understanding this new novel, not only technology, but asset. And then it's like, oh, it's a new novel technology, but it doesn't make the business or the asset worth anymore. And so the $26 billion raised between 2017 and 2019 in the ICO market is great, because it's really just research and design. It's, hey, how do we inspire new ways of doing business? It was said earlier, innovation rarely happens in traditional bastions of finance, but now all of these billions of dollars come into the blockchain market, into the crypto market, which spurs innovation. And this innovation has led us to this point here in America, where recently the Securities and Exchange Commission, they've raised the limits on how much issuers, how much founders, how much startups could raise using Jobs Act crowdfunding. So I'm 100% behind regulated crowdfunding. The traditional ICO market is just, it's an unregulated market. Currently, when you fast forward to what you can do now, Popcom, a vending machine solution, they were the first company to raise $1 million in America using Reg CF. Reg CF is just regulated crowdfunding. In the Reg CF world, you can raise up to $1,070,000. They did it in 2018, 2019. Right now, they have a deal going on a platform called Start Engine, where they're doing a Reg A Plus for $5 million. And in this instance, you're not only getting equity, Class B shares, you're also getting tokens that you can use in their vending machines. Then Block One came and they did a Reg A Plus. Block One did everyone a favor because they spent $2 million through their regulatory processes. So fast forward through 2017, the ICO shenanigans of 2017, 18, 19, I smile because I loved them. Now at 2020, we're going into a decade where assets are digital. They will be traded easier on your phone, not on a stock exchange. Think Tencent, think WeChat, think Amazon. And now people can determine, do I want to go buy this product and then also invest in the company that made this product on this device seamlessly? And so this is where we'll have a much frictionless time, a much more frictionless manner of doing investments in businesses as well. And I think I have 3 more minutes. So Jobs Act has been updated.
You actually have 5 minutes.
I'm sorry, what did you say?
You have 5 minutes.
Just 5 minutes. Okay, brilliant. I'm trying to stay on track. So Jobs Act, if you're still listening, we're talking about investment crowdfunding. It's going to be exciting because when you have Main Street businesses able to connect with their customers, it changes the game. VCs are going to have a shit fit. Hedge funds are going to have a shit fit. When these small businesses, again, the story of Dawn Dixon and Popcom, had the pleasure of meeting her when she raised her first $1 million in a regulated fashion using Reg CF, and then able to raise her second $1 million. It changed the terms of how she approached VCs. It changed the terms of how VCs approached her, because her as a business owner, she had what she calls fuck you money. If you don't want to accept my terms, fuck you. If you don't want to invest in these terms, fuck you. And fuck you money changes the way startups are actually ran. because now startups can get to have a greater control of their business. From the investor perspective, you love this because now you have someone who cares about, is my business going to be sustainable? And so you will see where fans, people who are passionate about certain good products and services, they're going to invest and invest heavily, which brings us back to the space economy. And so as we digitize everything, you can't take paper to space. This thing right here, it doesn't go into orbit. And so when you're looking at the future, this is gone. And what exists is the opportunity for fans, consumers, everyone to invest in these off-world opportunities. This is the fifth industrial revolution. And so that's super exciting because finally you will see with the digitalization of infrastructure that customers can be directly connected to businesses in a more seamless way that the middlemen of exchanges never anticipated, because the cell phone companies, the app companies are going to put them out of business. And so there will be some institutional shift. There will be some fighting over, oh my God, these unsophisticated customers, how dare they determine how to spend their own money? And so the institutional guys will lobby against it. Meanwhile, the customers, they will vote with their dollars. And so as you're looking for businesses to invest in, just ask yourself, what businesses do I use? What businesses products make sense to me? And this is where we're really going to change the way investment gets done. There's a lot more things to consider. And I'm going to finally wrap up because I found my dollar. I'm going to talk about DeFi. DeFi is IP you don't own. You don't own any of the IP of DeFi. Look up Yearn Finance. I forget the gentleman's name. I think his name's Andrew. He owns Yearn Finance. Everybody using his version of a token, they don't own anything. So just because I have a dollar, it doesn't mean I own any of the US government. And so when you look at DeFi, DeFi is IP, intellectual property you don't own. And why that's important is because when we talk about revenue, if you're investing in a digital token of these things, you don't actually own the company. And so Ripple, for instance, they could drop XRP tomorrow and it not actually impact Ripple's business. XRP is just this sort of useless. It doesn't have, you don't have equity and ownership in that. So that's my final word. Keep that in mind. It's going to be a very exciting decade. And as always, you can lose all of your money, get divorced, break up, end up homeless. So don't swing for the stars. Spread your portfolios, keep learning, keep reading, and just approach every opportunity with an open mind. And remember, the hardest part of any sound investment is waiting that first 10 years for it to come to fruition. So my name's Samson Williams. You can find me on LinkedIn or the internet. Just Google Samson Williams. And if you're ever in Washington, D.C., shoot me a text or shoot me a Twitter, and we'll go out and have a beer, because I cannot wait to go back out and interact with human beings in social settings. So, Boris, any other final questions? Because I think I'm right at time.
I don't actually questions in the comment section. Thank you a lot for your speech. It was we have many people who's in blockchain space among speakers who suffer from the curse of knowledge, and they know stuff, and I assume other people know it as well. So they often may explain things too complicated for regular viewers, and I'm very grateful for you being very clear, very straightforward and simple in your explanation. And the point you made about storytelling is very mirrors everything that has been said before as well on these conferences, when people have been speaking on the panel about secondary markets, about the importance of having things people actually want, such as scotch or I don't know, horse semen.
Walt Disney has $1 billion empire based upon Once Upon a Time, and then they go from there. And so this is where, if you're gonna I don't care what your business is, you need to tell me a compelling story, so I want to give you my money. And if you don't tell me a compelling story, I'm like, I don't know you exist, number one. I don't know I can use your product, number two. And so you're just a shitty business who might have their stock noted on a blockchain, in which case you're a new shitcoin.
Thank you a lot for your speech, and have a nice day.
Bye-bye, beautiful people.
We'll see you one day in New York. Okay, and we are ready to introduce the next speaker of the conference, Radoslav Drago, the head of blockchain in Europe in the research organization IDS, who is one of the most deeply involved into studying the blockchain and adoption of tokenization and other stuff, actually on the level of research and on the level of actual data, and not simply stories and storyteller and hype. So I think this is something that we really need, the objective view. Radoslav, it's a pleasure to see you here.
Likewise, Boris. Thank you very much for having me. By the way, do you have, how can I share my, because I have some slides prepared. As you said, we're very much data driven and we have some numbers, and it will be a lot easier if the folks can see it on screen.
Yeah, below there is a button to share screen. It's,
okay, it's crossed. So, okay, yes. Hopefully it goes well. One thing in 2020 to go well. Okay.
Yeah, it
Let's
works.
see now. Okay. Fantastic. Perfect. You probably can see my screen right now, right?
Yes, I can see your screen.
Perfect. Thank you very much. Well, I hope you're all safe. Thank you for having me, for watching this presentation. Thank you for the introduction. Just wanted to add a few points. As you said, I lead the European blockchain practice at IDC, and IDC is an international market research and consulting company. We have we focus on the tech landscape, which and DOT and blockchain is just one of the technologies that we cover, but specifically within DOT, we do quantitative and qualitative analysis of the DOT industry within Europe. And we also look at business trends within that industry and what key topics will define its future. So a lot of research that we're doing, but the topic that I want to discuss today is a topic that I'm very excited about, and I'm pretty sure a lot of the people watching will be excited about, is asset tokenization, and more specifically, why I personally think that it will thrive in Europe. And just wanted to make a quick clarification here that by asset tokenization, I mean the process of converting ownership rights in a particular asset. That asset could be both tangible and intangible, putting those rights on a token, on a blockchain. And here I do not include utility tokens, so we are not talking about ICOs. The previous speaker has some, I mean, a lot of us has post-traumatic syndrome from ICO, so here we completely exclude them. But getting back to the topic of asset tokenization, why we thrive in Europe, I think that there, if we have to go more systematically into that question, we can look at 4 factors that actually can influence tokenizations, and I've broken them down into 1, DOT adoption, then looking at a macro picture of the DOT landscape in Europe and how healthy it is at the moment and where it's going. Second is the security token ecosystem. So do you have enough companies to support asset tokenization? And that includes companies that issue the tokens, companies that provide a blockchain infrastructure, companies that are the secondary markets where you can trade those tokens. So do we have that in Europe right now? Thirdly is the access to investors. Obviously, if there are not enough investors, then your idea will just remain an idea on paper. And if you have these investors, how easy it is for them to actually put their investment into your project. And last but certainly not least is regulation, which is one of the big stumbling blocks when it comes to asset tokenization. And we're going to look at what is the situation in Europe, whether it's hostile or whether it's favorable for the development of tokens, of asset tokenization. Without further ado, let's go through them one by one. The first is blockchain adoption in Europe. And as I said, here we're going to have a look at more of the macro picture in Europe. And this is data that we've, quantitative data that we've gathered through our research. First is the adoption rate in Europe. which is currently 16%. And this is not just our opinion. Every year we do a massive survey across the continent and across all major industries. We got nearly 3,000 respondents, and we can see that the adoption rate is 16% in Europe for 2019, which is quite impressive. But it's even more impressive if we take into account that that number has doubled in 2 years, in 1 year actually, from 2018 to 2019. And this is very much reflected in DOT spending. We have what is called the blockchain spending guide, where we quantify how much companies are spending on DOT technology in general. And we see here again that in 2019, it was about $800 million, and we projected to be 5.7 billion by the end of 2024, which is quite impressive. And we have taken into account here the impact, the negative impact of the COVID crisis. In fact, this is the highest growth rate of any major region in the world, because we do this blockchain spending guide worldwide as well. My colleagues in other countries provide that information, and we can compare it, and we can see that Europe is going to be the highest growing region in the world in the next few years, which is quite impressive. Not in absolute numbers, but in terms of growth rate. And last but not least, I just wanted to say here that we have the 40% of spending will happen in the financial sector, of DOT spending will happen in the financial sector. And we all know that when it comes to asset tokenization, finance and DOT development go hand in hand. So this is quite impressive for Europe as a region. And just overall, these numbers here, as I said, these are not just my opinion. We spend a lot of time and resources to get those numbers, but overall they show a very rosy picture of DOT development in Europe. But let's have a more micro look, or more specific look at the European security token ecosystem. As I mentioned in the second slide, that here, if you want to have a successful, well, any technology to flourish, you need a whole ecosystem of companies that actually support it. You need, when it comes to security tokens, you need several types of companies. You need companies that provide the blockchain infrastructure. This means the protocol on which tokens are launched. You need the issuant company that actually issue the tokens. You need investors. You need secondary markets, and everything. Each of these companies support each other in kind of in a virtuous cycle. So there was a massive research done at the end of 2019, which looked at the global security token ecosystem. And what the finding is that actually it's very much a duopoly at the moment. Most companies that kind of cater to that security token ecosystem are in Europe. Second is the United States of America. Again, impressive. Both of them have nearly 40% of the market. Together, it's 80% and less than 20% for the rest of the world. So we can already see that there's a vibrant ecosystem already developing. And just look at, if I can get your attention more on the right-hand side of the map here, we see that Europe has a nice mixture of countries. Some of them have very high financial sector development, and other countries which are not necessarily in Western Europe, countries like Estonia, countries like Malta, they've actually embraced DOT technology. They've banked on it, and they're putting a lot of investment, and are just more favorable to development DOT activity. So we have a nice mixture again of countries with high financial development and DOT activity, and we also have countries that have both, particularly Germany, Switzerland, and the United Kingdom, which not surprisingly have the highest number of these security token companies in Europe. But again, looking at the overall picture here, we can see that we have a very vibrant ecosystem that can support asset tokenization, and there is no, and we expect that to grow in the future. Moving on to access to investors, and as I said again in the beginning, this is not just about having these investors, but also how easy it is for them to invest. If we look at again a metric, let's say more objective metric, which is the Global Financial Centers Index for 2020, recently released, we see that within the top 30 financial centers in the world, 12 of them are in Europe, including London, which is the second most influential in the world. So you have a concentration of a lot of capital, and one thing that is unique to the European Union countries in particular is this scheme called passporting, which means that financial institutions and investors can very easily work or invest between European Union members. So there's very little friction, very little interference, and that enlarges the pool of potential investors in your project, which obviously is very important for any project to succeed. Moving on to the fourth one, which is probably it's close to being the most important one, regulation. Usually it is the big stumbling block when it comes to asset tokenization. Because in many jurisdictions in the world, there's just not much clarity there's not much clarity whether assets are actually covered by the existing regulation. Sometimes you have jurisdictions that are actually actively hostile towards towards this new type of security, which is in a way it's understandable. A lot of bad impressions left from ICOs. But if we have to look at Europe specifically, we can see that many, and the vast majority, I would say, of security token offerings, STOs that are launched are very much fall under existing EU legislation or traditional securities law of member states. And just beyond member states, for example, countries like Switzerland, again, it's very much, they have their own traditional securities law, and most STOs are covered under it. Unfortunately, at the moment, there is no uniform global European taxonomy of categorizing the different crypto assets. But the great news here is that less than 2 months ago, and at the end of September this year, we saw that the European Commission actually proposed a new legislation on crypto assets. And the idea here is to harmonize the different legislation in countries so it is more uniform from EU member state to another EU member state. And this kind of shows several things. First of all, obviously, it's good if you have uniform legislation that is very vastly similar from country to country, makes doing business easier, but also shows that the Commission very much believes that digital assets in general are very important for the development of the European Union, and they will very much invest into it, and they will very much create legislation that is clear, uniform, and not hostile to these new technologies. Again, they want to foster innovation, but at the same time, they also want to protect investors. So I think they struck a nice balance between the two. And what is very exciting when it comes to innovation in asset tokenization, the European Commission has proposed a regulatory sandbox for different use cases when it comes to digital assets. So a lot of companies and institutions can actually test different types of uses of digital assets in a, let's say, more relaxed regulatory environment. So this is very exciting, and I'm pretty sure it will produce a lot of innovation in that area, and kind of will push the continent forward when it comes to digital assets. Overall, I think that again, in contrast to many different regions in the world, they've realized the importance of digital assets, and they're trying to push it forward and be at the forefront of this industry. So this is very encouraging news. And the same goes for countries that are outside the European Union, like Switzerland and Malta, for example. So we have all these four, and just to sum up, to give the main takeaways from this presentation. First of all, we talked about the overall DOT industry, the health of that industry within Europe, and we saw that the adoption rate is very high, it's 16%, and we also project to be the highest growing region in terms of spending in the next few years. Second, when it comes to the blockchain security ecosystem, we see that more than 40% of companies are in Europe. It's the highest in the world, and Europe itself is a place where you can find many major DOT hubs. Third is the access to investors. Again, there's a high concentration of capital. Some of the largest and most powerful centers in the world are in Europe, and you have this schema, the passporting within EU states that makes investing in other countries much easier. And fourth, certainly last but not least, is that the regulation right now, there's a bit of uniformity between different EU countries, but it will become even more clear-cut. There will be a clear taxonomy on crypto assets, and there will be a regulatory sandbox for innovative use cases. So very much the European Union, the European Commission is banking on this technology and will support its future development. And when it comes to other countries like United Kingdom, Switzerland, and Switzerland, they very much support. They very much also support the development of digital assets. So taking all these factors together, we see that they reinforce each other, and it's kind of a virtuous cycle. So right now, Europe is at the forefront of the token industry, and we think that in the near future, it will grow even further and further cement its position. So hopefully I convince you that asset tokenization will thrive in Europe, at least in the next few years, and the future is very much bright. If you want to learn more about that or other topics related to DOT in Europe, whatever your industry is, we cover it. So I'll be really happy to talk to you. So you can add me on LinkedIn, or you can contact me via email, and I'm happy to pick up that conversation. We have some new reports coming up on EU legislation, so that will be exciting. And yeah, I'm really glad that I got the chance to speak, and hope to get in touch with you, and I'm looking forward to your questions.
Radoslav, thank you for your nice speech. We do have a few questions in the chat.
Okay, should I share my screen, or just maybe people have questions related to some of the numbers here?
Yeah, I can actually voice the questions for you so that you.
Oh, okay, sure. I mean, hopefully they are. Yeah.
One of the questions is, Radoslav, what are the practical implications for businesses from the fact that asset tokenization will thrive in Europe?
Right. Practical implications. So this means that, let's say the trajectory where things are going is very much going upward. And if you're a business that wants to get involved in that, if you want to become part of the security token ecosystem, now is the chance to jump in. And again, maybe you're a company, maybe you're an investor company that wants to get into it. Maybe you want to create your own platform to issue tokens. So it is early days, but it's not too early. And as I said, the future is bright. So I think it's a wonderful opportunity to kind of jump in and make that bet for the future. And as I said, the ecosystem is vast, so you can get involved in different areas.
Thanks for the reply. I also have a question from my side related to numbers. You previously mentioned that the DLT adoption rate in Europe, according to your is 16%. And I've been wondering, how do you calculate the adoption rate? So does it mean that 16% of businesses who could potentially use DLT already use it, or?
Yes. So as I said here, it's not even speculation. We have a massive survey that we do every year. It takes a long time to do it. Over 3,000, nearly 3,000, respondents. We look at different countries in Europe. We look at different industries, and we get their response. So we ask several questions. One of which is the adoption rate. So here we include companies that are just in the initial stages of using DOT, companies that use small-scale POC, and you have larger scale implementations. And as you can imagine, most of them on the smaller scale, most of them are on the POC side, but still, this is quite encouraging. We also had another question, which is how many of the companies are planning to test out DOT applications in the next 12 months? And the answer is 18%. So taken together, 16 and 18 will be 34. So companies adopting blockchain and planning to adopt blockchain. Now, this was done in 2019. And as you may have noticed, a lot of things have changed since 2019. So a lot of these companies may have second thoughts about using DOT, but just looking at the adoption rate, it's quite impressive.
Sure, and I hope the tokenization ecosystem in Europe will really kick in, and we see the adoption rate that everybody have been speaking about. Among other questions, there is an interesting question: could Europe have its own Silicon Valley for DLT projects?
I think there are a few centers of activity. I mean, the obvious answer here is Crypto Valley in Switzerland. But we also see smaller countries like Luxembourg and Liechtenstein kind of punching well above their weight. So I don't know if there will be something as powerful, let's say, as Silicon Valley, but I think there will be like smaller Silicon Valleys scattered throughout the continent working together. So I think, yeah, definitely. But if I have to bet in one place, it will be in Switzerland, in Crypto Valley.
Yeah, I would rather agree that we are not going to see a single Silicon Valley as we have seen it in the actual US.
Yeah.
There are many smaller Silicon Valleys related to specific industries. And this is, in many senses, great, the more democratization of capital and access to jobs.
Yes.
There is the last question so far from our audience. The question is, the legislation in the EU is not harmonized between jurisdictions. As far as I understand, it is about the legislation for virtual assets. How can EU issuers avoid this problem?
How can you repeat the question again? Because hopefully you're trying to avoid regulation. That's
the question is about solving the problem of regulation for virtual assets not being harmonized, and the risk of being compliant in, for example, Germany, but not compliant in Liechtenstein or UK.
Yeah. I think things are moving in the right direction here. And as I said, you can read more about it. But in September, you had this announcement that they are working on new legislation specifically for crypto assets, because generally right now asset tokenization is covered by existing traditional law, but there are some few gaps here and there for specific assets that could be technically STOs but are not covered by it. And that legislation that is proposed in September will actually target these specific cases. And the larger goal here is to harmonize it. So it will take a few months. So this will not take years, by the way. It will take some time, but it will be less than, I think, even months, less than a year for this new legislation to kick in. And then you won't have to worry. You don't have to worry that much about not being able to do business across European Union countries. So again, as I said, this is the future is bright, and things are moving in a more uniform direction in the future when it comes to legislation in Europe.
That's great to hear, and I assume we'll also have less regulatory holes when actually now exchanges, for example, crypto exchanges, can operate without being regulated at all. And the beginning of the industry, this is probably fine because you need them to start operating at least somehow. But now there may be exchanges in many countries without no regulation at all, and just saying, well, we are not regulated in our jurisdiction. We still provide service to EU investors as well, despite the fact that they should be protected by the EU law. So I hope we will see more harmonization in that sense, because it's time for the crypto industry to to harmonize somewhat and to consolidate for not following the rules to.
I fully agree here. It's sometimes having no regulation could be worse than having hostile regulation, and that keeps a lot of capital away from asset tokenization in general, because it's understandable. Investors are more risk averse. If there are not clear-cut rules, they may try to avoid it, and that we've seen, let's say, the negative experience from ICO rub negatively on using DOT technology in other fields, whether it's supply chain management, because people have this negative impression from ICOs, which were mostly not regulated. A lot of people got burned. So having clear-cut regulation is much better. So I fully agree.
Definitely, we needed this on the beginning of the industry to start working, but to really mature, we need to go to the next step.
Yes.
Rados, I thank you for your speech. This is definitely the most data-driven speech of the entire conference, and I thank you for your participation and for insights. And I hope it inspired a lot of our viewers to pursue their digital assets business, whether it is tokenization or investment or anything in the EU.
Yeah.
I hope they can use your assistance and your advice as well in this perspective.
Yeah, thank you very much. And again, if you want to discuss this topic in more detail and other topics related to DOT, hit me out on LinkedIn. My email is rdragov@idc.com. Again, any questions that you have, you're more than welcome to contact me, and I'm happy to answer them.
Great, thank you, and have a nice day.
You too. Bye.
Bye. Okay, and it's now time to announce our next speaker. The next speaker will continue the topic that we had yesterday on the panel 1 about marketing, because our next speaker is Kenneth Garofalo, the CEO of Block Relations, a PR and marketing agency for blockchain companies and digital assets issuers. So given the importance of marketing, additional input and additional content on that is definitely needed, and I am keen to hear Ken's perspective. So welcome at our stage.
Thank you very much, Boris, and I'm glad to be here. Thank you for having me. I'm going to just share my presentation now, if you bear with me. If you just confirm with me if you can see it on the screen when it pops up here.
Yes, there is an icon below for sharing the screen.
Okay, just one moment. Okay, just setting up the screen share. You can bear with me.
Yeah, I see it, your screen.
Okay.
Yeah.
Excellent. And it's full screen now, correct?
Yes, it's now the full screen.
Okay, excellent. So thank you very much for having me, Boris. I'll begin with the presentation now. So again, my company is Block Relations, and I am the CEO of that company. My name is Kenneth Garofalo, and today we'll be discussing the importance of marketing, developer relations, and community within blockchain in general and within digital assets. And this speech was particularly prepared for the Digital Asset Investment Conference that we're here today. I want to start by giving a big thanks to our partners, Stobox, Boris, Nadia, Ross, the rest of the team. You guys have been absolutely great. And anyone considering tokenizing equity, tokenizing an asset, creating digital assets, should definitely reach out to Stobox. These guys are great and have all the resources for you to accomplish your goals. So why is marketing essential to the success of a blockchain or digital asset? Well, in order to answer that, we must first really understand what is marketing. Marketing is more than just putting out a bunch of fancy graphics, once a month, once a week. It's a lot more than that. There's certain aspects of branding, reputational capital, and public relations aspects that cannot be earned overnight. Branding is something that you need to consistently drive your logo or your theme of your company into the mind of the consumer or the investor. This can be accomplished in numerous ways. Reputational capital is something that is earned and not bought. So this is something that can be generated from your past experiences as a business leader or your company's longevity, right? If your company has existed for many years and then, just recently you're exploring the new markets that digital assets can access for you, well, you might have this built up reputational capital already in the bank. Public relations is something that is an ongoing effort that you're going to need to maintain to publish press releases, get slotted in certain conference speaking spots, and sort of interact with the rest of your peers in the industry. So why do we need all this branding, reputational capital work? Why do we need public relations? Why do we need marketing? Well, will anyone invest in your STO if they aren't confident in your messaging, in your team, or in your product? They probably won't, right? You have to establish this level of trust. And in some cases, you have to establish a level of education, because a lot of the stuff we're discussing here with digital assets could fly over the top of the head of your traditional investor. And you certainly don't want to leave any money on the table when it comes to raising funds. And you don't want to leave any liquidity on the table when it comes to the secondary market, which is a very important piece. A lot of companies might market heavily around their STO or around their initial fundraising phase, but they may not continue those efforts when it comes to the secondary markets and the aftermath of that fundraise. So you might see the liquidity dry up on the secondary markets as an effect of that. So it's important to stay consistent and to always have a plan that covers the life cycle of your company, of your digital asset. And the same goes for blockchain, right? So will anyone use your blockchain if it isn't seen as the next big thing? So we use a lot of media to create this message and to create this image of a pristine project, asset, or blockchain to get people excited to come on board. And that's what marketing is all about. So some examples here of what marketing could be. We mentioned press releases, graphics, of course, educational content, which is huge, right? So you can position yourself as a leader in educational content, even if you're not specifically an educational company. That's something important to remember. Podcasts, video interviews, these are very important aspects to help humanize the executives of your company. People are much more likely to trust you if they can understand where you're coming from a leadership perspective, from a human perspective. So these are all things we want to establish through a marketing campaign. And I want you guys to know, the audience, that Block Relations does work with a variety of different companies and can work with you if you're considering tokenizing your equity or tokenizing your asset. We can work with you to create a marketing plan that will ensure success throughout your fundraise and throughout your secondary market lifecycle. So second, developer relations, they are key to innovation. So you might think that, okay, developer relations might not be that important to you if you're just a digital asset. You're not specifically a blockchain. Well, I want you to rethink that, because if you are digitizing your asset, you are inevitably going to be part of the developer community of a certain blockchain. You are going to be creating a smart contract that represents the token for your digital asset, for instance, right? So why do we need developer relations? And what is developer relations? So first, it's an awareness to get people interested, specifically developers. So developers are the backbone to any blockchain ecosystem. Without them, again, the platform may become irrelevant. So proper developer onboarding tracks allow for more devs to start using your blockchain. What this means is proper tutorials, proper walkthroughs, proper roadmaps on how to actually build on your blockchain. Certain standards need to be established. So for instance, in ERC20 or for Tezos, an FA2 standard for tokenization properties. So you definitely want to establish tracks so developers easily know how to start building on your blockchain. Collaboration, get people working together, right? So you want to establish events, hackathons, where people can come together and basically collaborate to optimize, enhance, and grow the surrounding tooling and documentation of your project. It's extremely difficult for a core team to be able to build out every piece of tooling needed for a successful blockchain ecosystem. So what you're trying to do here is provide a collaborative atmosphere so that other developers can sort of fill those gaps. And once the devs are excited about building, they will collaborate on their own, and you'll be really pleasantly surprised on the improvements to the process given a proper structure. So we want to establish that proper structure to inspire collaboration within the developer communities. Use case, get people building, right? This is the whole goal of establishing a strong developer relations plan, is you want to get people building on your blockchain. You want to be able to, again, provide those developer tutorials and walkthroughs, roadmaps, examples of apps being built so that the developer can sort of be inspired by what they see in those tutorials and then build on their own. And again, I want to mention this from a digital asset perspective. So although you may have just wanted to tokenize your asset and you don't really want to contribute much to the developer side of that specific blockchain, well, you still had to choose a specific blockchain to tokenize on. So let's say you tokenized on Ethereum or you tokenized on Tezos. It would definitely help you from a marketing perspective if you became an active participant with the developers in those communities. So something to keep in the back of your mind. And lastly here, community matters. This is for blockchains, this is for digital assets. Without community, blockchain and digital assets will go unused and have limited liquidity in secondary markets. This is huge, right? So the main reason that most of you are probably looking into tokenizing your digital asset is to access liquidity in secondary markets. But without anyone knowing you exist, right, this technology is relatively new. Will they actually use it, right? Will they actually invest? Will they actually trade the token, the digital asset? Probably not, right? So you need to give your community members a consistent place to gather and share information around your ecosystem, right? Whether this means meetups, whether this means Telegram groups, having an online presence, a Twitter account, for instance, a Discord channel. You need to establish these forums where the community members can come and meet, almost like you meet every once a week for religion or something like that, right? You want to build an area where people can come and talk and collaborate in. So you also want to give your community you want to listen to your community's feedback and follow through with their suggestions. Nothing discourages a community more than when you don't listen to their feedback. So you want, as much as you can, you want to be listening to the suggestions that your community members give. And a secondary option to that is giving your community members the power to vote. This could be from a blockchain perspective. Say your blockchain is proof of stake. Well, allowing the holders of the assets themselves to have a say in the direction of how the chain evolves. For instance, Tezos is a great example of this. Almost anyone you speak to in the Tezos community is going to tell you the number one reason that they participate in all Tezos related events or activities or forums is because that they have this sense of powerful community that's derived from their power to vote for protocol upgrades, for instance, right? From a digital asset perspective, maybe you're giving your investors the power to vote shareholder votes, right? So maybe it's a shareholder meeting and you're voting on the blockchain using the share of the asset the digital asset that's tokenized. So if it's not something that you've thought of yet, you should definitely think of giving the power to vote to your community, because it inspires them to stay active. So there are many different types of community members, and it's also important not to discard any one of these types. So the investor, the developer, the core team, right? The list goes on. It's just important to be aware that it's not just one specific type of person that you're the community. There is a diverse group of people that you need to cater to, and they might have all different requirements to keep them satisfied. And again, this is part of your marketing plan should identify how to interact with all these types of community members and provide longevity for their activity. And again, we want to be smart, calculated, and efficient in all of the efforts that we deploy to market our digital asset and to manage our developer or community relations, right? So we want to consistently evaluate and analyze meaningful metrics of our efforts, whether or not this is views, clicks, comments, search, or reach for our efforts. And again, us here at Block Relations, we can prepare certain analytic reports that will give feedback on the efforts that you're running either with our company or with your own company. So outside of just the planning and the execution, we also are able to provide you analytics reports for your efforts. And so what's the point of all this, right? Why do we need to put so much time into marketing, into community, into developer relations? Well, this is the answer, guys. It's the network effect. 70% of value creation in tech, top-tier tech companies, is derived from this network effect. Like I said before, the core team can only do so much. You're going to need contributions from the community members and from other developers to really gain the full network effect of the digital asset of the blockchain, right? Whether or not this means, again, the liquidity in the secondary market or how many transactions are occurring within your blockchain, right? You need that network effect. And again, this number comes from a study from NFX on tech companies from 1994 through 2017. So this is a long proven point for extremely valuable companies, top tier companies, that they take advantage of. And so you yourself as a digital asset should be taking advantage of the network effect. So again, my name is Ken Garofalo. The company is Block Relations. We would love to connect with everyone watching this here to help you start planning your release in the life cycle of your digital asset. We have video chat available. Our calendly.com/blockrelations is also available. The link on our website, blockrelations.com. You can also email us directly at contact@blockrelations. So we have a bunch of discovery we can do with you to get you on the right plan that works for you, whether it's a digital asset or a blockchain that you're launching. So please reach out to us with any questions. And if the audience has any questions for me right now, Boris, I would love to answer those.
First of all, I want to thank you for the amazing speech. The points, I would say, from all of the speeches we had on this conference, we had fantastic speakers from many powerful institutions. This one was either the most practical or one of the practically useful to issuers of digital assets. So I'm grateful to you for this. The point of education was great, and we found on our own practice that it actually works. We have a YouTube channel in Stobox, and even though it is small, we have 150 subscribers. We already get a few leads, one of whom transformed to client doing an actual token raise with us from the YouTube. So, and we often get feedback that this is one of the few places where clients can get the practical information on STOs, the real insights. So the point about education was, I would say, very clear. Yeah, we do have a few questions from the audience. One is about community, and the question is, how can projects expand their community? Because the communities often are very siloed. You have a few small communities. How do you expand from one to a second and third and get them to your ecosystem?
That's a great point. I mean, we're living in an age where this technology is global, so your community should be global as well. But what that means is that you might be dealing with siloed communities in different regions, such as Europe, Malta, Kyiv, Ukraine, Africa, right? Asia, and of course, US, South America, right? So what I would start with is establishing a plan on how you want to penetrate those global community markets, and then start by approaching people that show the most interest from those locations. You could start by geographically planning this out, and then sort of try to identify leaders within those specific geographic locations that can act as community leads and sort of self-organize, maybe with some funding or some direction. So really what you're doing is you're building a global community plan where you're establishing hotspots or hubs with leaders. It's, you know, leaders that you want to build up their reputation and make them well known within the greater community, the global community, that these are the people to go to if you wanted to, hey, I'm from Europe, but I want to, you know, I'm traveling to the US. I want to see if I can meet up with someone that's involved in my community. Well, I know there's a leader. Why don't I reach out to this point of contact, right? Well, they might tell me that, oh, you know, so-and-so is hosting an event. Why don't you go to that, right? So now I've got a connection point. Secondly, you should have a global event that brings together all of those local leaders from around the globe, at least annually, right? I would suggest biannually. So now you're exchanging ideas, you're innovating within the different community tactics that you've used in your siloed geographic areas. You're now sharing those ideas within a global conference, this biannual global conference, I'll suggest. So really it's about planning. It's about realizing that there are different silos and different thought processes within the different locations around the world, but you want to really try to grasp and cultivate a global community.
That's a great answer. Thank you. And we have one more question from the audience. The question is about the developer relations. So if you're running a project that is not a blockchain, but let's say a crypto exchange or a marketplace, you know, real estate or any other marketplace, then what matters to you is not developer relations, but the relations with, for example, professional traders and crypto traders, or develop relations with you know, sellers on the marketplace. Is it correct?
Yes and no. So of course you're going to have relations with those traders, right? That's going to be big for you if you are, let's say, an exchange, right? But I would like to say that you should also have relationships with the core development teams of the blockchains that you support, right? So this could mean you're trading an asset and that blockchain goes through an upgrade, and you need to change some of your documentation to make sure that asset continues trading smoothly on your platform. So you should have open communication lines with the developers from all of these different blockchains that foster the assets that are trading within your platform. So it might even be a good idea for you to establish events or themes that cater to these different developers within these different blockchain ecosystems for the assets that trade on your platform. And I would like you to also keep a note that sometimes these developers are actually the largest traders that exist, right? Developers actually get paid quite well. And if they're the ones founding some of these platforms or assets, they probably have a lot of these assets to trade themselves. So you're sort of hitting on both points when you actually focus on these developers.
Thank you for your reply. I don't see more questions in the chat, so that's probably all. Thank you again for your speech. Thank you for joining. Thank you for yeah.
I have one more point, Boris, before I leave. I'm gonna leave this little nugget with the community and with you here. Maybe you can think about this. So, with the rise of liquidity pools and DeFi products that we've seen coming out here in the last few months, I want people to start really thinking about what this means for security tokens or digital assets, right? The whole reason why we want to digitalize assets is to access liquidity on secondary markets, right? But you still might find there is not a lot of liquidity once these assets are tokenized. So I want people to start looking into how to use these liquidity pools to provide more liquidity to these illiquid digital assets that are still currently existing, right? You basically, I won't go into it now. If you just want to look up what a liquidity pool is, you'll sort of get an idea, and hopefully the wheels start turning. But I think this could be revolutionary for illiquid assets, especially security tokens or digital assets. So that's the final note I'll leave this on. Thank you very much, Boris, for having me. I really appreciate Stobox, and Block Relations loves working with you guys, and we are really happy to be here today.
Thank you for a great speech. Thank you for kind words about us. It was a pleasure to have you on this conference, and wish you all the best. Thank you. Yeah, actually, the last point about DeFi and security as a means for getting liquidity for security tokens was very, very clear to the point. I assume we haven't discussed it yet on this conference, but I believe there is a great interplay between decentralized finance and security tokens, specifically liquidity pools. While, for example, you can use security tokens as a collateral in the liquidity pools to get at the same time benefits of capital appreciation because you are still holding these tokens even though they are collateral, but on the other hand get liquidity due to having a token which you borrowed against these security tokens. And there may be even better models as well. So we are thinking and Stobox how we can enable, for example, something like Uniswap for securities. This is long in the making, and we are still considering whether this can be done in the legal field. But if we can do something like this is going to be huge. So stay tuned. And we now have only two parts of the conference left. One is the announcement of the media who won the Best Media Award, and another is announcement of the and the second is the workshop we are going to conduct to show you again the functionality of our platform, but now without internet connection problems. So let me prepare my presentation, and I'm ready to start the media award. Just give me a second to actually share my screen. So let me start from saying a few words about the award itself. It is not as simple, not as physical object, and even not a picture. This is actually a non-fungible token, but this token, the image for this token, the background, is generated by artificial intelligence, and it is generated from pure randomness, which means that this picture is unique, and there won't be the one similar to this. And it is very interesting to see the interplay between two cutting-edge technologies. On one hand, you have the artificial intelligence, and I wouldn't even call this artificial intelligence. The better name would be machine creativity, the ability for artificial mind, for computers to actually create the artistical things. And the other technology is non-fungible tokens, which allows the value of unique things to become tangible. We do already have things that have a value because of being unique or scarce. The collectibles, such as collectible cars we discussed in this conference several times, such as rare art, etc. And NFTs are the technologies that will have the most powerful interplay with collectibles and cars to allow their ownership and transfer on the blockchain and existence on the immutable ledger. And the interplay between artificial intelligence creating the unique stuff and blockchain enabling storage and transfer of the unique stuff is one of the disruptive ways in which the industry will develop. Now, going to the next step, I want to present all the media that supported the conference. Today on the conference, we are supported by Coins Telegram, the Tokenist, the Tokenizer, and Crypto News That. And probably some of you have come from seeing the announcements in this media. And we're very grateful for their support. And if any of you from the media is seeing this now, I am very grateful for speaking to us, for going through this conference, for sharing the information, and for guys from Coins Telegram and the Tokenizer for also speaking on the panel and sharing their knowledge and the experience they get. So you're the best, and we have an amazing experience working together with you. And now it's time to announce who wins the Best Digital Assets Media Award 2020. Let me have a of raising the suspense. The winner of the Best Digital Assets Media 2020, defined by the popular vote, who gets a unique award, becomes the tokenizer. As you can see from the vote, the tokenizer get 37% of the popular vote and thus deserves the award this year. So let's make a virtual round of applause to the tokenizer. Congrats to the guys from winning this great award. And I'm grateful to all of you for participation in the vote and helping us to define the winners. So if anybody from the tokenizer, perhaps Christian, who spoke on the panel on token offering success factors, is here, can join us, that would be fantastic. Administrators, can you perhaps pin them in the event chat? Do we have the Christian here? It would be nice to hear a few words. Okay, so it seems that they didn't join us, and I cannot blame them for that, given that the award is on Saturday. So we will notify them by email and in social media, and please give another round of virtual applause to the winners. They definitely deserve it for promoting the innovation and collaboration in the tokenization space. And now it's time to proceed to the last section of the conference, which is the workshop in which we will present functionality of digital securities dashboard, and we are welcoming Stobox CEO Jean Dave on this stage.
Hi, Boris. Hi. I hope the connection will be better, as we started wrong yesterday, went progressively worse from there. So I hope today will get better. Perfect. So I am
definitely sure.
Let me share my screen first and switch myself off as well. Okay, does that look fine? Boris,
I don't see your screen.
You don't see my screen yet? Okay.
I've seen it, but then it disappeared. So can you turn it on back?
Sure.
Yeah, now I can see it.
Okay, perfect. So again, thank you. It's a pleasure to present the functionality of our Stobox dashboard. We've been working for a while. It's a combination of legal, technical, and other efforts that have been melted into the one visualized project on how to deal and manage security tokens or digital securities, including identities, primary sale, secondary sale, and so on. So before we proceed, I just want to make sure that whoever is interested in learning more, there's a public link on the business documentation of the dashboard, which is hosted at doc.stoboxplatform.com. Please share that with the community. There's a lot of insights and there's a lot of information on functionality and available functionality and the future functionality. So there's a lot of information to digest. So the first thing I want to mention is that the dashboard is the combination of a centralized technologies that we're used to, like classical databases and the classical front ends designs with a combination of a blockchain technology built on Web3 protocols. So basically, we took Ethereum public network as the primary blockchain to keep the data on the securities, and we wrap it up with the centralized technologies in order to, first of all, maintain the legal aspects, like, for example, GDPRs and the rights to be forgotten. That kind of information cannot be stored on blockchain, but rather has to be deleted. So for that purposes, we utilize centralized technologies, whereas the immunity and the non-ability to kind of to change the transactions for the securities, that is built on the public chain of Ethereum. Again, we were thinking of working with the private chains, but there's a lot of legal aspects to that. So we decided to start with a public network. It's a common in the crypto world. So once we move forward from that, there's another integrations coming up. So the product we build, it's a SaaS model. So it's a dashboard that would be installed and set up for our clients. So our first STO, what we're going to conduct, is our own. So we test those technologies on ourselves, including technological part and the legal part. That will be done within this year. So as the SaaS dashboard, it has two front ends. So one is the investor's view. So how would your potential investor log in and manage the information and manage the purchase and the secondary sale of securities? On the other hand, it's the corporate view, which means that how company promotes the securities. Boris, can you hear me well? Is that fine?
Yeah, I can hear you.
Perfect. So there's two views, and we're gonna go one by one. So let's start with the investor's view. It starts with the registration. Meanwhile, I will input if Boris, if you have anything to ask or to say, I'll be happy to provide more info.
Yeah, you were perfect.
Anyway,
your introduction. The very important point of the dashboard.
Thank you.
Having centralized and decentralized infrastructures together. When you store sensitive private data on a centralized infrastructure, which you just cannot share on the blockchain, and the decentralized one, and on the decentralized, you store the information that has to be verifiable by everybody.
It's also very important to mention that it's one of the concepts that we use in the dashboard and will be used in further products. The concept where we take the wallet, the anonymous blockchain wallet, regardless the chain, if it's an Ethereum chain or other chains, and we actually assign that wallet to the specific person. And the specific person is somebody who has certain rights, limits, amounts, IML procedures, compliance, depending on the jurisdiction. So it's a very important when we're dealing with securities, we have to know who's that person. And once we know that and we're happy with further operations with that person, then we can easily assign him a digital identity, a digital number on the blockchain. So whatever he's gonna do on the front end, it means that this person does that actions on blockchains which are immutable. So by doing this and by implementing that that combination, we actually manage dealing with securities on chain. So we go for registration. That's important steps. Okay, so once we register, I will just simply go on the dashboard like this because I'm already logged in. Before we proceed to the dashboard, it's a very important aspect to say that you can't do anything on the platform. So if you're an investor, you register, you prove your email, but your next step would be your identity verification. So the system does not allow you to do anything but to view what the corporate would like you to see, but no actions can be done unless you verify. Again, as I said, we comply with international laws and regulations, and one of them is the GDPR. And GDPR is the European practice and the European law. Boris knows better than me, but that's something that you have to comply in order to store sensitive information on investors. So if you're keeping passport details, addresses, proof of any proofs, this data has to be stored on specific databases and located in certain countries. So it's a quite of work in order to comply with that, but we actually managed to do so. Most of the countries differentiate, and we know that differentiate between individual investors and accredited investors. Public investors and accredited. They can be named differently. In US, it's accredited, and UK, sophisticated, so on. But the difference is whether that person, like as accredited, allows to purchase securities, whereas the public investor, you need additional regulations. So every country has their own sets of regulation and distinctiveness between accredited and public. So this is the reference. This is the reference flow. On the future releases, depending upon the country, we will be able to, first of all, assign those accreditation mechanism to check. So if I'm logging in and registering as accredited investor from UK, I would have different limits than, for instance, accredited investor from United States. So that kind of parts of the legislation that we transport to the code. And that's something that Steve Tandon was saying earlier today, where once we could translate the law into blockchain, then we would have an immutable system which would be able to provide AML and compliance on air, on the chain. And that's something that Stobox works on. So let me continue with identity verification. It's a very important step here. As I said, a person has to provide an address that his identity will be attached to. In this version, we don't generate. We could generate a new wallet for investor, but we try to avoid that because we don't want to deal with people's and investors' private keys. It's this software. It's actually a software. It's not a regulated venue. So we try to avoid additional security in respect to private keys. So we don't keep private keys, and it's something that investor comes in already. So he just have to provide his Ethereum wallet address and a reference amount. This is a reference amount. So how much you want to buy of a specific security. I will show you later on by what specific security, what is meant by specific security. Again, this is a reference because once we get that inquiry, when the corporate gets that inquiry, they will be able to see how much that specific person wants to buy. And that would impose additional AML checks. So if I would buy for 1,000 euros or for $1,000, a corporate doesn't have to, to scan through my AMLs. But if I want to buy 100,000, that's an additional, different journey, and I would be asked where the source of funds coming from and probably some proofs. So anyway, let's keep with 1,000 and move on. Let me fill in. That's something that investor types in. Again, we perfectly know that there's a different types of KYC processes. Like for instance, in Germany, Europe, there's a one regulation on how KYC should be done. In US, it's different. In Asia, it's also different. So we just provide a reference here as it's a SaaS product. So we provide a reference flow. So once we have a client from Germany, of course, we would, instead of this step, we would impose an additional or further more complex verification, probably via our partners, because Stobox is an API driven, so we can connect to any local KYC provider and make sure we don't forget any nuances which are very important on certain localities. And let me do this first. It's a basic procedure which has to be, that's. Boris, how's my connection?
Your connection is perfect.
Perfect. I don't want to same as yesterday. Anyway, place of birth, nationality. And whatever we input, that information will be accessible to the corporate, because the corporate is the client who issues the STO. So here we have Stobox as a logo, because we will be issuing our own dashboard. But because it's a white label, so whoever our client is, we will be able to fully
dashboard can be customized quite significantly. So we can change colors, we can change all the necessary copyrights to fit your needs, and also add some additional steps which whether they are necessary for your needs.
Yeah. Okay, so let's fill in the reference KYC. Again, it can be integrated with any local provider. It's a very important step. Again, because we deal with securities, the flows are a bit different from the classical crypto ones, where people, can assign and buy and sell something within this, few clicks. Here we have to digest a bit further, because a person has to provide more detailed information if he is a publicly exposed person, if he's a political, if he is. Because again, all these rules and regulations imposed by FATF and especially AML's Anti-Terrorism Act, all these things are very important to take into consideration and account in the software. So once I'm happy with that, I'm not a terrorist and I'm not, laundering money, I will successfully file that to the corporate. So once the corporate logs in, I will show you later on, the compliance manager, so me as if I'm from the corporate side working in the compliance department, I will look at this and check if Gene is a decent person and can be validated as an investor. So once I am approved on a KYC level, my dashboard, my Stobox dashboard would look the following. So here on the left, I see my crypto balances. We whitelist only three cryptocurrencies, Ethereum. Why? Because you have to pay your gas fees, and for secondary transactions, because your securities are stored on the chain, on Ethereum chain. So whatever you're gonna do with them, you have to pay commissions, which are in Ethereum. So that's why you have to see your balance. USDT, it's a stable coin, so we use it. First of all, it can be used to pay for security tokens. There's different regulations on that. For instance, in the US, we try to avoid that, even though we're a US company, whereas in different countries, it can be treated differently. But again, we treat USDT as the payment token, and regardless whether the issuer accepts crypto or fiat, the settlement is done in US dollars. So regardless how much I pay Ethereum for that specific security, my contract and my legal contract will be done in dollars. It's a very important. So that's a stable coin again to provide the flexibility for the payments. And we also recently we've launched a Stobox utility token, which is used as the commission token for our operations. So our clients can first of all pay commissions in this utility token, and secondly in our further products like Stobox Exchange, and we also work on the decentralized exchange for securities. That token will be used as the gas. So obviously we see that here. In terms of fiat, and we can see we have a fiat integration, fiat balance here. We're not a regulated venue, so we don't plan to actually be one. So we're not a money provider, so we cannot provide our own accounting in USD. But what we can do and what's our plans is the integration with the INEO banks, or whoever is providing a PSD2 directive API from the financial institution providers. So we have a couple of companies who would like to integrate with. So once the integration is complete, I'm as an investor will be able to, within few clicks, because again, you have my information on my KYC, and that data can be shared with a specific financial provider, so the euro or dollar accounts can be integrated here. So you would be able to pop up your fiat balance into Stobox, into your wallet here, but it's not the wallet that we hold, it's the wallet like IBAN number to you by a specific financial institution in Europe or in US. That's something that is in our pipeline for 2021. So it's a very unique feature, because once we do that, we will be able to provide delivery versus payment on a fiat basis apart from the crypto. It's a very important for settlement, security settlement. As I said, our stock, our securities are stored. The Stobox demo common stock, that's actually it's the demo stock. It's a demo contract. I will explain a bit further now. Is the smart contract that holds our securities, and we can, by managing that with our identities, that's how we actually send shares or allocate shares to our investors or shareholders. So by looking at this, we can see there's 3 anonymous wallets which hold over like from a total amount of 1 million shares. There's a ticker. Again, it's the demo stock, but it's built. It's a bit different from the classical contracts that people are used to. with the utility tokens, and the difference is the functionality. Actually, this is auditable, so whoever would like to see how that contract works, you can actually go on Ethereum, find that specific security, even though it's a demo, and actually see what are the functions. And let me just show you the references on the functionality, because again, as I said, there's a lot of things which are done on centralized part of the venue, but the most important are done on the blockchain side, like whitelisting. So if I'm the person who, am I allowed to have that specific tokens on my account? That would be assigned by the corporate who runs the whitelisting function. Because we're dealing with securities, a corporate should be able to manage them. So by managing, you can burn them on third-party accounts. You can block them. For instance, if the person, I don't know, everything was fine with him, but he somehow failed to provide additional KYC data, and he was accused of, I don't know, money laundering. So what we do with that client? Do we allow him to continue to sell, to liquidate his position on the market, or we have to block him? So all of that different functions and types that the company has to do with their securities to perform corporate governance, that is implemented in the first version of the contract. That's will be public very soon. Again, that's something that we're working on, because the limits and the whitelisting is not the only functions which will be done. We, again, as a start, we're overseeing regulatory layer. So that's something that we can whitelist the rights in every country that we would like to run that system. So once everything will be on chain, then we can actually provide the secondary trading with much easier, with a DEX. So that will be a decentralized exchange.
Adding these additional functions to simple ERC20 actually solves the custody issue of security tokens, because we all know the problem. If the investor loses private keys to his wallet, then the tokens are lost. But on the other hand, we don't want to give the complete control over this wallet to a centralized institution, to an issuer, to a broker, etc. Because now this private key becomes compromisable. It can be hacked, it can be lost, there appears opportunity for fraud, etc. And thus you create a system of checks and balances. Tokens are still stored on the wallet, and the private key is not only to investor. But on the other hand, issuer has an ability to burn tokens or to transfer them to another tokens in the case the wallet is compromised and lost. And for every transactions and the issuer cannot abuse this right, because every transaction with security tokens has to be signed, accompanied by signing legal documentation. The Gene will show you on later stages how purchasing securities has also been accompanied with signing contracts, which means that you have three aspects: the technology, the centralized technology, decentralized technology, and legal aspects balancing each other. And even if one of these fails, two other still keep alive and running.
Thank you, man. Absolutely. Let's move on to the next. So again, that's the investor's view. So once I'm ready to invest, my account has been verified from an email standpoint and KYC verified by the corporate. My Ethereum wallet is verified. I see my balances here, so I can move on. By moving on, I would like to learn more about the company that I would like to invest in. Again, it's a SaaS product, so it can be customized for crowdfunding venues. It can be customized for SMEs, for any company. Here, it was customized to Stobox, and within our STO, we're overseeing our common stock. So our investors would learn about us from that specific page and would be able to learn about because that infrastructure is deployable to different domains. Here we have it's an app domain, STBX, but we will have it, like for instance, digital securities ds.stobox. So if there was a, I don't know, Plaza Hotel, that would be a ds.plazahotel.com. So, and it will be customized. So the Plaza Hotel would go to that, investors would go to that specific page and register there, pass KYC, and then manage securities. So this is the page which was customized for Stobox. So what we can see here is it's a C Corp, United States, some public links, overview. Here we have a corporate security. So if we, let's say, and it's a great concept, I love it so much. I think, I mean, it's a very traditional, first of all, it's a very traditional to sell stocks, but now these days we can segregate certain revenue streams and provide revenue share from different activities. So whatever securities I would like to, or the company would like to issue, those securities can be listed here and should be listed here with the different tickers, with the different types. So here's the common stock, but could be revenue share, fund unit, BAT, anything. So any type of security could be stored here. So your investor can differentiate, and instead of purchasing your stock, probably will be interested in purchasing part of your revenue on certain operations. It's very important to differentiate between moving your stocks to blockchain and actually create an offering. So those are two different processes. It's not necessarily that a company that moves their operation to chain in terms of their securities necessarily seek to go for STO. Like for instance, we have a potential client from APEC countries, a company that doesn't, they're not raising money, but they have 5,000 investors and different revenue streams. So they need a system that would allow to better manage those 5,000 investors, because their compliance and KYC departments that just go ballistically overheated. And so at the same time, they're not doing an STO. So that's something that also can be done. So you don't create an offering, but you manage your securities on chain. And again, this system allows you to do so. But if you decide to create an offering, that's something that has to be separated and separately, first of all, legally constructed and technically constructed. So what we can see here is an active investment opportunity, which is a public offering of the common stock with a certain features and parameters of the physical security. So it's an equity that would allow dividends. It doesn't have voting rights. It does not allow revenue shares. It doesn't have any specific conditions. Again, these variables are edibles. So we can, once the industry gives more unique features, we will be able to develop that further. So something like IP rights, which was discussed today's on the panels. So any types of parameters can be visualized here. Again, because its securities are very important for investors to provide a decent and digestible information for investors. So I think that's a corporate obligation. So we have a certificate of incorporation, certificate of good standing, articles, offering memorandum, decision boards. So these are types of, there could be any amount of documents, but those documents are very important for the investors to make certain decisions. I would not go and invest into a company which does not provide a free, public, digestible, and clear information on who they are and what they do.
I want to add that
so
you can
that's
use this step
something that
to file your quarterly or annual reports of the company with investors. That is the is and can be expanded as a comprehensive place to conduct all the types of communication with investors, including the reporting.
Absolutely. Management team is also very important. So again, it's a very interesting combination of classical security sale with with long unreadable prospectuses mixed up with public marketing, if you can say. So again, I think it's a new trend of how you actually promote your company to public investors or to any type of investors. So once I'm happy with Stobox, and actually I would like to invest into securities, I go the next step, and that step is investment opportunities. So as I said, if the company has more than one, they'll be listed here. So I can differentiate between them and make my decision. So if my decision is to buy, I will go and proceed further. That's a 4-step procedure. Let's fill in. So in the beginning, when I was filing KYC, I provided a reference date on how much I would like to invest. And I input the 1,000. So the KYC check, nothing specific. But for instance, I'm putting here 100,000. First of all, it's over the limit. So there is a certain limits that were imposed on me on the process.
Yeah, as Jin mentioned,
would be stored differently. So there's a part of the limit that is stored on centralized functions, centralized part, and some of the limits would be stored on the person would like to manage his securities outside of Stobox ecosystem, like directly writing into the contract or directly sending, he would not be able to. That's a very important key concept. Yes,
yeah,
Boris.
just wanted to mention that this investment threshold is defined each time depending on your needs and your specific of the company. So there is not a clear guideline that the investment at which you don't check the source of fund below 10 companies, it is about $20,000, and for some it is 5, depending on your jurisdiction and your risk level. So depending on your needs, you set up the threshold that below this threshold you don't check the source of funds, and above you do. And it also depends on specifics such as, is the investor a politically exposed person, or that the amount he or she specified that is going to purchase in the KYC and the actual purchased amount match at least approximately. So all of these are factors that impact your decision, and you should adopt a risk-based approach advised by regulatory authorities.
That's absolutely true, but we have let's say as Stobox, we perfectly understand that kind of information is very difficult to gain and kind of collect, and most of our clients that are coming to us and saying, guys, what should be done? We need to do that and that, but how? So we throw a 1,000-question page on them. Once they finish, actually our legal department is able to process that information and give you the result, depending on where your depending on the goal. So what type of the company you are, from where you would like to find investors, what's your tax regime, what's your regulation, what's your budget. So all these things taken into consideration will provide kind of the best solution with the technical and legal implication on that. So what we see is the best for Stobox Technologies Inc. registered in US. At this second step, it's a very important step. It's actually a stock purchase agreement. It's a stock or security token purchase agreement. We need to change the naming, but that's the physical agreement that a person has to sign. So once I agree, this document will be stored, generated as the PDF, signed with my IP. It's not by law. This signature is legally validated, which means that I can no longer say, sorry, I didn't know what I was doing. I'm, I never bought those kind of securities. It's not a money laundering or so on. So yes, so once we have that confirmation, and we have that timestamp, we have that IP, that session, we perfectly know who you are, what's that person, what's his blockchain address, that's a legal information. So that's a very important to understand. Once we're happy with the document and are serious in our investment, we can choose the payment method. Again, as I said, there's a different type of methods, wire transfer. That part is easy. The corporate will just issue an invoice with the amounts that you have selected. So the price of the security token is $1, and I input 10,000 as the amount. So the invoice will be generated for the $10,000, and I will have to go to my bank or use my whatever virtual banks and wire that money to the specific company's address, to the bank accounts. I will know. Branch, because that's kind of simple. So I will show you how the corporate sees that request and proceeds that request. I'll do that a bit later on. But now let's move to crypto transfer. At this stage, at this specific V1 version, we have not integrated the Web3 protocol to the investors dashboard yet. So, which means that I have to go to a different wallet or to different, physical wallet and send those amounts. It's either Ethereum to pay $10,000. So I need 2169.67 Ethereum to pay for that, for my 10,000 shares, or I'll be using USDT. But upon the release, we will integrate the Web3. I will show you a bit further how that works, so I can actually pay directly on that page. So once I will pay, I will have to input the hash if I did it manually, or if I will pay from the infrastructure, the hash will be automatically assigned and stored, which means that, yes, it was me who did the payment from that specific IP at that specific time, signing at that specific agreement. So it's something that a regulator wants from a legal standpoint. So let me just put on any hash and proceed. So once the manager of the company would look at this, they will assign me certain, the demanded securities. And here is the last part of the personal dashboard. I see all the transactions. So that's something that was already done. So that was my request for 10,000. The receiver is Stobox Technologies Inc., and I'm the sender. The transaction was approved, and what do I see here? I see the balance. So that's the balance which comes from the chain directly. So we don't store that data. So if Ethereum wallet, if your securities, if you would send if the balance changes on your wallet, you would see that here. But obviously, if you don't compromise your private key, nobody would be able to do so. So, and your legal agreements are stored, as I said, as a PDF. They can be stored here, viewed here. So me as an investor, I would have an access to my legal documents and my security tokens and my balances and whatever I need to do to continue being investor of Stobox. Again, we don't have a sell button here yet, and the reason is the secondary market challenges. Again, there's a number of those from a regulatory standpoint to technical standpoints. But if you look at not at the crypto habits, but if you look at the classical securities flow, most of US securities, if they're sold under Reg D, they cannot be resold within the first 12 months. So, or you have to go for additional qualifications like Reg A and further. So we don't do that. So we have a limit for our investors. If they come from US, they won't be able to sell our securities, sell our common stock for the first 12 months. So it's not very critical that we don't have a sell button here. But again, in terms of our clients, if our client is a regulated venue and they have a Reg A, or in Europe, their prospectus has been validated. So if their business model and they're legally allowed to sell their securities from day one, that's an easy to accomplish. So that the secondary venue is in the development at the moment, but further down the road we would be able to deploy that and give access to our clients.
Connection is fine.
Boris just wants to make sure that the connection is fine and everything goes well.
You are just rocking and looking forward to continue.
Perfect. Thank you indeed. So okay, that's and that's something that we also oversee is again, it's a reference, but the banking account. So once the dividends will be distributed, you would be allowed to choose on how you would like these dividends to be sent, if it's a bank account or the crypto. So if I'll be willing to receive my cuts to my personal bank accounts, I can easily provide information here, and the corporate manager, upon the distribution, they will be using these accounts to send my money to. Okay, so that's how our investor sees the management of the system, and let's look how the corporate would see the system. So it's a registration for companies. We register them. We register them within the. So there is automated registration, again, because it requires a lot of legal, technical, and other business details. So there's no point in provision of a separated registration for a company. So you just have to email us and become our client. Can you say it again, Boris, please?
Said, anyways, there is no point in you registering on the platform you own, actually, that you own and you operate.
No. I perfectly understand. What I mean is that if you're a company and you would like to do an STO, you don't have an access to just register your company and deploy that. So it has to be done manually. So you call us and say, hey guys, we need to do an. So and customize and deploy. So like with the investors view, a corporate is able to manage their security. That's how they can be distributed to shareholders, to new investors. So the management is the primary function of the dashboard from a corporate standpoint. So we oversee three. Which means my shares or my security tokens will be stored on a hardware device. You know, I have an office. In the office, there's a safe, and I put my ledger in the safe, and I know that my shares are stored in the safe in a blockchain wallet. So I'll be happy and safe. So there's, you know, we have potential clients with that kind of vision in their heads, and we're perfectly happy with that. Anything that makes them happy, if they feel that it's enough security, or I can manage by accessing the Web3 via a private key provision. So, for instance, it's a small company. I hold my own kind of. I'm a treasurer in the company, and I hold a private key from my. Sorry, there's additional sounds. But anyway, we'll be using MetaMask as the gateway to Web3. Let me just see if the connection is fine. I can see it's connected. So let's look at the management side of the dashboard. So we have a set of functions. Again, all these functions are neatly described in our documentation file. So if you're interested in further details, please go and read. Anyway, we have a dashboard, transfer, manage, offerings, transactions, and settings. But let me go step by step. So the whitelisted account, so any corporate has the blockchain wallet assigned to them and legally assigned. So if you're going to do an STO, there should be a paper saying, I mean, from different jurisdictions, they could be called differently, but the paper should say the following, that this is my primary source of whatever, of my shares or their revenue streams. So this wallet has to be legally recognized on your papers and translated to the authorities in some cases, or anyway just declared that's the primary. So once you do that, all the transactions and all the holdings within that specific smart contract becomes your primary source. And we have a whitelisted wallet. So here I can see that I have three types of balances with some amounts on them. So I have a $78 on my Ethereum. I have $200 on within Stobox tokens. So that's my corporate cryptocurrency. Again, it's a different journey depending on the different regulations, whether a company is allowed to have that kind of balances. But again, it depends on the local regulations. Anyway, that's the balance that is stored with you on your corporate wallet, which is whitelisted. Okay, so once I did a KYC, once a potential investor registers and passes the KYC, there are 4 types of statuses that the person can be in the system. He can be not verified. He could be suspended. For instance, we find out that on his wallet, there is some malicious action. So this wallet is in the blacklist, on the scam list. So there's actually, it's really cool that that Ethereum ecosystem evolves, and we already have an AML automated automated softwares that would provide us with a clear view on who was that person. So, like, imagine we're whitelisting a blockchain wallet, and we have an ability, an API to scan malicious activities on that wallet, and we find out that that person, let's say, money launders in Asia. So what we're gonna do? We're gonna suspend his account and then figure out what to do next. So that type of things, which are very important from the AML standpoint and the regulations, they're already implemented on a conceptual, first of all, level, and it's already implemented on a product level here as well. So, but the Masayoshi-san was, he's a public investor, so he was verified. There's no problems with him. So once he was verified, he, as I showed you, he could go and proceed with his investing. And I will show the process a bit later, but once the person buys and becomes our shareholder or our token holder, we can see him from the registry standpoint. So that's the security we have. So if we have multiple securities, there'll be a list of those. But we have only one, and it's a demo. And we see the registry, so that's actually our cap table. We see the wallet, the first and the last name, and we can open that person and we can manage his data. So we know his private information, his locality, and I am not, I mean, within the flow, I may not be a person who could validate accredited or sophisticated investors. So I should be able to send us data to additional verification, and that's also overseen because we have potential integrations with the selected KYC providers. So you can choose the provider depending on again, that's a reference payment, but depending on their volume, different providers can give you a different pricing. So I would choose the best price, and I can pay. Actually, I can pay with a Stobox token. Let's try to do the following. Voila. So I see, actually, that's the MetaMask call, but if I would log in from the private key, I would even not see that. The process will be sleek. So let's just confirm. Voila. So I just sent the Stobox utility tokens to pay for extended KYC for KYC check for that specific person. Once we have a Boolean result, yes or no, if the person is decent, he will be verified automatically, and he will be received an email that Gene, happy you are verified. Or if a KYC provider fails to check him, the person will not be allowed here, so he will not be able to do any operations. Again, we have these documents here. Very important, we have primary market limit and a secondary market limit. So these are types of limits that are stored on chain. So imagine we are releasing any company releases their stocks, but because it's a private company, and they may limit the secondary, or actually disable a secondary market transactions. I see that's confirmation for the payment for my KYC. Again, it's the mixture of Web3 technologies and a centralized frameworks. So it's really cool to see that combination. Again, you can learn more about secondary limits from the documentation. But if you want to stop trading of your private securities, you just create a zero limit for everyone. And if I am a potential investor, actually I'm an investor, would like to sell, my chunk to Boris, let's say my 1,000 shares, I would go to a corporate and say, guys, we would like to proceed that kind of transaction. Please allow us. And the company would make that decision, and then my limits could be altered, and that process could be accomplished from the technological standpoint. But if you're happy with trading and the secondary trading, I mean, your regulation does not require to stop that or to limit that. You can actually create a billion limit amount and make sure your investors are happy trading. Again, we have disable function, suspend function, and re-KYC. So every year, if I would like to, at any point of the investor's life, I would like to kind of re-KYC, I'm able to do that here from the interface. Let's look at the transactions. Let's continue with that. So there's a 4 different types of transactions. So they can be approved with crypto, with incoming payment crypto, approved with incoming payment of wire, or they can be new or processing. So let's look at the first one, crypto, where Gene actually STBX common stock for $10,000, he paid crypto. This was approved. So that's actually a check which will be exported in a PDF format, so I can validate that along with, remember, I've signed a security token purchase agreement, so that's a receipt. So those 2 documents will be valid. Actually, they validate my purchase. I can go with that into court. I'm an official investor, so I just, it's not just buying any token on the web. It's actually a physical purchase and a legal purchase of securities from the company, and that's the check for that. So there was a request for 10,000. The incoming payment was a the transfer was exactly 10,000 STBX at the price of $1 each. We're happy with the transaction. We have an identical receipt for the wire, but instead of a crypto, I have my balance, my bank balance was credited for that amount. I received 850 euros, so I've checked and see that money coming from that specific investor, so I can assign security tokens to him. Again, as I said with the fiat balances in the beginning of the workshop, it's very important to integrate with IBAN accounts providers, with the financial providers. And in this case, we can do delivery versus payments. So I will not go and check for the balance of 850s on a different venue, but I would rather see that amount coming directly to my dashboard. And once I see that amount, I can automatically call send function of delivery versus payment. So I start the delivery once I receive my payment, and again, it's possible once we proceed with and complete integration. Okay, that's the approved transaction, but let's see what's with the Edward Forster. So he made an inquiry for 2,600 shares and actually wired that amount to us, but we don't have that we don't see that on this venue. So we go to the bank and see and make sure that we've received. But let's say we received, the request was 2,600 euros, but because of the commissions, we received 2,000, let's say 2,000, voila. So I will not send him, okay, that's in dollars. I will not send him the amount which was allocated, but I rather send him the amount which was paid. So I will have to input that data here, double check, and this is the amount of security tokens. Let's confirm. And okay, the next step. I just want to make sure that the investor is adverted and his email, his wallet is decent. I can copy, paste, and just, check if I need to do my, kind of further checks before I proceed. I choose my securities. So that's my token on the chain. I have that number of security tokens. There's my limits, which are implemented. Me as a corporate, because we deal from the corporate side, we have no limits, so that's the reference numbers. But once I confirm, again, I see my MetaMask calls. I see that amount of specific of my securities, and I simply confirm. So this amount of security tokens were successfully sent to Morgan. And why I'm sure, because we just created a hash function. So we have a proof of, this is the hash link, of sending 2,550 tokens to that specific address. So that's a blockchain receipt which validates the purchase. So once that is done, we can now we have that information both in a centralized venue on a part of the dashboard and decentralized. Let's look. So if I, as the manager, I can either operate with my transactions from the transaction part of the dashboard, or I can simply go through transfer, because if an investor sends you an inquiry, that would be an incoming transaction, like a knock to you. But if me, for example, we have a off venue agreement with Boris, and we decide to distribute our common stock without any kind of procedures of the purchase. We just want to send them to each other. We just choose the recipient, make sure the wallet was whitelisted, choose the security, enter the reference. For example, we created a board decision assigning another 1,000 shares to us. So I would go and say, this is the board decision. I would enter amounts of security tokens. Let's say we assigned 10,000. I would proceed. It's either payment received. If, for example, we received a payment in cash. There's a lot of conditions where it can be the case, or it's a free of payment. So with the case where we share with Boris, like, and it's an option plan, it's a free of payment. So the manager of the system, the treasurer in this case, he allows to send those securities to that specific person. So again, we just sign that, call the MetaMask, and see the specific amounts of securities being transferred to anonymous wallet. But here we see whose that wallet is. So that's the transfer part. Also, that part of the dashboard is not ready yet. The reason is before these functions has to be available or have to be available, we need to conduct further STOs. because this is a secondary or the management of the existing digital securities. So if you want to issue more, for example, we created let's say 1 million common stock, and we decide to, let's say, create another 1 million and sell them regardless. So we need to translate that function and to the dashboard. So I would issue and I would create new securities here, or I could redeem. So for example, if I have, like a bond, so we just released the bond and now we need to redeem the bond. So it was all paid out, and now we would like to redeem that. So those functions again are secondary functions for the dashboard. So that's why we are not putting it as a priority. From the offering standpoint, again, you as the company cannot deploy the offering here from your dashboard, but it's done via our internal management. So all this has to be verified and synchronized with the customer, with the issuer, and once that is done, our customer will just receive that nice form in a form of front end. But further down the road, there will be a more semi-automatic STOs creation. And again, the creation of STO would depend on kind of two aspects. First of all is the legal aspect and the technical. So the technical part we can deploy, but in terms of the legal, we oversee. We have a set of partnerships, legal partnerships. So if I will be deploying and creating my STO. I will be filing my old data here, and once that is done, that information could be sent, or this information could get access to a legal provider. He will double check that everything fine, make sure, signs that, and once the legal provider actually validates that data, this data can be shown as the offering on the venue. So this process could be done semi-automatic with the verification of a qualified legal provider, and we would be able to build the technological stack for that. Again, we have an offering. It's a registry. We just move and see how many investors participate in that. Again, there's nothing which may look complicated. We perfectly understand that the UX and the approaches and the product approaches to the dashboard are very important, because these are, this dashboard is mostly done for the managers, for the corporate managers. So this kind of people are not really aware of the nuances of a decentralized technologies, of a blockchain. They should be able to easily manage, set of functions, on a everyday basis. So, with that kind of vision, we oversaw the flows, and I think we tried to do our best to minimize the interaction and to make sure the information is very digestible on every part of the management. So I think that's it for from the product standpoint. There's a lot of things which are going on under the hood. Again, so this is just the first kind of something that you can touch and visualize, but the smart contract standpoint, because limits, whitelisting, AMLs, and all these regulatory and financial parts and legal aspects are in the process of digestion and in the process of transformation to the code. And that's something that we, we're very interested in, and it's something that we build. I think that's definitely a future of the securities market. I believe that this decentralized securities exchanges with automated compliance and regulations is something that would absolutely boost.
Thank you for the workshop. It was amazing. And
tokenized securities, because nobody actually likes that boring things of checking.
And before we proceed to the last part of the workshop, I actually have a pleasure to announce to hear the words of the winner of the Best Media Award. The Christian join us luckily to say a few words. So Christian, congrats on winning the award, and thank you a lot again for your support at the conference and for moderating the panel. You was amazing as a moderator.
Thank you very much, Boris, and thank you so much for the great honor of winning this award. We are truly happy that those of you that decided to vote for us has done so, and when we started the tokenizer as an idea and a project 2 years ago, nobody really knew much about security tokens. That has changed a lot, and we like to think that we have played our part, and we hope to continue doing so. Our clear ambition here is to continue to catalyze this wonderful industry and play our role in building the bridge between all the players in the industry, and also building the bridge towards the established financial services world, so we can see this new industry thrive and grow prosperous for all of us.
Christian, your sound is not very good. Can you please repeat, fix it and repeat again?
Okay, sure. Let me just check the settings. Let me just see. It's there.
Perhaps hold your microphone closer to your mouth. This may help.
There we go. So is it better now? Now I'm on the
much better.
Yes, it was. My headset ran out of battery, so I plugged in this one, and that overruled the other microphone. Okay, I hope you can hear me now. I will do the short version then, and thank you all for voting for us and for your support here. We truly believe in the security token industry and want to play our role in catalyzing this wonderful industry. We started the project 2 years ago, and it almost feels like a lifetime ago already, because so much have happened in the past 2 years, and we can only see that things are accelerating. When we started the tokenizer, we could find and cover maybe one piece of security token news per week if we were lucky, if it was a good week. And now hardly a day goes by without any news, and typically we get 2 to 3 press releases every day with news from this wonderful industry. We have lots of plans for the tokenizer in the future, and I look forward to sharing them with you when we kick them off next year. I hope that you will all continue to go to the tokenizer for the latest news on this wonderful industry. Thank you so much for this award, and thank you, Boris, for inviting us to the conference.
Thank you, Christian, for participation and for your role in the development of the industry. And I am looking forward to seeing to bring next to the table.
It will be fun, I promise you.
Okay, and now it's time to say the few words about the conference. I thank you everybody for participating. I thank all the viewers who dedicated their time to learning, to building bridges, and to expanding the new technology. I am extremely grateful to our speakers. Everybody of you were amazing and fantastic, and brought lots of insights and knowledge to not only to our viewers, but also to me personally. So I am very satisfied. And I thank you for, especially to those for you who had to wake up at night, like at 5 a.m. or 3 a.m. at night, just to attend the conference and give the speeches. This is some real dedication, and I really like that we do have something like this. And also, I am very grateful to the entire Stobox team. I know that organizing this conference was very hard. I know all the effort that have been put into this, and I am thankful to every single one of you for the great work you put into making this conference come live. And we did a great job we almost didn't fail in any nuances and helped to spread the knowledge. And I hope the next time, if you do anything like this, it will be even bigger and better. So I thank everybody and wish you all the best sincerely from my heart. Thank you a lot.